That's as the US press to help you.
Though, just indicating that we're a little uncertain of the future into the US session, and we're not getting the same signal from all assets. So even though, well, we're actually quite mixed on equities, aren't we? And the dollar is actually gaining, so perhaps a little risk aversion in FX markets. We're certainly seeing weakness after the UK data in the pound, also in the euro. The yield certainly has been in focus because that's been the area where we've seen a lot of movement in the curve. We had seen those 30-year yields spiking upwards and continue to see, or we're back to seeing, moves higher in those yields, selling off some of those bond markets today then, Tom. What do you see in equity market futures?
DAX futures over in Germany flat as things stand. FTSE 100 futures pointing lower by about 0.2. Similar pitch for the CAC Hunt. Of course, here in the UK, focus on that slightly softer wage inflation. The pound lower as well, down 0.2 on the FTSE 100 futures. Anna.
Yes, and that stands out on the GMM screen as we wait for European equity markets to kick off their trading day. I can certainly see the effects that we're seeing of that UK data. So the pound is weaker, down by 0.4%. The euro also down a little bit, and the dollar broadly a little firmer. We did have that weaker data out of the UK in terms of the wages story. Still elevated wage levels, but if you looked at some of the detail, it was possible to find a story that led to a hold for the Bank of England, and so we see the pound going a little bit weaker as a result, perhaps. This is interesting on the sovereign bond side of things. We've seen yields going higher in the US, and we see that across various European geographies as well. Interesting, it's at different tenors though. Italian 2-year, US 30-year, French 30-year. So we seem to be all over the place in terms of the curve story this morning. This is the picture for equities then. We are seeing a little bit of weakness coming in, but it's not substantial, just a bit of a holding pattern perhaps for European stocks then, Tom. All of these grey boxes signal that we're not seeing much in terms of standard deviations of the move this morning. So not too extreme, but we are seeing a little bit of a move lower on European stocks. What do you see on futures?
Yeah,
on the sectors.
Lift the hood and look at the sectors then. Just two sectors in the green and not by a significant margin. Food is flat. Utilities just gaining 0.1%. A little downward pressure coming through in terms of basic resources. That was one of the leading sectors yesterday. So pairing those gains of yesterday across the basic resources sector, down 0.9% as we continue, of course, to look at the pressure coming through for the real estate sector. Country Garden, a company we've talked about so far, failing to make that payment on that dollar bond payment. Technology is also down 0.4%. You're seeing losses in financial services, a hit there of 0.7%. Banks also down by 0.3. Travel and leisure also off by around 0.4%. And autos off by close to 0.7%. Again, just two sectors very marginally in the green, but across your sectors, largely there is a bit of selling pressure. Again, basic resources in focus for us in terms of the downside, along with financial services, banks and autos. Anna.
Okay, that's the picture across sectors. Let's get an early take on some of the moving parts in these markets. Sam Onstead joins us from the Markets Today blog to take us through some of the things that are driving change this morning. And one of the things that's on the move is the pound then, Sam. We see it quite a bit weaker this morning, down 0.4% or so. And it's interesting to see if you include the bonus story, which for many businesses, perhaps more businesses than usual, has been part of the way they've remunerated in days past the pandemic. It's interesting that that number did come in a little lighter than expected.
Yeah, I think overall, the data looks sort of broadly in line at the absolute core of it, but on all the edges, everything's a little bit softer. And we had kind of expected this, and the Bank of England itself kind of hinted at this. We had the REC KPMG report last week. We had a trio of quite weak reports out from recruitment companies last week, all of which pointed to wage growth slowing down a little bit and the jobs market softening. And this does appear to do that. And all the comments that have come across my email this morning from economists are suggesting that this will keep the Bank of England on hold. But one caveat to that is we, of course, have inflation still to come. And because this data was split and the unemployment data will be very significant, we can't quite make that call just yet.
Yeah, the reaction, as we discussed, coming through for the pound, down 0.4%. Gilts are trading now, but not a huge amount amount of movement there. 4.48 on the 10-year, currently flat on the UK benchmark. We also focus on the UK property sector and the tippy-toppy end of luxury. Sam, you're buying of that massive pad in Chelsea, not doing much to support the luxury sector here.
Well, I mean, I'm not buying it, you know, and that's the problem, of course. So there's data out from Lonres this morning showing that there's a weakness and quite a significant decline, actually, in property transactions between £2 and £5 million. Obviously, that is way above the average price for the country, but very key sentiment indicator. You know, that often those purchases, because they are at that much higher price, sentiment is very important. Actually, I would note as well, we had Bellway out this morning, a UK house builder, cutting their guidance for next year, or over the course of next year. Their year runs to July, and all of that seems to be cohering now. We had we had Travis Perkins last week. We had a brickmaker called Forterra last week, all showing that there's some weakness coming through the housing market.
Yeah, you wonder if those Table Mountain analogies, the higher for longer expectations, if that's influencing some of that thinking there. Let me ask you about the UK commercial property market with exactly that in mind. We're starting to see defaults there. What's the scale and scope of that?
Yeah, a very similar story, really. You know, we've been waiting for this kind of weakness to kind of come through. Overall, things have been relatively resilient, but there's consistently areas of weakness within the property market. We're seeing higher defaults now. That's not a great indicator of what may be coming next year. And again, as you just mentioned, that higher for longer narrative does appear to also be sneaking into that market too.
Okay, Sam Munstead, thank you very much indeed, walking through some of the key market themes with a focus on UK property and some of the UK data coming through on wage prices or wage pressures easing somewhat, of course, in terms of the data that came through at 7. You can get more, of course, from Sam, the rest of the team on the Bloomberg UK website or by typing TLIV Go on the terminal.
Let us tell you what's coming up today on our radar. We have, in terms of the data, 10 a.m. UK time, the German ZEW survey will hit the Bloomberg terminal. At 1:30 p.m, we'll be watching out for US retail sales for September. Economists will be watching for signs that consumption is decelerating. At the same time, Canadian CPI comes out for September. Central Bank Governor Tiff Macklem over in Canada said just last week that the country's inflation remains too high. Then at 2:15 p.m, we'll be back in the US and looking for industrial production data. Bloomberg Economics sees that reading holding steady following the surge in August. And finally, later in the day, Goldman Sachs and Bank of America report third quarter earnings. Interesting on the US retail sales side of things then, Tom. I mean, Mark's been looking for some weakness to start showing for the US consumer, so I'm sure that's going to be his focus. Our guest in the last hour, though, was still talking about a resilient US economy, or sorry, US consumer, as if that was one of their structural themes to invest around.
And we keep rewriting the picture around the household balance sheet. I think it was Citi who came up a couple of weeks ago and said, actually, there's still about $1 trillion sitting in household balance sheets in the US that will continue to support that consumption. So retail sales, as you say, really important in that context. I thought we might jump off as well on Goldman Sachs and the big news story coming through from there, that David Solomon, DJ Sol, I know this is one that our producer Abby Morris loves, is no longer going to be DJing. A bit of a distraction, apparently, for David Solomon as he faces up to the challenges. We get the earnings, of course, out of Goldman Sachs later today, but maybe there's going to be more interest in the fact that he's, at least for now, stopping spinning the discs.
Right, the press team pushing the line that, well, he hasn't DJ'd for a year, so so calm your excitement, Tom.
Okay.
Coming up then.
Plenty more in terms of the focus on China's real estate. Country Garden entering the final hours. The clock is ticking to avoid its first ever public dollar bond default. We get the details next, and the implications more broadly for that economy. Stay with us. This is Bloomberg.
Kept on blowing up on social media, then having a fight. It just kept on repeating itself. And at the same time, I got an opportunity to fight on ESPN, primetime TV. I said to myself, now imagine if I could do something amazing here. And then I end up knocking the guy out in 30 seconds.
How quick was that?
Which then gets on SportsCenter top 10. So everything kind of went doom, 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 doom. I would look at these things and hear the stories of other boxers and say how they were taken advantage of.
Right.
I said, well, this is an opportunity where I could become bigger and have my own power, my own voice. So they can't just, take all my money and say that, oh, I did all this for you, I got you here. This kind of gave me, into the driver's seat. I didn't want to be another story where, these promoters, these managers, they, pretty much screw you. So I was like, I need to do something that could give me some power.
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority. Thursday, the Economic Club of New York hosts a conversation between Fed Chair Jay Powell and Bloomberg Wall Street Week's David Weston. Recession risk, inflation outlook, real estate amid high rates, and more. The live interview happens October 19th at 12 p.m. Eastern on Bloomberg. Context changes everything.
This is Markets Today, 10 minutes into your European trading session, and European equity markets making very fragile gains this morning. Let's check in on some of the individual stocks that are on the move. Joe Easton from our equities team has a rundown for us. Joe.
So one area we're seeing significant losses today, and there is in the tech space, as expected, some deep red on the screen here. Ericsson down as much as 8% now as they report yet more softness in their telecoms infrastructure business. That stock was already near a 5-year low, so some might have thought that was priced in, but apparently not, with some sharp declines in that. And we're seeing that feeding through into their big rival Nokia as well. Now, Nokia will report a sales update on Thursday, so investors potentially bracing for some weakness there. And we see Nordic Semi dropping almost 10% at the moment. The Oslo-based semiconductor firm once again downgrading its profit estimates for the year. And we're seeing some small moves lower in some of the rivals like ST Micro over in Paris as well, ticking down by 0.7% at the moment. There's some other big moves to flag up as well across the space today as we start getting deeper into earnings. First of all, we've got those Rolls-Royce job cuts, up to 2,500 job cuts. That's potentially positive for the margins, although disappointing for those involved. That stock gaining 2%. Then Umicore, now this is a battery technology company, supplies into electric vehicles. Really strong numbers out of them at the moment, jumping 12%. But going the other way is Lonza. Now this is a pharmaceutical and lab tech firm. They supplied to Moderna, the vaccine maker. Moderna recently downgraded its forecast because of the COVID business fading, and Lonza today cutting their guidance as well, slumping 10% at the moment. In terms of some breaking news out of France, there is an update on the French food voucher issue. So the French government was looking to tax food vouchers supplied by companies like Eden Red that go to staffs in terms of food voucher programs, but the CMA, the French CMA, the Competition Markets Authority, saying that that might not be the best option. That's boosting that stock up 3.5%. Then there's a couple of interesting broker moves out today. Morgan Stanley on chocolate makers. The valuation's a little bit too rich for them. They downgrade Lindt. They say that Lindt is potentially going to see a bit of an earnings decline, also partly due to the weight loss drugs, an interesting element on that. And they also cut Barry Callebaut, the big rival. Airbus gets an upgrade over at Jefferies. They say the narrow-body, short-haul aircraft is boosting Airbus at the moment, and they say you should be buying that one. And finally, EQT. Now, this is actually an earnings one we chucked in last minute. The Swedish private equity firm owns shares in websites like Zooplus, reporting some really weak assets under management this morning, and that one down almost 5% in Stockholm.
Okay, Joe Easton, a lot on the docket then in terms of some of the big movers in the session so far today and some individual corporate stories to bring to your attention. Joe, thank you very much indeed, of course, from our equities team. Let's get to the story around credit now. Of course, we continue to focus on what's happening with Country Garden over in China, which is the clock, we know, is ticking down to a potential default there. But more broadly, the story, of course, is about the outflows from some of that dollar bond issuance from those real estate businesses. Let's bring in then Trang Nguyen, currently at BNP Paribas Global Head of EM Credit Strategy. Trang, thanks for joining us in the studio. I don't want to get into the weeds on the individual idiosyncratic story around Country Garden, but I am interested because it used to be such a big play for investors. You get exposure to the dollar bonds of Chinese real estate and you're kind of guaranteed an income of, what, 6-7%. That narrative has obviously changed. Where has those fund flows recycled to? Out of the dollar bonds of Chinese real estate and into where?
Well, thanks for having me. Look, the reality is it's a very, very challenging backdrop for EM credit funds. When you get 5% in cash, if EM funds if EM debt is only yielding 8 or 9%, that incremental spread you get is just not attractive enough. And so that's exactly what we're seeing. There's been 20 billion of outflows from EM credit funds this year, and they're going into money market funds. That's just the reality of it.
So going into that 5%. So
Exactly.
where's most mispriced then, Trang? Where are you? Because I suppose there's some sort of opportunity there.
Yeah, so we've been reminded that typically markets will underprice geopolitical risk, right? We saw with the tragic events unfolding in Israel that the entire Middle East region is now repricing from a starting point of spreads that were hovering around multi-year tights. So that's what we're seeing right now. So spreads in the Middle East have been underperforming their peers in the past, call it 10 days. And I think that's where some of the mispricing can still have scope for normalization.
So that adjustment is still has further to run in terms of EM within the Middle East space. Where are you finding relative value? Is there relative value now within EM credit? And if so, where are you finding it?
So I think last time we talked a bit about the distress space, right? Yeah. And so I think there's still some green shoots there. I just came back from Marrakesh. The expectations were very high around discussions and potentially announcements on policy initiatives to tackle debt issues as well as the climate agenda. Now, it would be premature to say that we've had anything in the way of catalytic impact, but to be sure, progress has been made. Now, this progress has been incremental and not transformational. So during the meetings, we had announcements from Zambia, who has finally signed a memorandum of understanding with the official sector. We also saw that Sri Lanka had come to an agreement with China Exim Bank as well. So these stories, these more idiosyncratic stories, are making some progress. But like I said, they're incremental. And that's where the green shoots are, but they're not broad-based just yet.
Okay, so we see those specific examples of where debt loads are being addressed. Where are you concerned about still then, Trang, in terms of debt loads that just don't look sustainable at this point for EM credit?
So the cuspy countries, right? The single B cohort in particular. And so they play a pivotal role. And I know there are some contentious issues around Chinese funding and the role that China plays in these debt restructurings. But I think it's important to give credit where credit is due, because China is now leading the restructuring in Sri Lanka, right? The Exim Bank has already reached an agreement with Sri Lanka, and this is taking place outside of the common framework.
So there used to be a lot of calls from the World Bank, for example, that China should do more about the debt that it's allowed emerging markets to accumulate. Is China dealing with that differently then now, you say, Trang? Is it a different China on that front?
I think it's still case by case. It's difficult to make a more generic, a more broad-based assertion about China's role. But at the very least, after 3 years of debt impasse, we can say more decisively that China has a better understanding of how the architecture works.
Okay, and what about back in Europe? Because I know this is also a focus for you, the sort of emerging side of Europe. Poland really in focus for us this week. We saw big movements in the Polish zloty yesterday as a result of the election results. They were early, and we'll see how this process develops. There's various parties now going to try to form governments. But where does that leave Poland for you?
So we finally have an election outcome that is market-friendly, right? So EU supporting opposition win. So that's positive for Poland. And I think I'm going to bring it back to the financing standpoint, right? In a world where rates are higher, where funding costs are higher, it's really, it makes a very big difference for countries that have other sources of financing. So the fact that they have the potential to unlock EU funding again, it's very positive for the country.
Yeah, potentially 34 billion euros or thereabouts, and the time frame will be adjusted, no doubt, as they try and get that funding through to Poland once and if they do form that coalition. Talk to us about the carry trade opportunities. There was a big focus on, for example, the peso earlier this year. Some have said that maybe that carry trade has started to wane. The Japanese yen, of course, in focus for us as well when it comes to the carry trade opportunities. Are there any that stand out to you?
So certainly carry is higher. Higher core rates means higher carry. But I'm going to caveat with the fact that we have higher volatility as well. So while carry is higher, volatility-adjusted carry is not that attractive. And so it remains to be seen when we're going to have a reprieve in core rates. So carry is attractive, but you have to be very selective here.
Okay, Trang, thanks very much. Thanks for joining us. Trang Nguyen joining us there, EM credit strategist at BNP Paribas, with her views on credit markets. Coming up, we'll get back to a European corporate in focus. Rolls-Royce, this is the engine maker, of course, shares gaining as the plane engine maker confirms it will cut about 6% of its global workforce. More on that next. This is Bloomberg.
I've always been a person who's just been attracted to hair. I like to sit and think and theorize how I can manifest these visions that I have for braiding and how I can take something that may seem like it's a line drawing in my mind and apply that to someone's scalp.
We are the only culture that has hair that grows out of our head the way that it does. Anyone from the African diaspora is born with this amazingly curly hair that can be shaped into a variety of different ways of expression.
I want Black people to love themselves for how they naturally appear, and also to appreciate the cultural practices such as braiding that our ancestors have practiced for centuries.
Wall Street is waking up. Europe is already trading. And Manus Cranny and Danny Berger are making sure you have the news, data, and analysis you need to set your agenda. Micro, macro, and everything in between. Manus in New York and Danny in London follow the money around the globe. Take a daily deep dive into risk and help you make informed decisions for your trading day. Watch Bloomberg Brief, weekdays at 5 a.m. Eastern, only on Bloomberg. Context changes everything.
Welcome back. This is Markets. Today, 23 minutes into your European trading day, you're seeing very modest gains across European stocks. The Stoxx 600 currently up just under 1/10 of a percent. Futures in the US, though, remain lower. Across your sectors, the upside coming through from healthcare, that sector gaining 0.4%, with the context that it was the biggest loser across your sectors yesterday. In terms of the downside today, basic resources down 0.9%, telecoms off by 0.6, weighed by some disappointment around Ericsson. And in your FX markets, big focus on the pound, currently 121, down 0.3%. Wage data coming in slightly softer and fueling expectations that possibly the BOE now has a little bit more space to pause. They will wait, though, most investors, for that CPI print out of the UK tomorrow. As I said, US futures, S&P E-mini is currently down 0.1%. Let's get to one of the big corporate stories of the day, though, at least of the last 24 hours or so. Rolls-Royce trading higher this morning after the plane engine maker announced the deepest job cuts yet under its new CEO, as he looks to streamline the UK manufacturer. Joining us now is our aviation reporter, Charlotte Ryan. Charlotte, what roles then will be impacted? What is the rationale for this?
Good morning. So as you've said, these are the biggest job cuts we've seen since the new CEO took over earlier this year. And what we're hearing is that these will be white-collar job cuts, so not affecting engineers in the company, but rather people in the support functions. And the idea is basically to streamline and further cut costs. And Rolls is obviously a company that's been struggling for a long time. We have seen some evidence of turnaround under this new CEO. The shares have been performing quite well. And this latest round of job cuts is basically aimed at getting rid of duplication across the different parts of the business.
Yeah, I wanted to ask you about the rationale, why they've decided to cut these jobs. You say it's about getting rid of duplication. Is it something to do with the types of labour you need for larger aircraft versus smaller one? I know that wide bodies, there's an anticipation we see a pickup in demand for wide bodies, given the continuation of that part of the post-pandemic business.
Yes, what we're hearing is actually this set of job cuts is not so much about the demand side of things. You know, Rolls enacted pretty significant job cuts during the pandemic when demand had fallen. This is more about, this is a massive company that has often been called overly bureaucratic. And what we've had is we've effectively had three separate businesses, so the civil aerospace business, defence, and the power systems business, all with their own management structures, their own legal teams. And there is, as a result, quite a lot of duplication across those three businesses that these cuts are aimed at removing. The market's obviously reacting fairly positively to this, because if it works, you should be able to remove costs even as the demand for wide bodies picks back up.
Thanks so much. Thanks for joining us. Good to get the update on what's going on. Charlotte Ryan, aviation reporter here at Bloomberg. Just a quick check on what we're seeing on markets this hour then. European equity markets pretty flat outside of the London market, where we see a gain of 0.25%. FX markets showing some activity, a bit of money going into the dollar. Elsewhere, we see the euro is a touch weaker. The pound down by 0.4%. We're seeing yields go higher. That's a trend from treasuries into the European session as well. More on the markets and some geopolitics coming up shortly. This is Bloomberg.
MasterCard introduced PayPass, its first contactless payment system, in 2002, but the technology took some time to gain traction.
I would say we first invested in this many years ago. The adoption rate on this in the early part, even in markets like the UK, Canada, Australia, was fairly slow in the early part. The inflection point of when it really started to hit its stride was when it was used in the transit vertical. So what we figured is, let's get all the transit systems around the globe enabled for contactless technology. That will create muscle memory for the consumer who will like the experience in transit and will use it elsewhere.
How do you judge the revenue proposition for MasterCard with an innovation like that and the adoption and the pace of it?
Look, I mean, for us, we're agnostic as to whether somebody's using the chip technology or the contactless technology or, using the mag stripe, which was the old way of doing business. We earn revenues which are quite similar across both of those. The revenue potential and upside for us comes from the fact that now more spend is being done on card-based forms of payment than was being done in the past. So we're converting that cash over to electronic forms of payment, which is where the incremental revenue comes from.
If contactless payments is the current revolution sweeping the payments industry, what's the next one?
I think pay with your smile. So, biometrics.
On the David Rubenstein Show, Peer-to-Peer Conversations, I uncover the untold stories of the world's most successful leaders. Watch Wednesdays on Bloomberg Television.
This is Markets Today, 30 minutes into your European trading day. Here are your top stories. President Joe Biden is set to visit Israel tomorrow in what's been called a, quote, critical moment for the region. European stocks struggle for direction and treasuries fall as investors await the results of diplomatic efforts that may help contain the Israel-Hamas war. Plus, Russia's Vladimir Putin arrives in China on a rare international trip for talks with Xi Jinping as the US presses Beijing to help reduce tensions in the Middle East. And Tom, we'll get an update on the Middle East situation in just a moment. Interesting to get also an update on that Belt and Road Initiative in China and Putin's presence there. So a lot to talk about still on the programme. In terms of the market story, fairly muted moves this morning here in Europe.
And it does seem that diplomatic uncertainty seems to be constraining equity markets at this point. You've seen slightly more pronounced moves in terms of FX, in terms of sovereign debt, and we're seeing that again in terms of the sell-off across the Treasury curve with the 10-year at around 4.75 the last time I checked. But across your equity markets, it does seem there is that constraint until investors get more clarity on the diplomatic situation on the ground. Currently, across the benchmark, you are flat. The DAX posting gains of just 10 points, adding about 0.1%. The FTSE 100 nearing that 7,700 level, adding 18 points, 0.2% is the upside so far for the UK's main index. Of course, the inflation data slightly cooling in terms of wages in the UK, may be clearing the path more convincingly for the BOE to hold in terms of where rates are. 5.25 is the benchmark in terms of the rates that come through from the Bank of England. Let's flip the board and see how the breakout across sectors is illuminating the picture for us. You're seeing red on the screen across, seven main sectors. Travel and leisure down 0.2. Financial services off by 0.5%. Retail, you saw some gains there yesterday. Currently, you're seeing downside of 0.2%. Basic resources off by 0.8%. Energy up, you're seeing Brent now above that $90 a barrel level, gaining 0.5%. And again, the geopolitics, of course, firmly part of the mix there in terms of the moves and the volatility around energy prices. Utilities also gaining 0.4%. Again, across your benchmark, you're flat here in Europe so far this Tuesday morning across the benchmark in Europe. Anna.
OK, let's return to the geopolitics then, Tom. President Biden will travel to Israel tomorrow in a visit designed to signal US solidarity and help prevent the war with Hamas from engulfing the Middle East. Confirmation of the visit follows Anthony Blinken's shuttle diplomacy across the region ahead of an expected Israeli ground invasion of Gaza.
He's coming here at a critical moment for Israel, for the region, and for the world. And he's coming here to do the following. First, the president will reaffirm the United States' solidarity with Israel and our ironclad commitment to its security. Second, President Biden will underscore our crystal clear message to any actor, state or non-state, trying to take advantage of this crisis to attack Israel. Don't.
Let's get more then from Bloomberg's Oliver Crook, who joins us from Tel Aviv. Oliver, good morning again. What more do we know then about Biden's trip to the region? He's going to be in Israel, but also elsewhere. And this follows a diplomatic push from Anthony Blinken.
That's right. That's really the groundwork that was laid by Blinken, with a lot of the same messaging coming through as we just heard from Anthony Blinken. So he will come to Tel Aviv first tomorrow. Afterwards, he will then go to Jordan. And again, the focus is going to be on support, deterrence, and also diplomacy. Support, financial support, military support, political support, certainly deterrence. As we know, there's a second aircraft carrier fleet on its way to the Eastern Mediterranean, but then also the diplomatic side of it. When he goes to Jordan, he will meet with the Egyptian President El-Sisi. He will meet with the President of the Palestinian Authority, Mahmoud Abbas. And there, really, the focus is going to be about getting aid into Gaza, where the situation has just deteriorated vastly. This is going to be number one for many of these Arab leaders. And in order to make any kind of political progress in this region, we are actually just getting some lines crossing now that there may have been some progress made on the Rafah border crossing from some senior advisors to Netanyahu, saying that it's a matter of time. They need to cross the T's and dot the I's to get this aid in, but that they're looking to do that, and that they're not also ignoring the sort of longer-term consequences of what this is going to have in Gaza. But again, a very challenging situation. As we know, almost 3,000 dead so far in Gaza, according to the authorities there.
Yeah, the United Nations, the EU would tell you, of course, that there is that desperate need for aid. Hence, as you say, the focus on that Rafah border crossing. What is the latest, Ollie, though, when it comes to the fighting between Israel and Hamas?
So what we have is, again, the aerial campaign has been underway for a week now and continued last night. We also have bombardments, we understand, coming from the sea into Gaza. And really, we're just trying to find all of the indications that we can on what form this land invasion will take, how long it will take. We do not have a very clear idea of that. We know that there's going to be a ground component at some point. The Israel Defense Forces verified that yesterday. And we also heard from the defense minister yesterday saying Israel is prepared for a long and very costly war. The question is then, what happens if they do even succeed in dismantling Hamas, which is not a given? This is a very challenging operation. What happens next? And in the same senior advisor to Netanyahu was asked about an Israeli occupation of Gaza in the wake of this attack, and he said that that is not the preferred option for Israel, and it is something that Biden has warned against. And again, there is now this other question of a second front on this war, on the Lebanese front with Hezbollah. We've had more fire exchanged up in the north, and again, it comes as Iran has been sharpening its rhetoric, and this is the very complex, very dangerous situation that Biden himself is flying into tomorrow. And again, this is as you have sirens going off at least twice a day here in Tel Aviv.
Oliver, thanks very much. Bloomberg's Oliver Crook in Tel Aviv for us. Let's get to some of the other top red stories on the Bloomberg terminal this morning. India's Supreme Court has refused to rule on legalizing same-sex marriage. Instead, it says it is an issue for Parliament. The Chief Justice said the court doesn't have the jurisdiction to recognize same-sex marriage, and that any potential change in the law is in the hands of lawmakers. India decriminalized same-sex marriage in 2018, but has yet to extend marriage rights to the LGBTQ community. Representative Jim Jordan is closing in on the votes he needs to be the next U.S. House Speaker, but a band of Republican holdouts continues to threaten his bid. Jordan, a hardline conservative from Ohio, is planning a vote on the House chamber floor today. A Bloomberg source says he's prepared to press his case with multiple ballots if necessary. Police in Belgium have shot and arrested a man suspected of killing 2 Swedish football fans in Brussels in what authorities are investigating as possibly a terrorist-related incident. Officials say the weapon used in Monday's attack was found on the suspect. Prosecutors say there is no indication that the shooting is linked to the Hamas-Israel conflict. The clock is ticking for Country Garden to avert its first ever public dollar bond default as the distressed Chinese developer faces an interest payment deadline this week. The developer has to pay $15.4 million coupon by October 17th, 18th. The builder has become a symbol of China's broader property debt crisis. Tom, a morning must-read this morning.
Yeah, Anna, as we focus on the geopolitical tensions, and Oliver Crook, of course, giving us the latest on the ground there, I thought it's worth focusing on the must-read that comes through from Javier Blas, who is always really acute and focused, of course, on the oil markets. And he's pointing out and highlighting what's been happening with the Strategic Petroleum Reserve in the US. And he reflects on the fact that today actually marks the 50th anniversary from when that SPR was set up by Henry Kissinger, the Secretary of State at the time, of course. And that was at another time of great geopolitical angst. And Arab nations at the time, 50 years ago, essentially putting an embargo and a blockade around oil exports to the rest of the world. Javier Blas reflecting on that, saying, look, the dynamics are very different now. We're not expecting that kind of situation to unfold. But he does say it does remind us of the need, of the importance of the SPR in the US, which has seen about 270 million barrels sold off in the last couple of years by the Biden administration to try and soften the prices, of course, around energy. At currently 350 million barrels, it is at its lowest level, the SPR, since about 1983. And again, Javier Blas just saying it is this important shield for the world's largest economy. And he says and outlines some steps around what they need to do to refill it, and says there is an urgency there now, given the political risk around oil and energy.
Let's get an update then, Tom, on another important geopolitical story. Russian President Vladimir Putin has arrived in Beijing for the third Belt and Road Forum. For more, let's bring in Bloomberg's Asia government reporter Rebecca Chung-Wilkins. So we have Putin on the ground there with Xi making a rare trip outside Russia then, Rebecca. How has the relationship between Putin and Xi, Russia and China, how has it changed since Putin's last visit to Beijing, weeks before, of course, the invasion of Ukraine?
Absolutely. Well, we've seen quite a dramatic shift in the power dynamics. I mean, Russia is reliant on China in nearly every part of its economy, uses the yuan in nearly half of all of FX trading value. For example, exports from China to Russia jumped 52%, even as exports from China fell overall. So the dynamic is very different. And, you know, it's never really been clearer that it's Russia now that is the junior partner in the relationship. And this dynamic is really prominent as we go into the Belt and Road Forum, partly too when we think about the costs for Xi Jinping, the long-term costs for Xi Jinping for maintaining what the West sees as really overly cozy ties with Putin. You know, and really sort of to simply put it, there are many Western leaders who won't want to be standing up there at a forum today because Putin is on that stage.
Yeah, and how the dynamic has changed. I remember being on the ground when Italy signed up to the Belt and Road Initiative. They, of course, are walking that back. They've made that decision to exit the Belt and Road Initiative. We have this litany of cases of debt overload and unsustainable debt payments to China from a number of countries. What then is the future, Rebecca, of the Belt and Road Initiative?
I think that's precisely the topic of conversation at the Belt and Road. Beijing will be hoping that this forum revives it and puts some sort of bit more oomph and momentum going. But when we look, for example, at the value of the deals compared to 2018, they've fallen by some 48%. So we have had already a really significant recalibration in the types of investment that we've seen at BRI. This mantra that Xi Jinping has put out, small is beautiful, a real shift. And the other underlying element is, of course, you know, China has had success in building those relationships with the global south and developing nations, but whether or not Beijing can continue to pursue those closer ties as it feels some amount of isolation off the back of those ties with Russia, and also, of course, some isolation and being squeezed a little bit by the US and Europe as they increasingly view Beijing as a strategic competitor. So we're seeing that sort of broader recalibration, and for Xi Jinping, this is really about trying to get what is his landmark $1 trillion foreign policy agenda sort of back on the road.
Rebecca, thanks very much. Bloomberg's Asia government reporter Rebecca Chung-Wilkins with the latest on Chinese foreign policy, essentially, and the relationship with Russia there as well. Coming up on this programme, we'll get back to the UK data we've had out this morning. UK wage growth slipping in the 3 months to August. We break down the data and what it means for the Bank of England next. This is Bloomberg.
That's me, Max. What's up? How are you? I have been writing about Wall Street for almost 15 years. And what that means is I write about feuds and rage and rises and falls and comebacks. And every now and then, I also write about a couple of villains. Thank you so much. And now, I am about to do something new and very, very scary. We are making a show, and it's based on Bloomberg Businessweek magazine. So what is this show about? It's a show about money, power, culture, pop business. We're gonna ask complicated and profound people about their ideas, their careers, their lives, their risks, their failures, their imagination.
It's so incredibly liberating not to care what other people think.
I was giving my tools to other communities. I wanted to bring those tools home.
Tune in. Please, really actually tune in. I desperately need an audience.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. How has that shaped your strategy for the bank? Is this a new normal? Is this like a catalyst? Do you think we're in a new phase for dividend policy overall? That's a great question. I'm Francine Lacqua, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Connection lost.
Welcome back. This is Markets Day, 45 minutes into the European trading day. You've actually seen a bit of a turnaround in terms of sentiment around European equities. You're seeing gains now of a little over 0.2%, and US futures just edging into positive territory as well, Anna.
I just want to clarify the news you've had out of India this morning. India's Supreme Court has refused to rule on legalising same-sex marriage. Instead, it says it is an issue for Parliament. The Chief Justice said the court doesn't have the jurisdiction to recognise same-sex marriage and that any potential change in law is in the hands of lawmakers. And to clarify, India decriminalised homosexuality in 2018, not same-sex marriage, as I previously stated. It has yet to extend marriage rights to the LGBTQ community. So just wanted to correct what I previously read there.
OK, switching focus now. UK wage growth slipped in the 3 months to August, indicating a cooling of labour market pressures. You're seeing the pound reacting and gilts as well. Money moving in to UK debt. Let's get more then from Anna Andrade from Bloomberg Economics. Anna, where does this leave the Bank of England? What is your take on this data?
Hi, good morning. So I think today's data actually was very good news for the Bank of England. And there was essentially three bits to it. The first one was that private sector regular wage growth dropped to 8% from 8.1%, as you said. And the good news within this data detail is that was driven by a softer pace of underlying growth. We know that recently the Bank of England has kind of tended to dismiss the headline pay growth measured by the average weekly earnings. So it was also really important, we think, to see in today's data that wage growth in other measures, such as tax-based data measured by the payee, also softened and also posted a drop in September. And then I think the final bit to it was really vacancy. So as you know, the labor force survey part of the publication was delayed to next week, but today we had vacancies and there wasn't a big drop in September. So overall, in this data, I think there will be, enough news for the BOE to be happy or at least comfortable in its decision to pause in September.
OK, so softer wage data then, Anna, across a range of wage indicators for the Bank of England to process, but not the full picture, as you point out, on labour markets, because we have to wait till next week to get the unemployment data. And of course, we get inflation tomorrow. How is thinking going to evolve, do you think, around all of these data points?
Yeah, so I mean, we think the labor market release next week, the unemployment data itself, we actually think it will remain unchanged at around 4.3%. But, you know, it will still paint a picture of a labor market that, you know, is cooling gradually. And then the CPI, which we'll have tomorrow, I think that will be another piece of good news for the BOE. We will have CPI dropping, or at least we expect, to 6.6% from 6.7%. And again, this will be driven by the right components. So there will be kind of disinflation in food, core goods and services. And all of these will be good news for the BOE, which then the next CPI release will have another big drop in October because of these base effects in energy we'll have. So overall, as you can see, the data is kind of playing in the BOE's favor, and the window for any possible rate hikes will kind of shut.
Okay, good news for the Bank of England. Again, as we watch two-year yields moving down by 4 basis points, 4.86. The pound is also softer. Anna Andrade from Bloomberg Economics with the analysis around that data print and the look ahead to the CPI inflation data out of the UK tomorrow. Thank you. Switching focus now back to the geopolitics, back to that conflict in the Middle East and a line crossing that Israel has struck areas in Lebanon. This is according to reports from NNA. Again, Israel strikes areas in Lebanon. That is all the detail we have at this point. Any more that comes through, of course, we will bring to you because we know there is deep concern about another front opening up in that conflict, of course, with Hezbollah based in Lebanon and with significant, of course, capabilities in terms of their missiles. So that is the line. Israel strikes areas in Lebanon, according to reports from NNA.
The official news agency of the government of Lebanon. Coming up on the programme, we'll talk about energy markets. Oil steadies and equity markets remain muted as investors monitor diplomatic efforts to limit the Israel-Hamas war. More on that next. This is Bloomberg.
There's much oil to be found in the lower 48 at this point, or even in, let's say, Alaska as well, where mostly we know where all the oil is, and there's no more big Permian Basin kind of deposits anywhere?
People have said that over time, and then we've always been surprised. And so the U.S. has been explored more than any other place in the world. I think the industry has a good idea, but technology allows you sometimes to recover things that you haven't been able to before. That's the story of shale. The other one that continues to be a positive story is deepwater Gulf of Mexico, where we'll go out and drill in a mile or more of water depth and then go down several more miles and find large fields. And the Gulf of Mexico is still relatively underexplored compared to the onshore. So I think there's still room for more discoveries.
Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
Do we think, as a result of this limited data we have on the labour market.
Yeah, I just heard that interview with Anna. Look, I think the Bank of England very dearly would like to keep on hold at the moment. The Bank of England would like to see, some good news on the inflation front, because for the Bank of England, for the UK, the situation is very tricky. The housing market's already feeling the squeaks, consumers are feeling the squeeze. At the same time, inflation is still extremely hot. So just some good readings here will be seen as good news by the Bank of England, who would like to step back and say, hang on a second, let's just see this transmission mechanism work through the economy. But there is still a very tricky balancing act, and we may well see inflation coming back at them. So, I think the UK in a very tough spot, but at least today we're seeing the pound ticking lower.
Yep, seeing the pound ticking lower and yields moving lower as well across the gilt curve. When it comes to the Treasury curve, Eddie, we're seeing moves most pronounced at the back end, actually, 3 basis points higher, so a bit of selling pressure again across US Treasuries. How much of this is tied to geopolitics? You can illuminate us on that. But in terms of what we're seeing across the curve, what is your take as groups like BlackRock, houses like BlackRock seem to think that maybe they're looking a little bit more attractive? Kalanovic saying you want to be adding bonds at this point.
Yeah, look, I think there will obviously be views out there that says, buy bonds and so on. There will be a wide spectrum of views here, but you've got to assume that for the time being, the movement in the yield curve is going to be towards steepening. You are going to see the long end of the curve making most of the gains in yield terms anyway, just because you're still at an inverted yield curve. And we're not seeing that inflationary impulse, so we're not seeing the front end of the curve moving very much. Now, retail sales data out of the US later on, that might give us more of a clue about whether there will be movement at the front end. But for the time being, I think in the absence of other news, you're likely to see that back end of the curve moving higher relative to the front.
Of course, Treasury markets will keep an eye on all of the commentary and expectation around the Fed, but also the geopolitics, Eddie, as we wait for all of this diplomatic action to see if it can deliver anything. There does seem, every time we see a rally in risk assets, it seems it is perhaps to do with an expectation that maybe diplomacy can deliver something. How are you assessing that geopolitical risk?
And I think over the next few days, that will be a key focus. Any sort of broadening of conflicts or, I think that would be the key focus for markets. Markets have been a little bit sanguine about all of this. We've seen moves in the oil price. We've seen moves in the gold price. But beyond that, geopolitics has been very much on the periphery of investor decision making, and I think that could potentially change significantly if there is a broadening of the conflict in Israel.
Eddie, very briefly, what are you looking for when it comes to earnings?
Look, earnings, we definitely need to see whether the consumer is still strong. The bank earnings are particularly interesting because we want to see, are there increased loan loss provisions? Do they expect, the consumer to be able to keep spending money? Because the US consumer has been what carries the world economy at the moment. So when we get those Goldman Sachs numbers and when we get those Bank of America numbers, I think those will be the key things that we're looking for.
Okay, resting on the shoulders of the US consumer. Eddie van der Walt with some of the key market themes for us and the analysis. Thank you, Eddie. Remember, of course, you can get up-to-date analysis and insight from Eddie and the rest of the team. Just go to MLIV Go on your terminal. European futures, or European stocks, I should say, up 0.3%. US futures, S&P E-minis are flat. That is it for the Markets Today show. You can get plenty more insights from the team on the website. Stay with us, though. More coverage next. This is Bloomberg.
think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some points that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in?
I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
This is Daybreak Europe. I'm Kriti Gupta. Let's get to the stories that set your agenda.
Taking you from the U.S. market's close.
A lot of this was priced into the U.S. session.
To the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
Slice through the noise.
Forget the noise, ignore the noise.
Is this just going to be noise?
Just noise.
It's noise versus signal.
Now, more to the point.
What is the lesson or the observation?
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London with the conversations that matter, and here's what's coming up on today's program. U.S. President Joe Biden is set to visit Israel tomorrow in what's been called a, quote, critical moment for the region. Russia's Vladimir Putin arrives in China on a rare international trip for talks with Xi Jinping as the U.S. presses Beijing to help reduce tensions in the Middle East. Plus, the pound lower after UK wage growth eases, indicating a cooling of the labor market and falling signs of persistent inflation. So we'll have a full roundup of all of our top stories. This is how they're playing out in the European markets. Now, we're seeing stocks pretty much fluctuate quite a lot. The focus firmly also on what's happening with treasuries. We heard from one of the Fed presidents on the impact that these rising rates have had, of course, on some of the smaller businesses. Now, stocks are rising pretty much. Bonds pretty much down amid diplomatic efforts, again, to prevent the Israel-Hamas war from expanding into regional conflict. So I'd always watch for treasury. You can see U.S. 10-year yield above 4.7%, and the yuan, of course, is oil declining a touch after last week's rally. Now, the U.S. President Joe Biden will travel to Israel tomorrow in a bid to prevent the conflict from engulfing the region. The visit comes as Gaza braces for an expected ground offensive.
He's coming here at a critical moment for Israel, for the region, and for the world. And he's coming here to do the following. First, the president will reaffirm the United States' solidarity with Israel and our ironclad commitment to its security. Second, President Biden will underscore our crystal clear message to any actor, state or non-state, trying to take advantage of this crisis to attack Israel. Don't.
Well, let's get more from Bloomberg's Oliver Crook in Tel Aviv. Ollie, so tell us more about Biden's trip and the latest diplomatic efforts.
Yeah, so he will arrive tomorrow. He will arrive in Tel Aviv, and this is part of a sort of three-pronged approach, one of support for Israel, one of deterrence of Iran and other actors, and a third of diplomacy. So let's start first with the question of support. So there's a question of financial support. We understand from the New York Times reporting that Israel asked for $10 billion in emergency aid. There's military support. That's part of the deterrence factor here, where we have the second aircraft carrier group that has entered the Eastern Mediterranean. But then there is the diplomatic side of this. So the first part of the trip is here in Tel Aviv, but the second part is into Jordan, where he will be meeting with the Egyptian president, El-Sisi. He'll be meeting with the King of Jordan, King Abdullah, but then he'll also be speaking to the Palestinian Authority president, Mahmoud Abbas, who presides over the West Bank. And you have to imagine that number one in those conversations is going to be, how do you get aid into Gaza, where the situation is swiftly deteriorating, as it has for a number of days. We've got news lines just crossing over the last few minutes from someone close to Netanyahu saying that they are intending to open the border crossing at Rafah with the southern border of Egypt, where there are literally tons of goods waiting to enter. We do not know when that will happen. We've been waiting for a development on that since yesterday. But again, that is rhetoric still. That aid is still not crossed through, and it's coming at a time now where we have the death toll in Gaza that is approaching 3,000 people.
And what's the latest then on the war effort, Ollie?
So we've had aerial bombardment, as we know, for the last week. We understand that that's also had some naval bombardments coming overnight, targeting Hamas targets, according to the Israeli Defense Forces. And we know that the ground forces are there. They're ready to go. They're ready to act on the next stage of this, which we understand will have a ground component. When that will happen, we do not know yet, and we're trying to get an idea of what shape this war will take going forward. We had some hints from that from the Israeli Defense Minister last night, who spoke alongside Anthony Blinken. Have a listen.
This will be a long war. The price will be high, but we are going to win for Israel, for the Jewish people, and for the values that both countries believe in.
A long and costly war, they say. Their preferred option, we heard from advisors, is not to occupy in Gaza. And again, the final question, and another important question, is will this remain a one-front war with the Iranian rhetoric really sharpening and continuing skirmishing on the northern border with Lebanon?
Ollie, thanks so much. Oliver Crook there, live in Tel Aviv, of course, following this very, very closely. Now, treasuries declined, and demand for safe havens is dwindling as the U.S. ramps up efforts to contain the Israel-Hamas conflict. Yields on the U.S. 10-year climbed above 4.7%. Gold and oil dipped. Joining us now for a look at the markets is Geraldine Sundstrom, Managing Director and Portfolio Manager for Asset Allocation Strategies at PIMCO. Geraldine, as always, thank you so much for joining us. There seems to be a belief in the markets that not only does this conflict not escalate, but maybe the president can make a difference. Joe Biden, when he arrives in Tel Aviv, how are you expecting markets to behave in the next couple of weeks?
The market, like us, will be observing, a horrific yet very fluid situation for signs if this conflict remains contained the way it is currently, or if it broadens in the region. So far remains contained, and that's why markets have decided to move on and look at macroeconomic data and central bank like they have been before.
Overall, and I know you put it in your market insights, there's this push, and pull between resilient economic data, but of course the tightening of financial conditions, and it's unclear where that ends.
Yes, there are risks on inflation. We see the stickiness. We know that there might be, a bit of inflation going back up. The labor market is still very strong, and then we have the term premium, which is being, rebuilt at the back end of the curve. That said, we think that bonds here remain attractive. The yield is attractive, and especially relative to other asset class, it feels like something safe, given that we are not completely out of the woods in terms of a market slowdown in the economy.
So what does it mean, Geraldine, for example, when you look at treasuries, and I know, the Fed has done a couple of things. We're looking at treasuries, the 10-year above 4.7 right now. It's gone higher, but is there a comfort level that the Fed will try not to breach?
Well, certainly they have to weigh both. The term premium being rebuilt as a normalization is something that's, had to happen in some way. We have quantitative tightening happening. We have more volatility in inflation. But of course, they have to be cognizant of this. They are going for this higher for longer. And eventually, we think that the economy is already slowing and is going to slow down some more from here. So probably a watch and see attitude and letting the times do its work is the preferred way. Of course, if there is a resurgence of inflation, they have made it clear that they will be ready to act. So at this stage, it's probably a toss of a coin if they hike one more time or if the data gives them the possibility to just watch and see.
What's your biggest concern, Geraldine, right now about the U.S. economy?
Well, we'll have to see what's happening in terms of the labor market, even though it's a lagging indicator. Certainly, strikes, wage pressure is something that the Fed will be looking at. This is going to have quite a bit of an impact on inflation developments ahead. So this is something that probably we have to look at. We would need to see some weakening in the labor market to gain comfort that the disinflation we've seen in the last few months can indeed continue.
So, Geraldine, where do you see, when you're building your portfolio, where do you see the biggest value right now? I don't know whether you do thematics and whether that's still the right way of analysis, or whether you just also need to look at region by region.
So a little bit of both. Certainly what we like at the moment, and that's an overarching thematic across our portfolio, is quality. We do see an economy globally that is slowing down. And yet when we look at the stock market, for instance, earnings expectations are actually upward sloping. So there's a bit of an inconsistency there. So we tend, when it comes to equity or fixed income or credit, to really go on the cautious side and go for quality. So it means investment grades, it means more defensive, more quality equities in portfolios. And then, of course, looking and starting to look more into secular thematic, which will grow no matter what. The energy transition will occur even if we have a recession. And this could be areas of the market that do get some support when the economy finally slows down. And all the more than year to date, they have performed very poorly.
So, Geraldine, also given all of the uncertainty out there, what does that mean for volatility? And do you buy VIX? Do you buy something else?
Well, volatility is likely not to go away, especially with this second war opening and the uncertainty that this brings. So one thing that we like doing, in fact, is we find the volatility in the option market, on the equity market, not that high. So this allows you to buy protection to the downside in case we would have a hard landing, because clearly the one market that is priced for, I would say, not even a soft landing, but a reacceleration of the economy is the equity market.
Geraldine, thank you so much, as always, for joining us. Geraldine Sundstrom at PIMCO. Now, coming up, U.S. President Joe Biden heads to Israel as Iran warns that an escalation in the war is becoming inevitable. We'll bring you the details next. This is Bloomberg.
Kept on blowing up on social media, then having a fight. It just kept on repeating itself. And at the same time, I got an opportunity to fight on ESPN, primetime TV. I said to myself, now imagine if I could do something amazing here. And then I end up knocking the guy out in 30 seconds.
How quick was that?
Which then gets on SportsCenter. So everything kind of went these things and hear the stories of other boxers.
Now we're getting reports from Lebanese state media that the Israeli army is striking villages in South Lebanon. It comes amid concerns that the Israeli-Hamas conflict is escalating. Iran has warned that an expansion of the war is becoming inevitable. Meanwhile, the U.S. President Joe Biden has announced he will travel to Israel tomorrow in a bid to prevent the conflict from engulfing the region. Well, joining us now for more on this is Roxanne Farmayan, professor of modern Middle Eastern politics at the University of Cambridge. So, Professor, thank you so much for joining us. We watch this terrible conflict. Everyone's watching to understand whether it escalates or whether there are signs that this could be de-escalated. We know that Vladimir Putin is in China. We know that Joe Biden will travel to Israel tomorrow. Are you optimistic about a more peaceful resolution?
Not particularly. I think there are some good signs that there may be a breakthrough and humanitarian aid may be allowed to be sent into Palestine, which is the Gaza Strip, which is good news, and that possibly those with foreign passports will be allowed out, although the crossing certainly is still very damaged. But I think the larger picture is we're beginning to see the different world powers go into their different sides, and I think this is spotlighting a divide in global perspectives that we're seeing on the one side. Russia, China possibly, certainly on the side of the Iran, possibly even Qatar group in the Middle East, and then the U.S. and Israel on the other. And we're definitely seeing from Biden's body language, I would say, that the trip through the Arab states that he took whirlwind over the last couple days is indicated to him that the Arab states are standing very secure on this at the moment.
So Anthony Blinken actually made this whirlwind tour for 6-7 days. Is it China that could really make a difference? Is there a nation that could really make a difference?
I don't think China at the moment. It has simply not played a large enough international global negotiating role to be able to have the credence, the credentials to make a huge difference. I think it's very interesting how over the last few weeks, if not year, the interaction between the Ukraine war and the Middle East has definitely had a rumbling impact on each other. And now I think that the role that Putin might play could definitely make a difference here.
How critical are the next couple of weeks? Again, I don't know whether President Biden is going because he really thinks that would make a difference, or whether it's more of an act that there's nothing left to try and solve this.
Well, I hope it's not in order to, as a third option, possibly give Israel a sense that it will be supported against a larger escalation. I think that there's definitely a possibility of that. The fact that Blinken has warned other states not to get involved, says don't, while meanwhile it is Israeli forces that are beginning to hit Lebanese territory and also wiped out Syrian airports. So it's clearly not a symmetry here. And I think Iran is putting forward its own warning because in many ways it's speaking to the Arab world in saying this is our neighborhood. And we are following international law, or anyway, that's the way it will be interpreted, that we don't want civilians further hurt. And so I think we're really seeing these two sides beginning to grow as discourses of conflict.
But if the U.S. and President Biden gives, of course, Israel unwavering support, no matter what happens in terms of a humanitarian crisis, will he lose allies?
That is certainly a good question, and I think the fact that this has thrown the plan that the U.S. had to broaden the Abraham Accords, to bring Saudi in as an ally, or at least as a normalization with Israel, that obviously has gotten waylaid. And I think partially it is also an interesting spotlighting of the fact that many of the leaders that signed those accords did so out of alliance with the U.S., but their people were not in support of that. And now we're seeing actually a similar divide actually in Europe, where all of these demonstrations are taking place in every major city and capital to support the Palestinians, and this does not reflect the policies of their leaders. So this is a divide that goes from the top right through the populations we're seeing of not only the region but the world.
So what are the chances actually that President Biden does that, also given some of the images that are on social media?
I would say that he's at the moment in a very difficult spot because he proclaimed absolute support for Israel and its right to protect itself, but then perhaps not quickly enough emphasized the importance of doing it according to international law. And I think that's the sticking point which could really move a much larger regional conflict forward.
Does President Putin actually benefit from this conflict? He's traveling to China and meeting with the Chinese president tomorrow.
Yes, he is. And benefit, I think, is quite difficult to draw straws on at the moment. But I think that certainly cements their relationship in terms of dealing with another location, another flashpoint. And I think it probably also further strengthens the global south, even of course he's not the global south, but if you understand my meaning, those that are the rest. And I think that is something that they have been looking forward to trying to find purchase. So I think there's a good chance that they will be developing a perspective, again, quite anti-American, and I think Biden will have to play his cards very carefully.
All right, Professor, thank you so much for joining us today. That was Roxanne Farmayan, Professor of Modern Middle Eastern Politics at the University of Cambridge. Coming up, will UK wage growth easing take some pressure off the Bank of England? We'll discuss that next, and this is Bloomberg.
I've always been a person who's just been attracted to hair. I like to sit and think and theorize how I can manifest these visions that I have for braiding and how I can take something that may seem like it's a line drawing in my mind and apply that to someone's scalp.
We are the only culture that has hair that grows out of our head the way that it does. Anyone from the African diaspora is born with this amazingly curly hair that can be shaped into a variety of different ways of expression.
I want Black people to love themselves for how they naturally appear, and also to appreciate the cultural practices such as braiding that our ancestors have practiced for centuries.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
From New York City,
From London, in Sydney,
from Washington,
in Tokyo.
9 a.m. in Beijing and Shanghai. Good morning, everyone.
Have a great evening.
Here's what I'm watching. You do not want to miss this story.
Is there the kind of upside?
UK wage growth slipped in the 3 months to August, indicating that a cooling of labour market pressures is here. Joining us for analysis, our UK correspondent, Lizzie Burden. So, Lizzie, good morning. If you break down the data for us, where does this leave the BOE?
Well, the pound dropped off the back of the data, so markets seem to think that it means the Bank of England isn't going to hike again. If you break down those numbers, average weekly earnings fell more than expected, but then if you strip out bonuses, it came in line with expectations. So you're exactly right. It does kind of signify this continued cooling of the labour market. We heard from the Chancellor, Jeremy Hunt. He's talking about the political perspective. Inflation's falling, real wages are growing. So in that sense, it's good news because people have got more money in their pockets, and people will be happy to hear that more hikes may not be on the way. But there is this divide at the Monetary Policy Committee about how much previous hikes have fed through. So you've got the chief economist, Hugh Pill. We heard from him yesterday. He thinks it's about half. The big dove, Swati Dingo, reckons it's about a quarter. And that's why he reckons, or he hinted yesterday, that maybe more hikes will be needed.
So there are a couple of other, I guess, pieces of data that we're looking at.
Yeah, exactly. The big number tomorrow is CPI. That's expected to tick down in the latest data from 6.7% to 6.6%. But I really should highlight that we've been only treated to a partial view of the labour market in this data this morning. Actually, it's a bifurcated set. So this morning we've had payrolls and wage data, but we have to wait for the employment and unemployment numbers next week. It's because the responses haven't been good enough, the ONS says, and that's why it's skewed the results. So unemployment next week is actually perhaps more important for the market.
Lizzie, thank you so much, as always, for some great reporting. Lizzie Burden there with the very latest on UK data. Now, we'll also be covering, of course, all things, as we do, UK every week on Thursdays at 9:30 a.m. London time in our half-an-hour special. Now, in the meantime, Rolls-Royce reducing some 2,500 jobs to extend their efficiency drive. I think we have a share price for Rolls-Royce. That's the price of crude, also extremely important because it gives an indication on whether the escalating conflict in the Middle East could happen. But Rolls-Royce, you can see they're gaining some 2%. Now, oil steadies as President Biden commits to visiting Israel to contain the crisis in the Middle East. We'll have more analysis next, and this is Bloomberg.
That's me, Max. What's up? How are you? I have been writing about Wall Street for almost 15 years. And what that means is I write about feuds and rage and rises and falls and comebacks. And every now and then, I also write about a couple of villains. Thank you so much. And now, I am about to do something new and very, very scary. We are making a show, and it's based on Bloomberg Businessweek magazine. So what is this show about? It's a show about money, power, culture, pop business. We're gonna ask complicated and profound people about their ideas, their careers, their lives, their risks, their failures, their imagination.
It's so incredibly liberating not to care what other people think.
I was giving my tools to other communities. I wanted to bring those tools home.
Tune in. Please, really actually tune in. I desperately need an audience.
The top names in business are on Bloomberg.
The market is starting to look over the Fed's moves into falling interest rates.
We actually think that core inflation is going to fall a little faster than the Fed expects, and that will allow them to start cutting rates by March of next year.
You get a price spiral when labor markets are tight. In manufacturing, labor markets are still very tight right now in the U.S.
Nobody covers business like Bloomberg. Context changes everything. The top names in global leadership are on Bloomberg.
The conflict between the U.S. and China has escalated so much. This is one of my greatest fears, that the small nation is forced to choose sides.
Bloomberg. Context changes everything.
This is Bloomberg.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, EU leaders will meet today to discuss a common approach to the Middle East conflict. That's after the bloc announced a humanitarian aid bridge out of Gaza, with 2 flights expected this week. Let's get straight to Bloomberg's Maria Tadeo in Brussels for the very latest. Maria, European leaders have been criticized for erratic policy on this issue. What can we actually expect from them today?
Yes, Francine, and responding to that criticism, you have this meeting today, which was not on the agenda. It is extraordinary. There will be a video conference, as you say, by the EU27 leaders this afternoon. And the goal of this conference and this video conference is to establish essentially a joint position. By now, it is very clear, though, that when it comes to Israel, the European Union has said, just like the United States, they stand with the country. There is no justification to what happened in the country by Hamas, and it has to be condemned in the strongest terms. The questions, however, they have to do with what to do with the humanitarian aid, this potential crisis that they're facing, especially as people try to leave Gaza and they're not able to do so. We've seen that the European Commission has now said it will triple now the humanitarian aid that will go into the Gaza in particular. We also have the situation with the hostages that are still trapped. There are European nationals, and the EU has an obligation not just to track them, but also bring them back, hopefully safely. And then, of course, there's a question about the escalation in the region. The European Union has said they do not want to see escalation in the region. The question, however, is whether they have the soft power and the credibility to really have a voice in this conflict. And so far, as you say, Francine, it has been very erratic over the past 7 days.
Yeah, Maria, the EU's Ursula von der Leyen was also criticized after her trip to Israel. So is her job under pressure?
Well, her job under pressure this time, no. That's a short answer, but there are questions about her credibility, and there are questions about her renomination for another job as the head of the European Commission, another term. As you know, of course, this goes back to that trip that she made on the Friday. You spoke with the Israeli ambassador to the European Union. He said that really meant a lot to the country. A spokesman for Ursula von der Leyen insists that she does not believe she made a wrong judgment call by going into the country, that she wanted to express the solidarity. However, in the European political sphere, there has been criticism that perhaps she appeared too one-sided, that she should have mentioned civilians, that she should have mentioned humanitarian aid. A spokesman for von der Leyen did tell me there are private conversations that you do have. The fact that you don't make them public doesn't mean that you're not having tough conversations when it comes to Netanyahu. Too, they also say that this was a call that she made and still believes was the right call. Having said that, a number of European capitals do believe that she may have exceeded her mandate, and now it's time for European leaders to set the agenda when it comes to this crisis.
Maria, thank you so much. Great reporting, of course, there on the ground. Maria Tadeo in Brussels. Oil steadies as the U.S. intensifies diplomatic efforts to contain the crisis in Gaza. Joining us now for more is Louise Dixon, oil market analyst at Rystad Energy. Louise, thank you for joining us. I guess it's a very, very peculiar week where the market, certainly the oil market, is looking for possible escalation, but for the moment not doing that much. What are you looking for in terms of how this could escalate? So the fact that President Biden goes to Tel Aviv tomorrow, will this de-escalate, or does it have the potential to flare up?
Hi, Francine. I think that de-escalation is the theme of this week, and that is coming from all different political sides, whether that's Washington, Jerusalem, or Tehran itself. So I do think that that's why we're sort of seeing this $90 per barrel, a bit more of a settling towards that price. Because, listen, the markets, if we're looking not only at crude, if we're looking at S&P, if we're even looking at the strength of the US dollar, none of these indicators are really pricing in an extreme escalation of this conflict.
Mm-hmm. So, Louise, when you look at the oil market today, it does seem that it's maybe not as dependent or focused on the Middle East as previously. Is that because demand overall worldwide is holding strong?
Yeah, we do see sort of the demand globally post-pandemic still on a steady trajectory. And your question about whether is the Middle East the key linchpin in the oil market? Yes, it is. OPEC is still very relevant. Iran is OPEC's third biggest producer of oil. And were the conflict to escalate, this would, of course, be a very material impact on the fundamentals in the market. However, there are so many other producers and marginal suppliers to the market that are able to sort of step in the case that OPEC itself decides to lower production, or if production comes off voluntarily from Iran. And even evidence of this we saw develop in the last couple of weeks. We've seen the U.S. even engage with Venezuela, and these talks could even bring another 200,000 barrels per day back to the market. So the oil market has a lot more supply levers and actors than it did if we look back 30 years from today.
Louise, how difficult is it to make the case that actually oil could go to 150 from here?
Listen, Francine, it's October. October is a shoulder season. So let's even rewind 2 weeks to before the invasion or before the conflict sort of re-erupted in the Gaza Strip. We saw crude lose $10 in 10 days. And this has been a combination of not only just the murky macroeconomic environment, which we've known about for years now, but really there's just this physical weakness in the market. So across the board, the refined products from distillates, so if we're looking at diesel or jet fuel, or even if we're looking at gasoline, across the board globally, we're seeing weaker refining margins, and that is actually from the physical side, driving crude a bit lower. I mentioned October. October is the shoulder season. So if we are seeing, if we're going to talk about even $100 oil or $150 oil, if we just statistically look at seasonality trends, October would not be the month to make that call. As well, we're seeing a lot weaker demand, especially out of the petchem sectors, especially in Europe. So that's going to keep a weight down even in the naphtha markets. So across the board, refined products, until we sort of see a turnaround after the shoulder season, we can expect that $150 oil is not in the cards.
Yeah, Louise, I mean, I guess the concern, but this would be pretty extreme, is that something happens with Iran, that Iran, who has also, I think, been putting more barrels of oil possibly on the market than is said, could no longer fulfill that role, or whether something happened with the Strait of Hormuz. But how big a conflict would you need for that to happen?
I think Iran is, and Iran is the linchpin, and this is an original analysis on my part. Everything depends on what Iran does, and I think first of all, we haven't seen Tehran take any credit for the attack. We've seen really de-escalatory steps from their side, and I think that they're kind of looking at the longer term. As you mentioned, in the past 6 months, we've seen Iranian crude exports incrementally increase. And I think that they're happy to have their barrels back on the market, especially in a $90 per barrel price environment. And again, they're looking ahead. 2024 is the U.S. election. 2025, they have a renewal of their expiration and then potentially renewal of their nuclear deal which would allow them to not just bring another couple 100,000 barrels back on the market, but even millions of barrels back on the market. So I think that it's, at least our assumption is that, you know, Iran is going to be playing sort of the safe long-term game.
Louise, thank you so much for joining us. Louise Dixon there, Rystad Energy Oil Market Analyst. Now, coming up, the Russian President Vladimir Putin arrives in Beijing for talks with Xi Jinping, so we'll discuss the significance of this visit next. This is Bloomberg.
I think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some points that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Thursday, the Economic Club of New York hosts a conversation between Fed Chair Jay Powell and Bloomberg Wall Street Week's David Weston. Recession risk, inflation outlook, real estate amid high rates, and more. The live interview happens October 19th at 12 p.m. Eastern on Bloomberg. Context changes everything.
Now, the conversations that matter, the insights you need. This is a pulse. I'm Francine Lacqua here in London. The Russian President Vladimir Putin has arrived in Beijing for the third Belt and Road Forum. For more, let's bring in Bloomberg's Asia government reporter Rebecca Chung-Wilkins. Rebecca, can you actually explain, first of all, good morning and good afternoon, but can you explain the backdrop to this meeting between Vladimir Putin and Xi Jinping, given the current geopolitical pressures, high stakes?
Absolutely high stakes indeed. And when Vladimir Putin was last in China, he walked away with this famous so-called no limits relationship. Less than a month later, he had launched that invasion into Ukraine. And in the 20 months since, we've really seen Russian dependence on, and its economy dependence on China increase, touch nearly every part. So exports from China to Russia, even while they fell globally, jumped about more than 50% to Russia. We've seen the yuan making up about half the value, nearly half the value of all FX trading in Moscow, and shipments from Russia to China of coal have more than doubled since 2020. So we've really seen this increased change in dependency. And, you know, it's arguable that it's never been clearer that Russia has indeed become the sort of junior partner in what is often described as sort of this bromance between Vladimir Putin and President Xi Jinping. But it's not entirely straightforward for Beijing because, you know, the longer this goes on, there are clear costs or clearer costs for Xi, particularly as he also tries to stabilize ties with an increasingly antagonistic US and European nations.
You also wrote, Rebecca, in the Big Take article today that yuan accounted for almost half of the value of all foreign exchange trading in Moscow this September. So what does this show in terms of the economic and political isolation of Russia and China?
Certainly, well, Beijing is in many ways sort of Moscow's way out or some kind of relief. And while Beijing has been careful not to offer any kind of military support that explicitly breaches the sanctions under Russia, it's certainly helped ease the outlook. So, for example, Russian goods dramatically fell after the war as certain Western firms fled the country. And China, in its stead, has imported things like cars, mobile phones, and other white goods to try and help make up that shortfall. And the UN, too, has been really important in helping Russia find an alternative for some of its international payments. And really, in fact, the war and Russia's isolation has probably done more to internationalize the UN than decades of policy making in Beijing.
So while this forum, I guess, Rebecca, brings leaders from the international community to China, we also have Country Garden in major trouble over debt. So what about China's domestic issues?
Yeah, indeed. And I think it's China's domestic issues that are causing some to sort of pause and reconsider the relationship with Russia and precisely whether they're willing to tolerate those costs. I mean, China is dealing with a very challenging situation at home. The economy is a huge issue. We really still haven't seen the bottom yet. CPI, consumer data still weak. Property data, crucially, for that the 8-day holiday, the Golden Week holiday, which should have been a boost for property. We saw sales slump 17% compared to a year ago, not least again in domestic politics. Xi Jinping, we've seen, the apparent ousting of Foreign Minister Qin Gang, of the Defense Minister Li Shangfu. There is a lot of turbulence at home for President Xi Jinping, and there is this question of, as he tries to sort of steady things and stabilize things at home, whether he also wants to risk the fallout of his cozy ties with Putin, risk aligning himself too closely with Putin and somehow being drawn into that isolation. All of that, of course, is now happening under this extra added pressure of the Israel-Hamas war. And we have seen calls growing from the Palestinians, from the Israelis, and even from the US for China itself to take up a bigger role. So China is finding itself really at the center of a sort of the shifting balance of powers whilst it juggles its increasing sort of febrile situation at home too.
Rebecca, thank you so much. Rebecca Chung-Wilkins, they're co-author of today's Big Take with analysis of the Russia-China relations live from Hong Kong. Now, earnings season continues in force today for U.S. banks as Goldman Sachs and Bank of America report a little bit later today. Well, here to take us through what to expect is Bloomberg's Charlie Wells. Charlie, first of all, we had a lot of stories. Goldman Sachs has been in the news a lot, but this is also the chief executive who will step down from some DJing gigs.
Yes, that's right. So David Solomon famously played a lot of high-profile DJ gigs. It seems like he is going to step away from that, according to some reports. And look, Goldman is going into its 8th consecutive quarter with expectations for profits to be down. And so the expectation for earnings per share compared to the same period last year, down 34%. And I think this bank has had challenges, and we know that Goldman Sachs is a investment banking powerhouse. The question a lot of analysts are going to have today is, when's the power coming back on? Is there pent-up demand for IPOs? We saw a flicker this autumn, but is that going to continue? And I think that's the big question today.
Yeah, and it's difficult to know because of geopolitics, actually how much business sentiment can take a hit from here. So you could potentially see green shoots, and then, again, a lot of concern going into the winter.
Exactly. I mean, is this a moment where companies want to risk going public? Is this the sort of time when, companies want to do these deals? We saw very similar chill factors after the Ukrainian invasion, so that certainly is a concern, and that could take a hit on Goldman.
So, Charlie, when you look at the different U.S. banks, they're all different. Who's coming up trumps?
It's a really good question. So Bank of America is also reporting today. Not great expectations there either, but for different reasons. I think net interest income is this theme that we've seen throughout this week. It was a huge boon for J.P. Morgan. They got a 30% boost. Wells Fargo got an 8% boost in net interest income. For Bank of America reporting in just a few hours, the expectation there is just a boost of 2%. So I think there's questions there about loan demand. There's questions there about, deposit competition. I think that's something that the American consumer has a lot more options these days, which puts pressure pressure on that very important revenue figure for these banks.
What else are we looking at? I imagine that it's the small and medium-sized enterprises that could take the biggest hit because of rising interest rates. And is the exposure there for Bank of America?
I mean, that's a really good question on the corporate side. I think, especially after the banking crisis that we saw earlier this year, I think there's a lot of questions about what higher for longer interest rates mean, not only for consumers, but also for companies who are really coming under pressure. And I think that's why we've seen with a lot of these earnings reports, with a lot of these calls, despite some relatively good figures, I mean, the three largest banks in America had their best third quarter ever, words of caution and trying to temper down expectations.
Charlie, thank you so much. Charlie Wells there with the very latest on the U.S. banks. Now, coming up, a show of support from the U.S. as President Biden prepares to head to Israel amid the conflict in the Middle East. We'll discuss that next, and this is Bloomberg.
Kept on blowing up on social media, then having a fight. It just kept on repeating itself. And at the same time, I got an opportunity to fight on ESPN, primetime TV. I said to myself, now imagine if I could do something amazing here. And then I ended up knocking the guy out in 30 seconds.
How quick was that?
Which then gets on SportsCenter, top 10. So everything kind of went doom, 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 doom. We look at these things and hear the stories of other boxers and how they were taken advantage of. Right. I said, well, this is an opportunity where I could become bigger and have my own power, my own voice. So they can't just, take all my money and say that, oh, I did all this for you, I got you here. This kind of gave me, into the driver's seat, and I didn't want to be another story where, these promoters, these managers, they, pretty much screw you. So I was like, I need to do something that could give me some power.
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services, and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
The conversations that matter, the insights you need. This is A Pulse, and I'm Francine Lacqua here in London. Now, the U.S. President Joe Biden will travel to Israel tomorrow in a bid to prevent the conflict from engulfing the region. The visit comes as Gaza braces for an expected ground offensive. Well, joining us now is Bloomberg's news director for EMEA, Rosalind Matheson. So, Ros, thank you for joining us. When you look at what President Biden and the significance, actually, of him arriving in Tel Aviv tomorrow, what does he hope to achieve with this?
Well, it really is just extraordinary that he's deciding to go there in this moment after, of course, all the diplomacy by his U.S. Secretary of State. Now we've got the U.S. President flying in very much in the last minute to sort of meet with the Israeli Prime Minister Netanyahu and obviously express strong support for Israel because they are key allies of each other, including militarily. You can expect strong statements of solidarity, of support in this minute in the aftermath of the Hamas attack on Israel, but also he's going to be urging caution, you can imagine, urging the reopening of the crossing between Gaza and Egypt to allow humanitarian aid to go into Gaza, people potentially to move out, and also warning again, if there's a full-scale ground war in Gaza, does that have repercussions for the region? How can they stop this bleeding into the rest of the region, pulling in Iran, other countries, potentially? And so, in a way, his trip, is it buying time? Is it just trying to stave off something that Israel might be doing? Very difficult to start a ground war when the US president is there in Israel, for example.
So it's unclear whether this could be an escalation. I mean, if he actually gives unwavering support to Israel, could that inflame tensions in the region, or does it de-escalate if he manages to get an agreement on the humanitarian corridors?
Well, certainly they're focusing on that humanitarian angle. They're saying they understand the plight of the people in Gaza is quite terrible, but also the US has been very strong in saying they understand Israel's position on this. They're not going to try and persuade Netanyahu against a ground war. They are saying his long-term plan should not be to occupy Gaza, but they're not going to stand in the way if Netanyahu decides he does want to go in. What they're probably trying to do is sort of frame the situation to help perhaps get to the point where we don't see that full-scale ground war. We see something more targeted than what perhaps was planned in the initial days after that attack.
And then, Roz, so Vladimir Putin has called the Israeli prime minister. I don't know what was said there. And at the same time, Vladimir Putin is also meeting with the Chinese president tomorrow.
Well, it's very interesting. How many days did it take for Vladimir Putin to call Netanyahu? And when he did, it was sort of general expressions of condolence over what happened, calling for a ceasefire. He did not condemn Hamas for its attack on Israel. So it was a very sort of perfunctory phone call in a way. He also spoke to the leaders of Syria, the Palestinian Authority, and others. And so in a way it was sort of a box-ticking exercise by Vladimir Putin, who immediately got on a plane to China, where he's going to be meeting with Xi Jinping tomorrow. And those two countries, of course, collectively have sent the message they don't really want to get involved in this. The US is saying, use your influence to make sure Iran doesn't get pulled in. And the message from China and Russia is, this is not really our business. We support a ceasefire, but don't get us involved.
Roz, very quickly, who's the right person to call Iran or to mediate with Iran, China or Russia?
Well, that's the big question. I mean, Russia does have influence with Iran, but economically through oil, China has the leverage. But again, the big question is, like, who do either of them really want to get involved with Iran? There's no sense they do.
Roz, thank you so much. Roz Matheson there with the very latest, of course, on the conflict between Hamas and Israel. Up next, we'll have plenty more on oil. We'll have a full debrief also on what's going on in the markets. Creditors really fighting over, one of our top stories is actually them also fighting over a crown jewel of German real estate. Bloomberg Brief with Danny Berger in London, Manus Cranny in New York is up next, and this is Bloomberg.
Quite curious about why citizens' assemblies actually work. I mean, what is it about them that taps into this collective intelligence and this desire to find a consensus?
One, I think, is because they bring together this diverse group of people that in the best case scenario is actually descriptively representative of the larger population. You maximize what I call the cognitive diversity of the group. You bring poor people, you bring minorities, you bring a lot more women, you bring a lot more, young people, and these perspectives are currently lacking in our parliament. So when you bring that, the richness of perspective and information that you get is much higher. It's really focused on, okay, we're in it together. We have a problem to solve. How do we solve it?
But you must get shelves at these.
Oh, you do. Of course you do. But the difference is that they're not rewarded for that behavior the way
a
they are.
politician is rewarded.
On the contrary, it's very interesting because you do have all the human types. So you have the politicians type in those groups. But so it doesn't work. You do have also natural leaders that are actually very much respected. They have an influence. Their voice, really carries a lot of weight. But that doesn't mean that they're above the others. The only thing that gives you more weight is if you have a better argument or a better information.
Wall Street is waking up. Europe is already trading. And Manus Cranny and Danny Berger are making sure you have the news, data, and analysis you need to set your agenda. Micro, macro, and everything in between. Manus in New York and Danny in London follow the money around the globe. Take a daily deep dive into risk and help you make informed decisions for your trading day. Watch Bloomberg Brief, weekdays at 5 a.m. Eastern, only on Bloomberg. Context changes everything. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg, top experts, great questions.
Good morning from our world headquarters in New York. I'm Manus Cranny.
And from our studios in London, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
President Biden is set to visit Israel tomorrow, then travel to Jordan for talks in what's being called a critical moment for the region and for the world. Meanwhile, on Capitol Hill, Representative Jim Jordan edges closer to becoming the next U.S. House Speaker, but a band of Republican holdouts continues to threaten his bid. And Russia's Vladimir Putin arrives in China on a rare international trip for talks with Xi Jinping. The U.S. presses Beijing to help reduce the tensions in the Middle East. Well, we have breaking news at the top of the hour here on the German ZEW investor expectations. They rise to -1 from -9. Now, we'll reflect on that in a moment. Let's just have a look at the euro. If I turned the right way, we'd get there. It's a small move higher. Still, the consensus is, of course, that you may well move towards parity and a stronger dollar. Now, there's a huge presumption and preemptive mood in the bond market yesterday, up by 9 basis points. We build on that this morning. Yields are rising. You've got one of the most virulent bond markets that you've seen since the pandemic. Swings of 2% at the longer end of the curve. Have you had bond capitulation? As Stephen Major would say, Kalanovic over at JP Morgan says he's adding 1% back to his bond portfolio, but he's not convinced that the bottom is in. And the narrative is this, is whether you really believe there has been a cathartic capitulation in the bond market. The oil market has decided to view this move by Biden and indeed by Putin. Putin's spoken to all of the Middle East leaders. Biden, we understand, is set to go to Israel tomorrow. That groundswell of global diplomacy is what these markets are trying to front run. It is very presumptive, it's very preemptive, and you've got to be a brave person to presume that diplomacy will work. Copper, I put that in there. You're going to get a heap of news coming through from China. Citi are worried about China. They have a huge no doubt. The skew is to the downside, a heavy move to the downside over the next 6 to 12 months, and $7,500 is for them the target on LME copper. Danny, good morning.
Good morning, Manus. Yesterday's equity session was bizarre, given everything you just pointed out. When you have yields on the 10-year going to 4.7% rather, it is odd to see stocks, both S&P and the NASDAQ, rally more than 1%. Maybe it's more normal we give some of that back this morning. S&P futures down 0.25%. Same thing goes for NASDAQ 100 futures. We are on the cusp of the big tech earnings. According to Bloomberg Intelligence, the top 5 big tech stocks should gain about 35 24% year over year in their earnings. That is a very solid number, and it might just carry the entire equity index. That's going to kick off with Netflix and Tesla come Wednesday. European stocks, for their part, Manus, they're slightly lower. They are off the lows. It does seem, Manus, that some of the worst of the losses seem to ease after that ZEW survey doing better than expected.
Yeah, it's certainly above all estimates, negative 1.1. But of course, we've both focused in on that Bank of America report, Danny, and it is about this allocation, isn't it, around the asset classes. But still, the soft landing seems to be the top line narrative here.
Yeah, and I mean, when it comes to cash being added, 5.3% of AUM, that's the percentage, that moves up. According to Bank of America, that is the level historically that they feed into their buy indicator. That has gotten bearish enough for those out there that maybe you want to start looking at risk.
Yep, well, it certainly served them well since 2011. I think there you go. There's the allocation to cash. It goes up to 5.3%. And a weaker economy, still it's a toying cost, isn't it? And this is what Patrick Harker, we'll hear from him a little bit later on. He is concerned about this hiking path from the Fed kicking in on small businesses. Danny.
Yeah, it's certainly some of those fears, those hard landing fears still in there. Now, the other risk we have to contend with is what's happening in the Middle East. And on that note, U.S. President Joe Biden will travel to Israel tomorrow in a bid to prevent the conflict from engulfing the region. The visit comes as Gaza braces for an expected ground offensive.
This will be a long war. The price will be high, but we are going to win for Israel, for the Jewish people, and for the values that both countries believe in.
That was Israeli Defense Minister Yoav Gallant speaking after meeting with U.S. Secretary of State Antony Blinken, who saw in that video too. Let's get more with Bloomberg's Oliver Crook, who is in Tel Aviv for us. Oliver, Biden going to Israel, what does this mean for the latest diplomatic efforts?
Yeah, we expect the U.S. president to arrive tomorrow here in Tel Aviv, and really three messages. It's going to be one of support, one of deterrence, and one of diplomacy. The support is what we've heard from every U.S. official that has come to Tel Aviv, which is unflinching, unquestionable support for the state of Israel. Will we also see support, financial support, and military support, as Chuck Schumer was talking about just here in Tel Aviv on Sunday? Deterrence, we have a second aircraft carrier group, again, headed to the eastern Mediterranean, and this also to deter Iran and some of the rhetoric that has been sharpening around that we've heard, but also diplomacy. He's going to go to Jordan as well after his visit to Tel Aviv to meet with the president of Egypt, with the king of Jordan, and with the president of the Palestinian Authority, Mahmoud Abbas, to discuss kind of what the next steps are. And you have to imagine, number one on their agenda is going to be getting aid into Gaza, where the situation is absolutely dire. From what we understand, the aid is still stuck on the border with Egypt at the Rafah crossing point, but this is going to be the main concern, particularly for Arab leaders.
Well, where are we, Ollie, on the fighting between Israel and Hamas? There are these cessations, or the IDF have said that they'll refrain from targeting certain designated axes between 8 a.m. and 12 noon. It's coming up to that time for you. But on the wider conflict, where are we?
So what we understand is, again, the aerial assault has been basically unrelenting by Israeli forces into Gaza for more than a week now. I understand overnight there's also been some naval attacks onto targets within Gaza. But the real question is, Manus, when is this ground invasion going to take place? In what form is it going to take? How wide is it going to be? Is it going to be more tactical and limited? Is it going to be the full force of the Israeli military? And to that question, we really do not have the answer. Could it also be delayed by the presence of Chancellor Scholz from Germany, who will be here today, and President Biden tomorrow? We do not know, but as we heard from the defense minister of Israel, they are bracing for a long war and a costly war. And the question is, what comes next? We've heard from a Netanyahu advisor about, asked whether occupation is on the table. He said that that is not the preferred option for Israel. He did not rule it out. It's something Biden has cautioned against. And again, Manus, the last question is, what about the second front or multiple fronts of this war? Iran has been warning repeatedly that this war could expand beyond Gaza. We've had more and more exchange of fires on the northern border with Lebanon, so this is going to be one of the key risks that Biden is going to try to avoid. And again, he's arriving here in Tel Aviv, where we're getting air raid sirens at least 2 times a day, so really coming into a very complex situation that he needs to navigate.
And Oliver, Manus mentioned this idea of the safe corridor between certain hours of the day. Where do we stand on the evacuation of northern Gaza?
So this is going to be the big question. We have estimates of 600,000 people being displaced. I think it's very hard to get a read on the ground. Again, I think where most of the focus is going to be for the next 24 hours and 48 hours is on the border crossing with Egypt in Rafah, where the aid is lined up. Literally thousands of tons of aid is waiting there on the border. The Israelis have said that they are now going to create the conditions for that to go in, but their main concern is for that aid not to be commandeered by Hamas. There's also the question of foreigners within Gaza that they want to pull out. Many countries calling for that, which would go through Rafah. And then there's the question of refugees, which the Arab world overall has said they will not take.
There are many tentacles to this, and the aid is perhaps one of the most pressing ones, as you say, to make sure it does not fall into the hands of Hamas, but gets to the people of Gaza. Oliver, thank you very much. Oliver Crook, our reporter on the ground in Tel Aviv. So let's talk about the Federal Reserve. The officials there are signaling another rate increase. One of the Fed's biggest doves, Philadelphia Fed President Patrick Harker, spoke about whether the central bank should really continue to hike.
You might get ready for the fact that a lot of these firms may not make it with the higher rates, which again feeds back into my view that this is why we should hold rates steady. We should not at this point be thinking about any increases.
Our guest this morning is Octavio Marenzi, co-founder and CEO of OpenMIS. Octavio, the bond markets are trapped in many ways between the hell that is the war that we have just spent the first 5 minutes of this show talking about, and their role as a haven, and perhaps the future rate trajectory. Which is the most dominant force for the bond market right now?
Well, in my view, what's going to happen is the Fed at some stage in the not too distant future is going to be forced to carry on increasing interest rates. They've clearly said they want a 2% inflation rate. That's their target, has been their target for years. We're not really close to that. Inflation has been very, very sticky and very resistant. The only way they're going to get it down is by increasing rates further. So they might take a bit of a pause now, and they might sort of take a temperature check and check what's going on. But eventually they're going to have to come back to that. So I think we're going to see interest rates, particularly on the short end of the curve, carry on going up. I mean, if you look at the 1 and 3 month yields on US Treasuries now, we're up at like 5.6%. It's pretty high. The 30-year quite a bit lower than that. But that's been suffering at the long end as well. So I think we're going to see further rate hikes. That's going to be very bad for the bond market, bad for the equity market, and I think bad for the economy overall, as some firms simply can't pay those high interest rates anymore.
Well, let me play devil's advocate, Octavio, in that the rates that we've seen move higher, like Logan and Jefferson say, are equivalent to at least one rate hike, and therefore the Fed doesn't need to hike further than here. What do you make of that argument?
Well, yes, that's absolutely true. But I think the markets are doing this in anticipation of what the Fed is going to do. So basically, we're trying to figure out where is the Fed going to go? What are they going to do next? And I think the balance now looks like they are going to increase rates further. And that's basically what the market is saying. So, yes, the market itself is increasing. But, you know, when you know a future price is going to be at a certain point, well, you approximate that price really quickly in the spot market. So, yes, absolutely. The bond market is, I suppose, sort of doing the work for the Fed. But it's really the Fed behind it and anticipation of what the Fed is going to do.
Octavia, the debate is this. Stephen Major was with the team yesterday and with Danny and I last week. He talked about a capitulation is what you've seen in pricing. You've got BlackRock, who are saying, look, it's gone too far for them. They're not tactically bullish, but they're at neutral. And then you have JP Morgan, who say add bonds as a defense. So in your eyes, we've not reached a capitulation point, or you've not seen that in the pricing in the bond market. There's going to be another wave of quite vicious selling?
Well, I mean, I'm not really sure entirely what the term capitulation means in this context, right? The Fed.
Well, I think the essence of capitulation is that bondholders have been forced to sell, risk managers have forced liquidation, you have people who are long at 3.75, they can no longer carry the trade from a risk management point of view. Simple capitulation.
Well, Well, so what I think is if you see things in those terms, clearly at the long end of the yield curve, on the 30 years, the 20 years, 10 years, we have seen a tremendous amount of pressure there, and basically those bond prices come down about 50%. So people put money into 30-year treasuries a couple of years ago have seen their money wiped out. Is that equivalent to capitulation? Does this mean now people are going to pour money into this falling asset? I don't think so. I think it's got further to fall. I don't think there has been a capitulation. I don't really accept the argument behind that reasoning. It's basically up to the people who control the interest rates to determine where the bond prices are going to end up, and they're going to have to tighten the screws further, I'm afraid.
All right, Octavio, we also have some bank earnings to work through. Stay with us, Octavio Morenzi of Optimus. First, though, let's get some other top stories that are trending on the terminal this morning. The clock is ticking for Country Garden to avert its first ever public dollar bond default. The builder, which has become a symbol of China's broader property debt crisis, must pay a $15.4 million coupon by the end of a 30-day grace period that ends October 17th to 18th, or a default can be called.
Rolls-Royce plans to eliminate as many as 2,500 positions worldwide. That is 6% of the global staff. The CEO of the UK manufacturer is streamlining the workforce in preparation for an upswing in demand for large aircraft engines. A representative for the company declined to comment.
And UK wage growth slipped in the 3 months to August to 7.8% from a year earlier. That's down from a revised 7.9% in July. It's also the fastest since the data series began in 2001. This data indicates a cooling of labor market pressures that will make it easier for the Bank of England to keep interest rates on hold next month.
Coming up, the House Speaker role, it's still vacant. Congressman Jim Jordan is getting closer to winning the gavel. We discuss. And as the war between Israel and Hamas escalates, we discuss how it could bring the world economy to a global recession on Bloomberg.
That's me, Max. What's up? How are you? I have been writing about Wall Street for almost 15 years. And what that means is I write about feuds and rage and rises and falls and comebacks. And every now and then, I also write about a couple of villains. Thank you so much. And now, I am about to do something new and very, very scary. We are making a show, and it's based on Bloomberg Businessweek magazine. So what is this show about? It's a show about money, power, culture, pop business. We're gonna ask complicated and profound people about their ideas, their careers, their lives, their risks, their failures, their imagination.
It's so incredibly liberating not to care what other people think.
I was giving my tools to other communities. I wanted to bring those tools home.
Tune in. Please, really actually tune in. I desperately need an audience.
Welcome back to Bloomberg Brief. I'm Danny Berger in London alongside Manish Krani in New York. Now, bank earnings in the U.S. continue. We've got Goldman Sachs and Bank of America reporting today after the bell, and then Morgan Stanley will be reporting tomorrow. Of course, we've already gotten JP Morgan, Wells, and Citi. Octavio Morenzi, Opima CEO, is still with us. Octavio, I'm actually going to steal your own question that you told us in the break. You said, look, earnings are good. I'm sorry to do this to you, Octavio. You said earnings are good so far, but can they continue to be? What do you make of it? Is this as good as it gets for the big banks?
Well, it's not. I'm delighted to be answering my own question. So I think what we've really seen is over the course of the past year and a half, we've seen the main story in the banking industry being net interest margin going up. Basically, people are leaving money in their checking and savings accounts, getting very low interest rates on them, at the same time as banks are charging much more on the loans. And of course, net interest margin has exploded as a result of that. Now, that game has carried on much, much longer than I expected it would. I thought depositors would be much more aggressive in terms of moving their money out of those savings and checkings accounts and current accounts into money market funds, into bond funds, or into bonds directly. But they've been much, much more reluctant to do that, particularly sort of the large banks, at the Bank of America's, the JP Morgans, and the Wells Fargo's. But we are seeing that come to an end now. So deposits are starting to go down. People are starting to pull money out. But bear in mind, the overall level of deposits in the US banking sector are still much, much higher than they were before the pandemic. So we've still got an unusually large number of deposits in the US banking sector. But that is starting to change now. And as that changes, there's going to be pressure on net interest margin, and that is going to put a cloud on the horizon for the US bank earnings story. And it's very hard to see where the growth is going to come to in the future. So that's basically the story. There's not going to be a new engine for growth, or it's not obvious at this stage what that's going to be if there really is anything out there. So
the headwinds are mounting, and what you really want to worry about is when I'm actually Googling how to actually buy T-bills at an auction as a private in. That's actually when we all want to shudder and say, this is some kind of a capitulation point. But I look at Jane Fraser and I look at the announcements that she made. I mean, the stock's off over the past couple of days. This woman is just hitting her stride. 7,000 jobs are to go, $650 million in terms of severance. Do you think that you're going to see a step change at Citi relative to Wells, relative to B of A? Is there a way of differentiating between Fraser and her peers?
Well, I think Citibank is a very different kind of institution from some of the others. First of all, they've got much, much larger international operations. They've got a very different kind of exposure set, and they're trying to sort of roll back. Just this year, they got basically rid of their Taiwan operations. Jane Fraser herself, for a long time, was in charge of Mexico and Latin America, so she's well acquainted with those markets as well. So Citigroup has an unusual exposure in that way that many of the other US banks don't, who are much more domestically focused than Citigroup is. But I think Jane Fraser has a real problem. If you look back to when she took over the bank, which is in March of 2021. Basically, the Citibank share price back then was about $75 a share. It's come down over 40% since then. Now, that is what most of this board of directors is going to hold her to task for, and she's going to have to demonstrate that she can turn that around. So everything she's doing now is designed to pop up the share price and move in the right direction. But it's a tough wait. It's a long way to go. Once you're down 40%, to get that back is really, really hard indeed.
I actually have a question for you, Manis. I mean, is the clubbing world forever changed because of this earnings season? Now that DJ Soul is no longer, he had to throw in the towel. I mean, what's going on?
He's just waiting. You know what? My renaissance just hadn't arrived. I think that's the point. I think my days on Ibiza were long, long, long gone.
There's an open spot now.
No, there's an open spot. I think maybe we can do double decks, Dan.
I think we'd be pretty good. I don't know. I'm sure Octavio would listen to that. Octavio, what do you make of this? Look, I know we can laugh about this, but
go on.
Listen, I'm shocked and saddened to hear this news. I hadn't heard this before just right now, so I'm devastated that.
What's it going to do for him? What's it going to do for his market persona? In all seriousness, though, this is about brand Solomon, isn't it? A slightly more serious note. Bit of sobriety there, Danny. This is about brand Solomon, isn't it?
Absolutely. I mean, he's got a brand problem, right? And he's trying to address this now. I mean, not only the DJing always looked a bit weird, but it was kind of amusing and charming in a certain way. I think perhaps more seriously is the sense that a lot of people within the organization find him very difficult to work with and deal with. And so I think that's more of a perception problem really than perhaps the reality. But so he is trying to address that. And I think he's going to do other sort of persona changes and marketing branding changes in the coming months as he tries to get a handle on that. But I think it's all about that. Yeah, its own personal marketing and branding.
Internal communication, external communication. Danny, that's called inner voice and outer voice. Octavia, thank you very much. Optimist CEO Octavia Marenzi, our guest this morning on the banks and macro on Bloomberg.
I think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
The top names in business are on Bloomberg.
The market is starting to look over the Fed's moves into falling interest rates.
We actually think that core inflation is going to fall a little faster than the Fed expects, and that will allow them to start cutting rates by March of next year.
You get a price spiral when labor markets are tight. In manufacturing, labor markets are still very tight right now in the US.
Nobody covers business like Bloomberg. Context changes everything.
Quick check on the commodity board. You're going to get a massive pile of information from China over the next 24 hours. Dr. Copper is down by 0.6%. Goldman's and Citi are bearish on this. LME inventories are at a 2-year high, Danny.
Yeah, and it might be another story, though, for the precious metals. Kolonovich, we talked about his call. Among it, he also says now is the time to buy gold with those geopolitical risks. Gold had its best week last week, Manis, since March of this year.
You're giving me a hint for what to do with the dollars and buy. It's nearly Christmas, Danny. But anyway, coming up, we're going to talk politics. The House Speaker role, it's vacant. Congressman Jim Jordan, will he win the gavel?
venture capital. It's been volatile. From bank crisis anxiety to AI exuberance, Caroline Hyde and Ed Ludlow chat with the biggest names about the latest tech trends.
Is AI going to dominate the earnings narrative for this sector this week?
I think we're seeing opportunity and potential platform shift that we haven't seen in a long time.
If you're a company today and you're not embracing the changes that are taking place with AI, you're going to be behind.
How do you prove to the investor base that you haven't just tacked on AI to make yourself sexy?
It's very hard to differentiate if you're not experienced with AI.
The startup stories.
We think this is a watershed moment for technology.
Certain categories are more exciting than others. Right now, obviously, generative AI is a category that is very exciting to startup founders, customers, and venture capitalists as well.
So what we are seeing is a new area of opportunities for new founders to come and change the industries that matter.
And the real talk on realistic valuations.
Some of the best opportunities are sitting right in front of us.
How do you discern which ones are good on the marketplace right now?
I think founders have woken up to the reality that taking on more money at higher terms doesn't necessarily play to their benefit in the long run.
How do you actually invest?
Follow the VC money on Bloomberg Technology, the only daily business show dedicated to tech right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West, only on Bloomberg Television.
From New York City,
from London, in Sydney,
from Washington,
in Tokyo,
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening. Here's what I'm watching.
You do not want to miss this story.
Is there the kind of upside?
When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers jobs day like Bloomberg.
Welcome back to Bloomberg Brief. I'm Manus Cranny in New York.
And I'm Danny Berger in London. Here's what you need to know. President Biden is set to visit Israel tomorrow, then travel to Jordan for talks in what's being called a critical moment for the region and for the world. Meanwhile, on Capitol Hill, Representative Jim Jordan edges closer to becoming the next U.S. House Speaker, but a band of Republican holdouts continue to threaten his bid. And Russia's Vladimir Putin arrives in China on a rare international trip for talks with Xi Jinping. The U.S. presses Beijing to help reduce tensions in the Middle East. Now, a more calm equity market to slightly lower after yesterday, despite the fact we had bond yields, 10-year yields go back above 4.7%. We had equities gain more than 1%. It was a strange day, capped by Marko Klanovic, for example, saying it's time to reduce risk. Despite that, S&P and NASDAQ futures down about 0.2%. We're on the cusp of big tech earnings, ones that Bloomberg Intelligence figures will help lift this overall S&P 500 benchmark. That's going to kick off with both Netflix and Tesla on Wednesday. Meanwhile, European stocks, Manus, just slightly higher following the Asia session higher. You broke the ZEW numbers earlier, better than expected coming out of that German investor survey. That does seem to have slightly lifted European equities.
And don't forget, Union Bancaire Privé yesterday said to us, we're already in a policy mistake in Europe. Diplomacy is what the world is looking at, and the bond markets are trying to front run. So you've got this rise in yields yesterday by 9 basis points. It continues this morning on the 10-year. You're looking a March higher. We've just had Octavio Marenzi at OpenMess saying, no, this is not a capitulation in bonds. You're going to see significantly higher rates. This is just hopeful anticipation of bulls that believe that you've seen the worst. Stephen Major talking about a capitulation yesterday. JP Morgan, Kalanovic adding 1% to his bond portfolio, adding back, but he's not convinced that the bottom is in. Capitulation is not there. That's the latest line on the bonds. The oil market is rising on the hope that diplomacy from Biden going to Israel, from Putin talking to all of the Middle East leaders will work. The risk is, of course, a global recession. We catch up with our chief economist, Ziad Daoud, in terms of extrapolating the scenarios and the oil prices. But the oil market for the moment up 0.3%. Mizuho say 100 to 120 is not our base case, but it is a growing risk. And then we've already flagged the metals to you, down by 0.7%. You're looking at Citi, you're looking at Goldman Sachs, all getting much more negative. 7,500, heavily skewed to the downside. But Danny, it is about positions, and it's about position shifting from Bank of America and some of the tail risks.
Yeah, I mean, we were just talking to Octavio Morenzi at Opimos, who wouldn't touch duration. This is the risk. This is the top risk from the Bank of America survey. 31% of respondents say that the biggest tail risk is that high inflation keeps central banks more hawkish. Manus, in that environment, it is hard to justify buying the long end. That is a risk that yields continue to move higher.
Yeah, there is the building consensus, Danny, that, of course, the soft landing is in the 59% see a soft landing. Danny.
All right, let's move on to U.S. politics, Manus, because Representative Jim Jordan has picked up critical support in his bid for House Speaker. Joining us now is our very own Kriti Gupta. Kriti, great to talk to you. Great to have you on Bloomberg Brief. All right, Jim Jordan, how close is he to becoming Speaker at this point?
Very close and very far at the same time. And let me explain here. Look, Jim Jordan is the very controversial GOP candidate. He was endorsed by President Trump. His politics are thought of as very, very far right. So on kind of this last Hail Mary that you're seeing from the Republicans, this is kind of their last shot. And he is going around. He's making the concessions, specifically around defense spending, which seem to be, of course, of all the more importance given the Israel-Hamas conflict as well. So he is actually getting close in terms of rallying his support. That being said, it only takes 4 people to vote against him that Hakeem Jeffries, then of the Democratic Party, takes over as Speaker. So again, it's a very slim win if he does win, but on track to get there at the moment.
Pretty good to see a very colourful imagery there, the last Hail Mary. But on a slightly more serious note, of course, he is very pro-defence spending. How will that play into the Israel aid?
Well, I think the number you need to know, Manus, is $3 billion. That's how much annually the U.S. contributes to Israeli defense aid at the moment. The question is how much more. You're already seeing President Biden kind of move some of his actual warships over to the area that is under presidential kind of direction, for lack of a better term. But what you still need is that congressional spending, mostly on the humanitarian side, less on the defense side. And that's where the House Speaker really needs to kind of come to some sort of fruition, because that is the part where you actually need the votes to come through. And again, the Republicans will actually support that bid, given that they are historically pro-defense spending. So that's not really the issue. But again, it is kind of all held up in Congress in a similar way that Ukrainian aid is. The difference is that Israel is actually a close American ally, whereas Ukraine isn't.
Well, in the meantime, you have President Biden, who's set to visit Israel, is set to visit Jordan. Is this about politics? Is this about acting as a broker of sorts? What's the hope that the White House is getting out of this?
Well, the word I've been hearing a lot is deterrent. And the idea here simply being that's not just about Antony Blinken. They're quite literally bringing out the bigger players. And remember, this is the second time that President Biden has visited an active war zone. He did it in Ukraine, in Kyiv as well. And look, he's not just going to Israel. He's going to Jordan as well, where he is going to be meeting the presidents of Egypt and, of course, the Palestinian Authority President Mahmoud Abbas as well. So this isn't just about deterring, although that is a big part of it. A lot of people are saying, a lot of political strategists are saying that the longer there is a U.S. official in the area, the longer the ground offensive will be held off. But again, there is also talk about humanitarian aid, convincing Egypt to take on a more kind of humanitarian approach when they're really hesitating to take on more refugees. Perhaps President Biden is kind of the convincing factor.
Okay, Kriti, thank you very much. And at the same time, you have Putin talking to those Middle East leaders as well, trying to build that narrative around a consensus for some kind of a ceasefire. So it is a real global approach at this juncture. Kriti Gupta covering the very latest on President Biden, his trip to Israel, and of course, the political state of affairs on Capitol Hill. Well, the Secretary of State, Antony Blinken, spoke about the president's agenda in Tel Aviv.
He's coming here at a critical moment for Israel, for the region, and for the world. And he's coming here to do the following. First, the president will reaffirm the United States' solidarity with Israel and our ironclad commitment to its security. Second, President Biden will underscore our crystal clear message to any actor, state or non-state, trying to take advantage of this crisis to attack Israel. Don't.
Message from Antony Blinken to the region. For more on what this war may mean for the global economy, we've brought in our global chief emerging markets economist, Ziad Daoud. He joins us from Dubai. Ziad, good to have you with us. You stepped back and you've tried to break this scenario down into 3 major scenarios. As you look at the world right now, Ziad, how does it look? Because you talk about it from an escalation point of view.
Sure, Manus. So the impact on the global economy from the current conflict in the Middle East depends on how wide the conflict expands. So we mapped out 3 scenarios. The narrowest scenario sees the conflict confined to Israel and Gaza. If that happens, then the human toll will be high. It's already quite high, but the impact on the global economy will be small and minimal. There's another scenario in which the conflict widens to neighboring countries like Lebanon and Syria. If that happens, Manus, then the impact on the global economy would be bigger. Our estimate is that the global economy would lose about $300 billion of output next year. And there is the more extreme scenario, the scenario of a direct conflict between Israel and Iran. If that materializes, then we expect the global economy to go into recession next year.
Ziad, as things stand, which of those 3 seems the most likely?
Well, financial markets are currently pricing somewhere between the first and the second. The latter scenario of a direct conflict between Iran and Israel seems unlikely so far, although it has a big sort of impact. So financial markets, if you look at oil prices, if you look at US bond deals, dollar, stock market, they've all moved in tandem with a contained conflict. We're also seeing political movements in terms of the visit of US Secretary of State, in terms of Biden's upcoming visit to the region, trying to contain the conflict and keep it confined to as narrow as possible. But there is a risk also of the conflict expanding. We've seen skirmish on the borders with Lebanon. We've seen the rhetoric is actually quite running high. So I think out of the 3, the first 2 are the most likely. Maybe the first one is the most likely. But there's a serious risk of it expanding beyond the current borders.
Ziad, you're living in Dubai. You're very familiar with the region. You've been there a long time. So you can give us a very unique perspective. We live in the Americas and in the UK, and we have that mainstream media impact on us. As you sit in the Middle East, what is the viewpoint there on escalation? Are we on very thin ice? Are we on tenterhooks? Is the risk of social unrest rising in the region? We've seen protests.
Everyone's on edge, Manus. This is a very emotional conflict. It hits people. It's very close to people's hearts, and people care about it immensely. The question is, will emotions get better of people and lead to possibly... So no one wants the conflict to expand beyond this current sort of borders. But given how high emotions are running, there is a risk that might happen. If it does happen, Manus, that could have a significant impact on the global economy. We could see oil prices rising significantly. We could see global inflation rising significantly. We could see global interest rates remaining high. And we could see actually the global economy going into recession. So in the worst case scenario, where you have a direct conflict between Iran and Israel, our estimates see global growth slowing by about a whole percentage point. That's $1 trillion of lost output. And that would take global growth to the slowest rate in 4 decades. Obviously, no one wants to see that outcome happening. But given how high emotions are running, there's a risk that might happen.
Yeah, I mean, you see it in the Middle East, you see it globally, you see it in New York. Ziad, the number that caught a lot of attention in this great piece you and the team wrote was that escalation threat resulting in $150 oil. How do you get there? What are the inputs that get us to $150?
Well, the starting point, Danny, is looking how much the region produces in terms of oil. So you have about 1/5 of the global oil supply comes from the region, Iran, Iraq, and the GCC. Now, you might think that some oil fields are at risk, some of them may not be, but you have 1/5 of the global supply comes from that, and a lot of it gets transported through the Strait of Hormuz, which Iran has threatened in the past to close. So even if you don't have attacks on actual oil fields, this oil may not be able to leave the region. So we looked at the historical experience of the 1990-1991 Gulf War, and then oil prices increase by about 75%. If you take this from our starting point, where oil was at $85 per barrel, you add a 75% increase, that could take oil prices to $150 today. That would obviously have a significant impact on the global economy. That would reverse this inflationary impact that we're seeing in the world. That would keep interest rates high, and that would slow global growth significantly.
Okay, Ziad, those are the inputs. Thank you very much. It's a great piece. I encourage everybody to go and catch up on Ziad's piece, along with the economics team, trying to dissect this impact as best they can. Ziad Daoud, our Bloomberg economics team for the Middle East and emerging markets. Coming up, a rare trip abroad for Vladimir Putin. He has arrived in China. He will meet with President Xi, and why the two leaders are having these discussions. We have global tensions rising. Danny, it's worth just checking in on some of the Israeli assets before we pause for thought here. The shekel has had a bruising couple of sessions. We just seem to have paused in that for the moment.
Yeah, first day stronger in 6, worst 6-day sell-off since Jan 2021. This is Bloomberg.
To the world of business. Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew, alongside Kaylee Lines, deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg. Context changes everything.
Kept on blowing up on social media, then having a fight. It just kept on repeating itself. And at the same time, I got an opportunity to fight on ESPN, primetime TV. I said to myself, now imagine if I could do something amazing here. And then I end up knocking the guy out in 30 seconds.
How quick was that?
Which then gets on SportsCenter, top 10. So everything kind of went doom, 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 doom. I would look at these things and hear the stories of other boxers and say how they were taken advantage of.
Right.
I said, well, this is an opportunity where I could become bigger and have my own power, my own voice. So they can't just, take all my money and say that, oh, I did all this for you, I got you here. This kind of gave me, into the driver's seat. And I didn't want to be another story where, these promoters, these managers, they, pretty much screw you. So I was like, I need to do something that could give me some power.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
We see that some people consider it an attempt by the People's Republic of China to put someone under its thumb. But we see otherwise. We just see a desire for cooperation. Our own ideas of the development of the Eurasian Economic Union fully coincide with the Chinese ideas proposed within the framework of the Belt and Road Initiative.
Was the Russian President Vladimir Putin speaking in an interview with the China Media Group ahead of the Belt and Road Forum. Joining Danny and I now is Tom McKenzie. Tom, Putin arrives in Beijing. I think the last time he was there, there's a wonderful line. He committed to a no-limits partnership with Xi Jinping. But why Xi Jinping and Putin? What are they banking on right now in this geopolitical storm that we're living through? Good morning.
Yeah, you're right. They absolutely talked about that no limits partnership just at the time, of course, that Russia was launching its invasion of Ukraine. The dynamics have changed since then, though, Manis. The economic dynamics and the political dynamics. These countries are more enmeshed than they have been economically. So you're seeing, for example, exports from China to Russia have increased by about 57% just this year. In terms of FX trading in Moscow, half of that now is done in yuan. And in terms of China's imports, of course, of fossil fuels from Russia, China is now the largest importer globally for those Russian fuels. Why is Putin on the ground now? To enmesh and further enmesh that economic relationship. He wants to see a new gas pipeline, for example, between Russia and China. And from China's perspective, they need this backing from Russia for their Belt and Road Initiative. It's faced challenges around debt sustainability that are very well known. And he needs that political cover as well. At a time, of course, when we know that the economy of China itself is challenged. That is China's importance in terms of having Putin on the ground. It is a complicated relationship, but it is more enmeshed than it's ever been. But again, at a time for China when they are focused as well on their domestic economic challenges.
Well, on that note, there's still some creditors who say they haven't gotten an interest payment yet from Country Garden. What do we know about what happens next? Do we even know exactly when this deadline is anyway?
Well, we don't have a specific time. The clock is ticking, 17th or 18th, so we're very, very close to that, obviously. It's a debt payment of just $15.4 million US. In the context, Country Garden, once obviously one of the largest property developers in China, has about $9.9 billion US dollar bond-dominated debt that remains outstanding. Its total liabilities, Danny, are about $187 billion US. So it looks like they are going to officially default at some point in the next few hours. The question then is, what does the restructuring look like? What form does it take? If it becomes a messy restructuring, that could prove very problematic for an already under pressure real estate sector. And it also reminds us that the steps that have been taken by Beijing to try and support the property sector have yet to do enough, really, to go the full hog.
And that's the biggest problem for them, isn't it, in terms of these piecemeal, some would say piecemeal and no bazooka in terms of stimulus. Tomorrow, in the next 24 hours, I mean, we're getting nervous because we're going to get GDP, fixed asset investment, retail sales. It's going to be this data dump. A lot of people are saying it could be a call for the bottom of China. What are we expecting?
And to be clear, to that point, Manis, the stimulus measures that have come through, piecemeal as they have been, have done some work, have gone some way to supporting, for example, the manufacturing sector. There are signs that that is starting to turn. Exports out of China has started to moderate, the slowdown there. So there's some examples of where there are possibly, arguably, some green shoots. But you're right, the data tomorrow will give us more clarity on how far that has gone. GDP, for example, for the July to September, that period is expected to come in at around 4.5%. That's below the annual target that Chinese officials set themselves of about 5%. And you're absolutely right, we will need to focus on particularly retail sales. The strength of the Chinese consumer really important as well.
Tom, thank you very much. Also looking forward to see you break down that data on your show, Bloomberg Markets Today. That is Tom McKenzie. Thank you very much. All right, Manis, some breaking news to bring to our viewers. The private equity giant CVC Capital is said to near a kickoff of a mega private equity IPO. This rumor has been swirling around for at least the past year, Manis, but we know the conditions to IPO have not been very good. We, of course, were speaking with earlier this month with KKR's Philip Freise, who said that for those who want to IPO, there might be a window of opportunity coming up. For CVC, according to people familiar, that window might be this coming November.
You know, this is the happiest I've seen you since we launched this show. It's like you just light up as soon as private equity news comes up or anything. I mean, just to put it in context, I know, there you go. $160 billion is what they manage, Danny, and they raised, what, $26 billion back in July. That was the world's biggest ever buyout fund. The valuation is going to be key, because we've seen a lot of IPO flops, but this is a very different beast. It's not a retail, it's not a go shopping, it's not a retail product. This is the absolute guts and bones of finance. So it's valued at, what's the number?
Yeah. $15 billion. At least that's what it was valued when it It's big. Manus, you know why else you should be excited about this? Because CVC was really the first private equity fund to prove that you could invest in sports and make money from it. They did it in F1. See, there's a sports hook in here.
You got it in there. I think the problem is, of course, the Saudis and the Emiratis come along with a much bigger swag bag and they go, yeah, we'll have a bit of that, thanks.
True. All right. Well, looking forward to keeping everyone updated on this one. All right. Coming up first, though, we're going to take a look at some of the market-moving events to watch throughout the day here on Bloomberg Brief.
The younger generations are more, of course, pay more attention to sustainability, and so they are looking at brands that are greener. But you have to make sure you're authentic because they hate greenwashing. But what is very important to remember is that none of them, whether they're young or not, will ever sacrifice product quality and efficacy to sustainability, which is why part of the big transformation of our R&I, where there's this €1 billion we spend every year, most of it is spent on transforming our formulas from petrochemicals to biosourced ingredients and green sciences, but without losing the efficacy.
Our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West, only on Bloomberg Television, your global business authority.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Welcome back to Bloomberg Brief. I'm Danny Berger in London alongside Manus Cranny in New York. Now let's get you set up for your trading day with a look at what's ahead. Bank earnings are going to pick back up. Bank of America and Goldman Sachs report before the U.S. Open. Plus, we'll get results from J&J, Lockheed Martin, and United Airlines. And U.S. retail sales, those hit at 8:30 a.m. Eastern, followed by industrial production figures. Those come at 9:15. Finally, a big day of central bank remarks coming from the Fed's Williams, Bowman, Barkin, and Kashkari, and the ECB's Knott, Centennial, Guindos, Holtzman, and Nagel all speaking later today. Manus, that is certainly a lot to chew on.
That is a lot of speak, isn't it? And just reflect back, 24 hours ago, we had Union Bancaire Privé, we had Kinsella with us saying we're live in a policy mistake. Today, it's going to be all about the banks. Bank of America, Goldman Sachs, they're going to be up before the bell. And I just wonder what that's going to tell us about the flow of money in deposits. We just caught up with Octavio from Optimus, and he's talking about a shift that's yet to come, Danny.
Yeah, he says that, look, he's surprised the deposits haven't come out yet, considering the front end, you can get more than 5%, but it's likely on its way. I want to know, Manus, is anyone going to ask on the Goldman call about DJ Saul turning in his turntables?
Well, all I can say is, having spent a bit of time with David Guetta, from David Solomon to David Guetta, the beaches of Ibiza are obviously now safe again. There you go. I actually envy David Solomon to be, you know what? That's not a bad gig.
No. I was going to say, there's an opening now, Manus, just for you. You can take it. Somewhere in Ibiza, they're looking for a DJ. This is Bloomberg.
Quite curious about why citizens' assemblies actually work. I mean, what is it about them that taps into this collective intelligence and this desire to find a consensus?
One, I think, is because they bring together this diverse group of people that in the best case scenario is actually descriptively representative of the larger population. You maximize what I call the cognitive diversity of the group. You bring poor people, you bring minorities, you bring a lot more women, you bring a lot more, young people. And these perspectives are currently lacking in our parliament. So when you bring that, the richness of perspectives and information that you get is much higher. It's really focused on, okay, we're in it together. We have a problem to solve. How do we solve it?
But you must get shelves at these.
Oh, you do? Of course you do. But the difference is that they're not rewarded for the behavior the way
a politician is rewarded.
On the contrary, it's very interesting because you do have all the human types. So you have the politicians type in those groups. But it doesn't work. You do have also natural leaders that are actually very much respected. They have an influence. Their voice, really carries a lot of weight. But that doesn't mean that they're above the others. The only thing that gives you more weight is if you have a better argument or a better information.
Good morning. This is Bloomberg Surveillance on TV and radio.
Welcome to Bloomberg Markets, China Open.
Good morning, everyone, and welcome to the Pulse.
This is Bloomberg Technology.
And welcome to Balance of Power. This is Bloomberg.
This is Bloomberg.
Let's say that rates are between 4.5 to 5.5, and corporate America is not ready for that.
We're slowly moving away from do we need to raise rates another time or not to how long do we need to hold here.
If you look beneath the surface, things are actually, I would argue, pretty good and getting better.
I'm not surprised that we can get a nice rally if we maintain the status quo.
There's evidence of capitulation in the way the term premium moved. This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, this is Bloomberg Surveillance on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Your equity market negative by 0.1%. Your headline in the last 24 hours. The President of the United States, TK, heading to Israel.
There's no other story today. There's the bank story and the rest of it, the markets and all. But the President of the United States is basically traveling to a war zone.
Two objectives here. One, to prevent the conflict from engulfing the whole region. And two, Lisa, to help develop a plan to get aid into Gaza.
Which is basically one of the key components in all of the diplomatic talks that we've been hearing about with Tony Blinken, Secretary of State. One of the key concerns for all of the different countries in the region. I find it interesting that President Biden is going to be going to Israel and then going to Jordan right after, entering a zone with security issues as well as just strategic issues, how the U.S. is going to influence things.
I'm reading right now the Fromkin on the Turkish War and World War I, and it's amazing the parallels to right now. We are out front with diplomacy. We are jetting around. Somebody said to the Secretary of State, "Where have you been?" He said, "I really can't remember." And it's scary, the shadows to early 1914, as they tried to avoid a war, and they assumed it would be a short war. Now, the parallel's not there, but at the end of the day, it's a war. John, the Daily Mail in London today talks about the tunnel structure of Hamas, 40 feet underground, and maybe as many as 300 tunnels. That's the reality for the Israeli military.
Do you want the list for Secretary Blinken? Jordan, Bahrain, Saudi Arabia, Qatar, UAE, Egypt. As you indicated, he's lost count. The intensity of the diplomacy over the last several days, Tom, has been absolutely amazing to witness, and this uncomfortable tension hanging over the whole of the Middle East, as Lisa, seemingly we all brace for what could be a full ground invasion.
Although it's been delayed, and a lot of people are saying that it probably won't happen when President Biden is in Israel, that they are unlikely to make that ground invasion. That said, what is next? And what's the plan afterwards? And how do you avoid this becoming a conflagration with some pretty fiery words coming out of the Iranian government? And that, I think, is one big concern.
Yeah, that's going to be there. And I get the idea that there's diplomacy and we're going to wait to Biden, but I don't hear enough about the Israeli military, nor should I, because they're not doing this for the media. They're not doing this to send messages. They have to prosecute a war, and you do that in secrecy.
Much more on this throughout this morning on Bloomberg TV and on Bloomberg Radio. Plenty on the markets as well. Equities a little softer on the S&P 500. If you're just joining us, we're negative by 0.2%. Yields a little bit higher by 5 basis points, 475.21. Bank earnings, economic data, Bramo, and a ton of Fed speak all coming up later today.
Will it have any predictable effect on the 10-year yield? We have no idea, because it's been bouncing around like a ping pong ball, and will likely continue to do so. Today, what we are looking for in terms of the economic data, 8:30 a.m., U.S. retail sales for September, really key to try to understand just how much extra powder the American household has to keep fueling this rally. We have seen a deceleration in spending from highly elevated levels. Does that continue, or do we see a sort of leveling off? Fed speakers, they do really come to the fore today, as they have been all week. New York Fed's John Williams, Fed Governor Michelle Bowman, Richmond Fed President Tom Barkin, Minneapolis Fed President Neil Kashkari. What is going to be the message at a time of great uncertainty? I keep going back to this. I mean, what can they possibly say to create more stability in the long end, if that's even what they want, or is this actually what they want? I don't know. And then also we get earnings today. Bank of America and Goldman Sachs coming out this morning before the opening bell, 6:45 a.m. and 7:30 a.m. respectively, about. After the bell, United Airlines and Netflix are earnings in the 4. And that, I think, was going to be one of the key messages. Are earnings going to take precedence over this cloud of uncertainty that seems to be swirling over all the geopolitics?
I saw it and lifted the market yesterday. John, I would notice, first thing I noticed this morning is Euro-Swissy, really an abrupt, strong Swiss franc through 0.95. A lower number is a stronger Swiss franc. Is it germane? No, but finally Swiss franc moving.
I'm focused on Goldman Sachs in the next hour. Headline story, Financial Times. Brahma knows where I'm going.
100%.
According to people with knowledge of the decision, Goldman's chief executive, David Solomon, has decided to stop DJing at high-profile events following criticism that his hobby created a distraction from his work leading the Wall Street firm. Is it a coincidence that this story's come out the night before, the day before we get earnings from Goldman?
Did you see the pushback from Goldman Sachs, where they were saying he hasn't done a high-profile DJing affair for a full year, so stop it already? This is basically, what we should expect. But yes, to your point, how
so
does he
it's not retired, just sort of semi-retired.
Well, how does he?
It's a hobby at home now.
Okay, at home, can you imagine DJing?
Not in the Hamptons, TK.
Yeah, well, the way I look at it is Adam Richard Wiles is breathing easier this morning, and the answer is one day Tania comes to me. And she goes, "This is the Queen of Asia, folks." Tania comes to me and says, "I did it." And I said, "You're interviewing Calvin Harris." Blank stare. I have no idea what's going on. And what a privilege it was to interview Calvin Harris and not have a clue what I was talking about. He's breathing easier today because DJ whatever is not in the game.
Just to be clear, you're referring to our old producer who's called Tanya.
Yeah, Tania, but I'm also referring to Calvin Harris, who's some like DJ guy.
Levels of inside jokes.
Have you seen Calvin Harris?
Yes.
Did you go
sure.
see him?
No, I haven't seen him in
like
real
a stadium.
life. No,
and
I haven't done that. Did the interview go well?
I have no recollection because I was scrambling.
I don't know how we ended up here.
There's like 4 kids in my ears going, ask him about this, ask him about this.
Okay.
You know?
All right, we can reflect on that.
We'll do better with Jonathan Stubbs.
I hope so. Jonathan Stubbs joins us now, equity strategist at Berenberg. Jonathan, good morning to you. Just what is a kangaroo market?
Well, it kind of feels like we're in a sort of everything, everywhere, all at once market, and we go to sort of kangaroo market mode. We wrote about this first this year in April, when we sort of see markets being sort of long uncertainty and risk and short conviction for an extending period of time. And when that happens, we find sort of upside quite hard to make a case for. And we see sort of markets generally heading sideways with a sort of downward bias. And I think there's some very big sort of structural forces which support that at this time in an extending period of kangaroo markets. Historic debt burdens, a historic rise in rates we've seen, and also a historic sort of shift geopolitically that is obviously a key sort of feature of today's world.
So nothing can tame the kangaroo and calm it down. There is a question, though, going forward about what kind of structural aspects you're talking about and how you take advantage of them and not just be susceptible to the jumpiness, which some people really draw parallels back to the 2020 at the peak of the pandemic.
Yeah, I think that's important. This is not an outright bearish call at all. That's 100% right. So we explore the upside persistently, and we've done a lot of work looking at sort of liquidity, looking at earnings, which are the two main supports for upside risk. But find on both counts it hard to make a bullish case for liquidity, which probably needs a macro shock first to come through, or for earnings, which needs a sort of the macro conviction to shift towards recovery mode, which seems at least a couple of quarters off. So I think the sort of the good news support, liquidity or earnings, is quite hard to find. And so we then go into sort of various active strategies, active hedging strategies, we call them. We run a lot of sort of sector pair trades. Some of our sort of core ones over the last few months that we're still running are things like long autos, short luxury in Europe, long energy, short industrials, or short technology as well. These are sort of often quite contrarian. They lean very heavily on valuation, but those are the sort of sector trades that we go into when we sort of see these sort of stickier markets.
Jonathan, I just looked at World War II, and of course, John knows when I do that, I look at the Dow Jones Industrial Average going from about 115 to 180. In World War II, the Dow was up 55%. Do you just assume that the stock market doesn't crater given geopolitical tensions?
Yeah, I think it's hard to draw sort of parallels through different times. I mean, one of the starting points I have today, regardless of what sort of genre of topic we're discussing, is what I call this of the market's MXM score. So when you take the market's multiple, the first M, and the market's margin, and you sort of combine that as a single score, what type of equity market are we looking at? And globally, that MXM score is at the highs of the last 30 years, excluding the post-COVID sort of bubble that we saw. So we're at the highs that we saw in 2000, 2007, start 2020, we're back to those levels, which tells us that from a corporate perspective, valuations and margins are still very high. So it doesn't mean equities can't go up or can't go up a lot over the next sort of few years for whatever reason, but the starting point is quite challenging in the first place. So I'd bring that context into that discussion as well.
What should we look for in earnings? I mean, I know you're taking a more holistic and global look. We're completely focused on bank earnings here today, but what are you looking for in earnings? Is it at the top of the income statement or margins down below?
Yeah, I mean, banks the world over had pretty sort of reasonable to strong support from earnings momentum over the last 6 to 12 months to help them in Europe, in particular, to be one of the leading sectors over the last sort of 2 quarters. More broadly, when I look at earnings, the first thing I think of, and we've talked about this briefly before, is what is the nominal growth opportunity that the global economy is giving companies? That's kind of the main feed for sales growth and revenue growth. And this year in the US, in Europe, nominal growth is going to exceed 6%. Next year, economists think it's going to be below 4%. So if we go from this year to next year, we've got sort of a 250 basis points drop in sort of nominal growth in US and Europe. And I think to start with, that introduces some headwind into the corporate sector. The second line, very briefly, is a lot of the sort of lead indicators, both sides of the pond, continue to suggest headwinds for earnings and margins as we go into next year. So this is part of the debate that goes into, can we build a strong support for earnings recovery into 24? I think it's premature to do that at this stage.
Jonathan, when do stocks become highly susceptible to bond yields in a way that perhaps is a driving force?
Yeah, we've written a couple of notes on that recently, and we've seen a historic drawdown in bonds. If you look at sort of 30-year US, 30-year UK, I mean, we're sort of almost 60% down from peak levels there. So we've seen some very aggressive losses for institutions around the world coming through supposed to be risk-free asset classes. What that's done to the equity relationship is, if you take the US, for example, the NASDAQ or the S&P offered investors a 500 basis point yield pickup by owning NASDAQ or S&P from a free cash flow yield perspective relative to risk-free, relative to 2-year, pre-COVID and post-GFC. Now that's down to flat, so zero for the S&P and minus 200 for NASDAQ. So again, the starting point for capital or a dollar coming to the market, it now has a competitive spread of asset classes from credit to sovereigns to equity to gather that yield. So equity will have less of an exclusive call on capital coming to the market. Effectively, the free ride is over. Again, it doesn't mean equities can't go up, but the free ride that equity markets enjoyed for much of the last of 10, 15 years, it seems to have come to an end.
The easy money. I wish someone had told us it was easy at the time, John, because at times it didn't feel easy at all. Jonathan Stubbs there of Berenberg. That phrase frustrates a lot of people, Bramo, the easy money. Did it feel easy?
Has it ever felt easy?
It never feels easy.
No, and especially right now. But I would argue that a lot of people were calling for the end of the world, frankly, when we were full of low rates and saying that it was going to create bubbles and it was all going to come down crashing. No. Hey, pipe down over there.
Let's talk about what hasn't been easy.
Let's do that.
This year, to bank stocks. You strip out JP Morgan. Bank of America's down almost 20% year to date. Goldman's down a little more than 8% year to date. This hour, B of A earnings. Next hour, Tom, Goldman.
We can't say this enough. John, I looked yesterday at a representative small bank. It was a bank around the corner from the $1 Million Cowboy Bar in Jackson Hole. I looked at a regional bank that my family's somewhat related to. They have a stadium out there in the Midwest named after them. And I looked at JP Morgan, and OMG, are we deluded by what we see from Fortress Diamond and Park Avenue? We got to mention this more and more. It's been carnage.
Well, to build on that, how much are the Jamie Dimons of the world getting more and more separate from the regional banks that you talk about? The divergence just simply growing as the haves
and the
separate
technological divergence. Everybody go 1, 2, 3. E.F. Hutton. The technology lead of these banks is extraordinary.
The relative underperformance of everyone else versus JP Morgan has been amazing to see this year. Coming up, Thomas Show, the KBW CEO from New York City this morning. Good morning.
Through the noise.
Forget the noise, ignore the noise.
Is this just going to be noise?
Just noise.
It's noise versus signal.
Now, more to the point.
What is the lesson or the observation?
markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays. Thursday, the Economic Club of New York hosts a conversation between Fed Chair Jay Powell and Bloomberg Wall Street Week's David Weston. Recession risk, inflation outlook, real estate amid high rates, and more. The live interview happens October 19th at 12 p.m. Eastern on Bloomberg. Context changes everything.
On Wednesday, President Biden will visit Israel. He's coming here at a critical moment for Israel, for the region, and for the world. First, the President will reaffirm the United States' solidarity with Israel and our ironclad commitment to its security. Second, President Biden will underscore our crystal clear message to any actor, state or non-state, trying to take advantage of this crisis to attack Israel. Don't.
The President of the United States is heading towards another war zone. Antony Blinken, the U.S. Secretary of State, speaking in Tel Aviv. Live from New York City this morning. Good morning. Welcome to the program. Busy 36 hours coming up. Your equity market on the S&P negative here by 0.2% on the S&P 500. As Bramo indicated, the next day or so looks a little something like this. This hour, Bank of America. Next hour, Goldman. Tomorrow, Morgan Stanley. Then after the bout tomorrow, TK, things start to pick up with Netflix after the close. It's tech just around the corner.
Tech on to Apple. I believe it's November 2 after that Fed meeting, and it's going to be critical. And it's just very, very importantly, John, you've got Apple, the mystery, that Bloomberg article yesterday, OMG, iPhone sales are slower in China. And the stock really didn't, react. I mean, I don't know what to say. It's going to be, to me, it's a complete mystery.
Well, Mandeep Singh, I caught up with Mandeep Singh over at Bloomberg Intelligence, and he said it's too early to really tell what's happening with the iPhone for Apple in places like China. We're talking about data that backs up 17 days. Got to talk about a whole quarter. But if that weakness is pronounced, Tom, I'd go straight to the idea, what is it? Is it weaker consumer sales trends? Or two, is it competition in China? Now, TK, if it's competition, even if you get a rebound in the country and the economy, that competition could be real. And we'll find out if it is in a few months' time.
We're going to find that out, and it's going to be interesting to see Lisa leading our coverage there on earnings season as it is. Later today, I'll have the honor of speaking to Admiral James Stavridis and all of his experience with NATO and with the United States Navy. A few years ago, was my book of the summer, I believe, was 2034, which was a gentleman from the Navy and a gentleman from the Marines. Elliot Ackerman is U.S. Marine Corps veteran, former White House fellow, and of course the wonderful must-read 2034 about the South China Sea. Elliot, the reality here is many pontificate, many talk. For example, at the 1st Battalion, 8th Marines right now, if they were in Gaza, what would your regiment be doing?
Well, we fought in Fallujah, and right before that battle, we were basically dug into slit trenches on the outside of the city in the rain, just waiting to get the order to go in and launch the assault. So I assume there are, many groups and regiments of Israeli soldiers and infantrymen who are sitting in the exact same position right now, just waiting to get the order to go into Gaza.
What would you think is the plan? And I say this listening to Ben Hodges, General of the Marines, or Mark Kimmett as well, their fear of urban warfare. So what will be different here from your experience in Afghanistan and in Fallujah?
It's tough to overemphasize how costly and gritty urban combat is and how much it takes away whatever technological advantage that you might have. I mean, this is the type of combat that is fought room to room, house to house, block to block. The analogy I would say is it's the equivalent of being in a knife fight in a telephone booth. Very, very close quarters. And that is the type of fighting we will see in the weeks and months ahead in Gaza if the Israelis launch a significant ground assault.
There's been some discussion that the Israeli army has held off on that ground incursion for a number of reasons, whether it's weather, whether it's conditions, whether it's prepping, but also that ultimately they may not. They may choose some other means. They were hinting at that overnight. Do you think that that is a likelihood? Do you see another way other than what you just laid out?
Well, there's certainly a logic behind it. Hamas knew what they were doing when they launched these attacks, and so much as that these attacks were designed to be a provocation. And the most obvious move would be for the Israelis to go into Gaza. And Hamas knows that once the Israelis go into Gaza and that battle begins, immediately, and I think quite quickly, political support internationally for the Israelis is going to begin to wane, because the images that are going to come out of Gaza are just going to be as brutal as anything you can imagine. So the question that's obviously posed to the Israelis is, how do we accomplish our objectives, which is the degradation of Hamas, without being baited into this really brutal urban fight inside of Gaza? And I'm certain that Israel's leaders are, weighing that and looking for other alternatives of how do you degrade Hamas without having to fight this battle. And if they feel that they can find that through limited strikes, by degrading Hamas's leadership, or by some of these raids we've already seen at the outskirts of Gaza, they're going to take full advantage of that. And we're just going to have to wait to see what they do in the days ahead.
A lot of people have described this as essentially another proxy war between Iran and the U.S., between Iran and Israel, and see that as the sort of big question mark. When does Hezbollah get involved? We've seen sort of some of the overnight tit for tat one day after another. How do you understand when that's become a full-blown new front to this war?
That goes to the purpose of the president's visit. The purpose of the deployment of 2 U.S. carrier battle groups to the region is to provide a very, very strong deterrence against Iran launching a broader war from the north with Hezbollah. So I think right now what you're seeing is Hezbollah and the Iranians are testing the type of response they'll get not only from the Israelis, but from the West. And I think thus far, we've provided a pretty resolute response. But that is obviously the big question, is how much does this war become a contagion in the region?
Elliot, without your experience, it's hard to understand how meaningful some of these headlines that come through actually are. Allow me to share this with you from the Wall Street Journal. According to U.S. defense officials, the U.S. military has selected roughly 2,000 troops to prepare for a potential deployment to support Israel. I should add that in the story, they say the troops are tasked with missions like advising and medical support. They're from across the U.S. Armed Services. They aren't intended to serve in a combat role. No inventory have been put on a prepare to deploy order. Elliot, from your perspective, with your experience, how meaningful is a story like that one?
Israel is one of the United States' closest allies. We already have cross-military partnerships with them. So I think this is really just an effort to bolster those partnerships. I would be very surprised if you saw any type of meaningful deployment of U.S. combat troops into Israel, because one of the things that the Israelis have been known for decades, really since the founding of the nation, is that among our allies, they are a country that does their own fighting. They do it for themselves. They're not reliant on the U.S. But that being said, we provide them with equipment and resources, and I would imagine many of those troops are going to be just enablers as the Israeli military gears up for a very, very large-scale operation.
How risky would it be to put U.S. personnel on the ground in Israel, given the conflict that you expect to materialize?
Well, if the U.S. did do this, and again, I doubt that we would, at least in the near term, given current conditions, it's a significant escalation, because then you do start getting into real wars by proxy, and you could see a response from the Iranians by putting in their own trainers inside of the conflict as well, whether those are Hezbollah fighters or members of the Iranian Revolutionary Guard and Quds Force.
Elliot Ackerman, thank you, sir. Let's catch up again soon. Always fantastic to hear from you. Marine Corps veteran, Elliot Ackerman. I should add, in that story, they also say this, Tom, it's unclear under what circumstances the US would deploy the troops or to where, but the Pentagon decision signaled it is preparing to support Israeli troops should Israel launch a ground incursion into Gaza. That's about all the detail we've got at the moment.
I don't think there's not much detail there, and the answer is logistics and moving stuff around and maybe intelligence as well. I really can't say enough about everybody pontificating now. I'm as guilty of this as anyone, John. And people like Mr. Ackerman, who, this is a key phrase, served multiple times. This is not some guy that dashed into combat and once got a ribbon and dashed out. It's 1, 2, and 3, and 4 efforts of high combat battle the kind of experience we need to listen to now.
We've got to lean on the experience of those individuals to try and get some clarity on some of the headlines that are coming through over the last week or so. Busy morning for you. We're going to turn to the economic data in a couple of hours. Retail sales just around the corner. Sarah Hewen of Standard Chartered is going to break that down for us. Then a little bit later, this hour, 20 minutes away, you'll get earnings from Bank of America. Next hour, Goldman Sachs, your equity market, negative 0.2% from New York. This is Bloomberg.
That's me, Max. What's up? How are you? I have been writing about Wall Street for almost 15 years. And what that means is I write about feuds and rage and rises and falls and comebacks. And every now and then, I also write about a couple of villains. Thank you so much. And now, I am about to do something new and very, very scary. We are making a show, and it's based on Bloomberg Businessweek magazine. So what is this show about? It's a show about money, power, culture, pop business. We're gonna ask complicated and profound people about their ideas, their careers, their lives, their risks, their failures, their imagination.
It's so incredibly liberating not to care what other people think.
I was giving my tools to other communities. I wanted to bring those tools home.
Tune in. Please, really actually tune in. I desperately need an audience.
The top names in business are on Bloomberg.
I see a world where financial conditions have gotten tighter, and the transition mechanism, which the Fed would like to see in slowing down the economy, which we all expected, it's taken a lot longer. So the real impact of higher costs around the globe, in the US and Western Europe, it's not been felt yet. And so when people say, well, we're going to have a soft landing, I'm skeptical.
Nobody covers business like Bloomberg. Context changes everything.
Coming off the best day of gains on the S&P 500 in about 10 days yesterday. Decent day of gains on the S&P and the Nasdaq too. Futures look like this. We're negative by 0.2% on the S&P. We're down by about 0.24% on the Nasdaq. Yesterday's gains, even with a sizable move higher on bond yields. Your Treasury market right now, 2-year, 10-year, 30-year looks like this. 30-year up by 6 basis points, back through 490. Over the last week, the smallest move on a 30-year yield in either direction has been the almost 10 basis points higher we saw yesterday. Tom, can you believe that? The almost 10 basis point higher move yesterday was the smallest move we've had on a closing basis on a 30-year. over the past week.
But we're grinding, and it's not even a grind, it's more dramatic than that, out to a 476 10-year yield. You put another couple days of this together, and it's interesting. I'm going to correlate, John, your yield observation, which I think is dead on, with what I see with Swiss franc strength, and I would bring it over to EM currency weakness. I take the ratio of, John, too much math, ratio of the percentage change of the BBDXY versus the DXY. So it's basically blended EM added, China added currency versus DXY, and it shows the emerging market nicely weaker here. It's like a Damien Sassower.
I'll try and make it simple. Dollar a little bit stronger this morning.
Well, not only dollar a little bit stronger, but major partners a little bit stronger.
Just in case you lost anyone, that's all. I'm just here to make it simple as I possibly can.
Oh, here's Sassower. Oh, I lost Damien
Let's go
Sassower.
through the rest of fixed income. 2-year, 10-year. 2-year, sneaking back through 5.1%. It's up by a basis point this morning. For most people, the Fed's put a lid on the front end, all the flexibility, all the larger moves, Lisa, down at the long end. And Bramo, you see that again this morning with a 10-year at 476.
Which is the reason why I do wonder what the Fed speakers are really going to tell us with all of them lined up, because right now people have faith that they're going to pin the front end. They're not going to move that quickly. It's really the long end. And do they really have control? I don't know, but we are seeing volatility, unlike what we've seen since March of 2020.
Retail sales 2 hours away. I want to finish on crude, WTI and Brent. This story came out yesterday. It's not been talked about enough. Venezuela's government will resume talks with the US-backed opposition, which could potentially clear a path for the administration here in America to ease some sanctions on Venezuela, including, Lisa, drum roll, guess what? Oil production.
If someone were skeptical, just saying theoretically, if someone were skeptical, this is coming at a time where there are a lot of questions about if there are tensions that erupt in the Middle East and there are some curtailed supplies. Where will the U.S. get some potential, peripherally supplies? Excuse me, I'll get it out. I'm dealing with a Tom Kane pronunciation morning, but this is going to be the
wrong side of the table. Move over here. It gets worse.
Thank you. Wrong as tea case.
Okay, what is her problem
Javier
today?
Talked
Please
about
help
pressure
me.
valve. Javier talked about a pressure valve, and he said there's been 3 levers that this administration's been able to pull. Drain the SPR, 1, done that. 2, have a cozier relationship, maybe on a relative basis with Iran. Attempted to do that. That's broke down. So option 3, potentially ease sanctions, Tom, on Venezuelan crude. It's the latest in the last 24 hours.
And frankly, at IMF in Morocco, this was there. The ESG climate was suppressed. It was there. It was visible, but boy, was it changed from previous meetings. The answer, some would say, is just go out and find more oil.
Brent crude right now, just south of 90, positive on the session, 89.87. Under surveillance this morning, President Biden traveling to Israel on Wednesday in a show of solidarity amid the country's war with Hamas. Secretary of State Antony Blinken brokering the trip after days of shuttle diplomacy in the region. Biden will also travel to Jordan later this week, making it the president's second trip, Lisa, the second trip to a war zone after going to Ukraine earlier this year.
There are a lot of questions around this. First of all, what kind of security would be required to have a sitting U.S. president go to a war zone and then go to Jordan, the neighbor next door? But number 2, does this reflect a certain feeling of franticness in the administration, that they're running out of daylight, they're running out of time to prevent a wider altercation? I mean, all of the different nations that Tony Blinken visited, it was 4 in one day, I believe, at one point. Is he making headway? Can we get a sense that maybe this is the last show of resolve and support to try to stave off a broader altercation?
Big trip for the president coming up tomorrow. Let's turn to the rest in Washington, D.C. Here's the other piece of news. Congressman Jim Jordan of Ohio looking to become the next Speaker of the House with a vote at noon today. Jordan emerging as a front runner after Majority Leader Scalise withdrew his bid last week. Jordan expected to move forward with today's vote despite holdouts in his own party. He can lose no more than 4 votes against United Democrats. TK, are we actually going to get this done a little bit later?
I did the math. I think I was on an airplane somewhere, and I actually did 4 divided by 200, whatever it is, and I came up with he's got a 1.8% margin of bodies. This is a razor-thin whipping.
TK.
It's not 4%. With McCarthy, it was 4%. With Jordan, the math works out to 1.8%. It's much thinner margin.
But peer pressure is an amazing thing, and that seems to be what we are hearing about within the Republican caucus.
Peer pressure. School.
I mean,
but the summary of this, seriously, the summary of this is the gentleman from Ohio had a good day yesterday. That's the basic summary. he moved the needle a little bit.
Getting closer. We'll see what happens down in Washington a little bit later. On Wall Street, bank earnings continue with Bank of America reporting perhaps in the next 15 minutes or so. Next out, Goldman Sachs, expecting those numbers around 7:30 Eastern Time. JP Morgan, Citi, Wells Fargo, all reporting better than estimated results just last week. If you're looking for Morgan Stanley, they'll round out the earnings for the big banks tomorrow. TK?
I don't have any wisdom on this other than what a shock. JP Morgan did well. There's some concerns here. Bank of America, bonds, Goldman Sachs, Marcus, and a whole host of other things.
B of A has been bullied by the Treasury market.
Yeah, that nicely said.
I've asked this question a few times of bank analysts. What would it take, Lisa, to get Bank of America out of the penalty box other than a big bond market rally?
I don't know, because from a fundamental perspective, they've been doing pretty well. If they come out and show the same kind of record net interest income, that they're actually having better performance of their loans than people expected, is that enough? I don't know. We haven't seen amazing things from stocks, even JP Morgan, after they outperformed dramatically.
JP Morgan, up on the year by about 10%. Everything else, Tom, down, down, down. B of A, Goldman, Morgan Stanley, Citi, all negative by close to double digits for the year so far.
And what I'm going to do, and you're going to hear this when the earnings come out with our vast knowledge here, is to look at the book value, John. I'm doing it right now on the Bloomberg Professional Service. And John, you can do this with a book value at JP Morgan of 1.5 and a book value at Bank of America of 0.8. It's basically trading, Fortress Moynihan is trading at near half the value of Fortress Diamond.
How does Moynihan close that spread?
Work?
Don't know. It's a question for the analysts later on this morning.
Let's move forward here before we get ready for Bank of America and to give Global Wall Street our analysis of that. Sarah Hewen joins head of Europe and America's research at Standard Charter, noted for really wonderful, elegiac, and thoughtful notes. I love your phrase for Europe and maybe arguably for the world of nascent disinflation. That perfectly captures the uncertainty out there right now. What are you looking for in the coming days where nascent disinflation becomes a true vector of disinflation?
Yeah, we've seen a lot of ambivalent data, and I think in particular different focus in the US compared to Europe. So in the US, we've had a mix of inflation data. Goods prices are falling, import prices are falling. Average earnings growth has come in low for a couple of months now. So this is all very positive, but we're seeing a pickup in shelter costs, a pickup in non-shelter services costs, and that's something that policymakers are going to be keeping a close eye on. I think across here in Europe, it's a different concern. UK, obviously, our average hourly, weekly earnings growth is still very high. Bank of England doesn't seem to be too stressed by that. They're looking at a range of indicators for the labour market, which I think they read as pointing to softness over the coming months. But 7.8% wage earnings growth is still high. Similarly, in Europe, recession looks to be the theme, but wage earnings growth is still too high for the ECB.
For our American audience, Sarah, let's do Hewen 101, which is the real economy of Germany, very weak. We all know the story. Do you extrapolate that out across the entire continent, or is it discrete to Germany?
There are particular features that are affecting the German economy at the moment. The weak trade environment, of course, for Germany. Trade is an important driver of growth. The nature of the slowdown in trade as well, which particularly affects Germany. But there are other features which are more common to Europe as a whole. Tighter financing conditions. We've seen the long end rise of yields, and that's really compounding the policy tightening that's been taking place over the past year or so. Generally softer sentiment. The good news, of course, has been on energy prices, but we've seen gas prices backing up again and still somewhat higher than they were before Russia's invasion of Ukraine. So there are some very, features in common. Some economies are much more reliant upon imported energy. Others can rely more on domestically generated energy. So those are the sorts of differentials that we're looking at. For Germany, energy-driven industry is a big deal.
That's on the European side. On the U.S. side, it seems like everyone is completely divorced from those trends, basically saying, but we just keep spending. And we're going to get retail sales in a little less than 2 hours' time. We're also going to get Bank of America earnings in about 5 minutes' time, which will also give some light. Is there going to continue to be this resilience as people do what they do best in the U.S., which is shopping therapy?
Well, the resilience, I think, has taken a lot of us by surprise, and there seems to be a story of drawing on savings that were built up during the pandemic. So if we make if we look at what's happened to savings, the drawdown in savings, that cushion seems to be disappearing, particularly for lower income households. At the same time, we're seeing high debt servicing costs. It's just the very early signs of debt distress at the margins. All of this together would suggest that consumers are going to be reining back their spending. At the same time, though, inflation coming down, earnings growth is still a little bit higher than inflation. So in real terms, wages are rising. That is supportive, and as long as the labour market is holding up well, though all the signs point to a strong labour market still, it's difficult to imagine that the U.S. consumer is going to stop spending.
So does that mean that the U.S. can continue to outperform Europe well into next year?
It certainly feels that way. We do expect that there is going to be a slowdown in the US, but it may take longer to come through, whereas in Europe, certainly in the Euro area, certainly in Germany, we're seeing very clear signs of quite a dramatic slowdown at the moment.
Sarah, thank you. Sarah Hewen of Standard Chartered. As we start to see evidence of that slowdown, guess what? America's getting back to the office. The latest headlines from the Census Bureau Household Pulse survey reads as follows. Fewer than 26% of US households still have someone working remotely at least one day a week. The pandemic peak, 37%. The data for state to state, Connecticut's work from home rate has fallen to 28%. The peak in 2021, 46%. 46%. That has come down dramatically.
Well, and it makes sense because right now you've got a lot of people who are saying get back to the office, and you have other people saying, well, you're just bankers and you have a lot of commercial real estate investments and you want to prop them up. But other people are saying, no, actually, people are more effective in the office. It's been a battle, and workers are definitely losing some of the upper hand when it comes to, staying at home.
Maybe there's a trend there, but Nicholas Booth wrote at length on this yesterday or the day before, and I'm just completely ambivalent. My head is spinning for wise things to say about where we are 1 year or 3 years, John, or 5 years. What I can say is I did not sense this in London. I didn't sense work from home in London like I do here.
Well, you did choose select hotels that maybe didn't experience the country in quite
the
same way.
I was, well, you were on the Cotswolds, is that how you pronounce it?
The Cotswolds, yeah. I wasn't there, but I wish I was.
Yeah, but...
now, too. I want to share this stat with you, Tom. Average ridership along the Metro North train lines that link the state to New York City and the offices has risen to a peak of about 70% versus pre-pandemic levels. It was 20% back in 2021. That's nuts.
Yeah, Paul Sweeney is genius on this, and he said this Monday, 24 hours ago, was a sea change at 59th Street in Lexington.
Bank of America numbers just crossing a Bloomberg. We'll bring you them next from New York City this morning. Good morning.
I think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, that catches everybody's attention.
As time went on, their ideas got weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
So, Mark.
Are you in? I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
is Daybreak Europe. I'm Kriti Gupta. Let's get to the stories that set your agenda.
Taking you from the U.S. market's close
A lot of this was priced into the U.S. session.
to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg. Context changes everything.
Numbers from Bank of America just crossing a Bloomberg terminal. The numbers look like this. It's an upside surprise after an upside surprise. If you're looking at things like third quarter trading revenue, that comes in better than expected. Investment banking revenue over at Bank of America, that comes in better than expected. If you're looking at net interest income for the third quarter, that comes in better than expected. The stock just a little bit higher by 0.2%. Some commentary from Brian Moynihan here, Lisa, the Bank of America chief executive. The consumer is starting to slow. Describes the third quarter as healthy but slowing. A healthy but slowing economy, Lisa, for Bank of America. That stock up by 0.2%.
What do we do with this? You know, people, traders, all of us like some drama, like either things are great or things are terrible. Not this muddle through. I mean, U.S. consumer spending, Moynihan was also saying, is still ahead of last year. So it's not as though we're slowing from a low place. It's not like we're heading toward recession. So how do people deal with slowing but still solid growth at a time when their revenues are increasing, at a time where their deposits are increasing, coming in higher than expected, at a time when they're still able to lend?
To your point, what are we going back to? B of A, the stock just a little bit firmer in early trading in the pre-market. TK, here's a number for IB revenue, 1.19 billion. The estimate, 1.11. Just a series of small beats here.
Yeah, that's exactly what I was going to say. I look at each headline and I'm like, small beat. Maybe it's being managed, but the gloom, not the gloom, but the angst that's been out there, maybe at least now on first blush has been pushed aside.
To Lisa's point on the consumer, Tom, consumer spending still ahead of last year. Things are healthy but slowing. What is the takeaway that you take from the banks we've heard from so far? B of A, JP Morgan last week.
My take is the banks are not homogenous right now, and I'm as guilty of this as anyone. I'm looking at 6 banks and going, this is the industry, and it's just baloney. There's a whole industry out there troubled.
My take is they don't know either. And they're trying to massage a message at a time where they're banking record net interest income. Bank of America third quarter net interest income, $14.53 billion versus the expectation of $14.2 billion. Yes, small beats, but beats nonetheless. So slowing, things aren't going to be perfect, but maybe kind of confirming the soft landing.
And provision for credit losses, kind of in line with what we heard from a series of banks last week, including JP Morgan. Provision for credit losses, 1.23 billion. The estimate, 1.3. That's why you don't want an upside surprise, Tom. More provisions for credit losses. If you're really worried about the future, that's where it would show up.
I'm worried about the next quarter. I said that yesterday. I think this quarter is a breathing quarter, and you wonder about the bond market debacle. You wonder, and I think we'll see that in 90 days.
I don't think they can offer much clarity on 2024 at all.
Exactly.
This is like where we are right now. These are the risks, and this is the trend.
Yeah. What we're going to do is dive into this, and we have the perfect guest for you as well. I'm going to do a little math right now because Michaud will stick on the set if I do. Long ago and far away, up Route 7 in a bar in Vermont, Tom Michaud looked at logarithms, and he actually understands it's about relative change of where you are in history. He's the chief executive officer of Keefe, Bruyette & Woods. It is a Stiefel company with KBW, and you know the acclaimed BKX index. I just looked at Bank of America. I went back to 2009, the gloom of 2009, and Fortress Moynihan is down 1.3-ish standard deviations on a log chart, which is where it's been before. Is it the buy of a lifetime because over 15 years we're where we are now in gloom?
There's an incredible amount of bad news in these stocks. You just mentioned one measure where these stocks look like, bank stocks look like they're off the charts. I could offer up several more. relative PE ratio to the overall market is near a multi-decade low. But the one we published this weekend that got our attention the most is when you look at valuation to PPNR, pre-tax, pre-provision net revenue, so where you're taking out the credit expenses, you just look at the core business. During the global financial crisis, the bank stocks trade between 4 and 5 times that number. We're currently trading at 5.5 times right now. So we've got that type of proportion in it. Meanwhile, JP Morgan this quarter earned 20 on tangible common equity. The results we're seeing in all these big banks are low double digits. They're handling the current environment very well. There is a slowdown underway. There's no question about that. But my view is if you don't get the worst case scenario in terms of what plays out, these stocks have 35, 40% upside in them at some point.
Look at that
We're not there yet.
analyst, Thomas Showed.
No, that's my feeling.
Significant underperformance of everyone else versus one name, JP Morgan. Is that just First Republic? What is that? Where's that outperformance come from?
They've just done a great job of picking up market share.
30
and they've got
points worth of good job over Bank of America?
Correct. And look, they have been performing the best. Now, we are not recommending the stock relative to the others that we like because we think the valuation gap is too large. But they've done a good job. But I think the whole industry, by and large, has done a good job. But something Tom said earlier, which I think is right, all banks, though, are not created equal. I personally believe there are 3 types of banks in America. There are the universal banks, which we're talking about right now. There are the community banks, which are $10 billion and under, which, by the way, are 97% of the industry. Then you've got about 115 mid-cap banks in the nation that are between $10 billion and the top 25. Each one of them has a slightly different flight path to their fundamentals, and after the next couple of days, we're going to start getting the regional banks, which are going to probably have a little more pressure on them from spread income than the bigger banks.
And we saw that with PNC. The spread income is a nice way of saying they have to pay their depositors a lot more than a JP Morgan or a Bank of America does. And so they basically can't capture that delta for record net interest income. How much is this going to render their business model obsolete and really push the division between big and small that much wider?
I think the division between big and small has a chance to grow because all this new regulation that's coming, scale is a way to help you pay for it. I hear throughout the industry, well, we're going to have to cut expenses to pay for a lot of this additional regulation. Meanwhile, you've got non-banks who don't have this regulation who are competing more efficiently. And I like to look at the mortgage market for that one. Not one of the top 5 mortgage originators today is a bank, and non-banks make 60% of the mortgages in America. You would think a home mortgage would be the epicenter of banking. Banks are fully capable of doing it, but they're required to hold too much capital against it, which has pushed them out of the market from a competitive standpoint.
I'm looking at a chart of your Keefe Bruyette and Woods index, and I can say we've never been here from 09. We are solidly out, almost 3 standard deviations on a buy of a lifetime. You got a PE off the Bloomberg on BKX of 7.82. I get that it's cheap. I get it's a value. Give me a catalyst. And to me, it's the bank zombie roll-up. When do the mergers happen so you get a payday?
Well, I'll tell you, the industry does need to consolidate. That's a way to make itself healthier, I believe. And typically, you don't see a lot of M&A activity when the economy's on the cusp of a possible recession or when stocks are really volatile. Both those conditions are right now, and I think they will ease. The other aspect is that in the last 2.5 years, the amount of time it takes to get a healthy bank merger approved has doubled. So there's sort of a little bit of a project out of Washington to slow this down, even though I think if you don't do anything, the biggest banks will get bigger faster, and it will actually make the problem worse, in my opinion. What we really need is we need strong mid-sized banks that are able to compete with the big banks, and that won't happen if you don't allow them to buy other banks.
Can you share that number with us again? Not one of the top 5 mortgage originators at banks. Is that what you said?
Yeah. Not one of the top 5 mortgage originators in the United States is a bank. And if you go back about 6 or 7 years ago, 3 of them were.
That's amazing.
And over 60% of the mortgages made in America are made by non-banks. So, and think about why a bank was started. go back 100 years, is to help people buy their homes. And they would love to do it. But the mortgage servicing asset, which is where all the value is in a mortgage creation, can't be kept on a balance sheet because the regulators changed the rules. That's why the industry is fighting back so hard on these recent proposals, because they will have consequences and they will push banks out of certain businesses, which will just go outside the regulated world.
Do you see the same trends in commercial real estate, or is this just residential?
Well, commercial real estate's already had big non-bank players. And you know, what's interesting is that everybody agrees. We've done some great research. I've talked to you all about it. We think there's 30% downside in large city, large building valuations. Yet, a lot of that's not in the banking industry. Some of it is. You know, I think a big talk of this past week has been Wells Fargo, which put an 11% loan loss reserve on that portfolio, and that's a number. It's gotten all of our attention, but that's not really where the regular regional bank is making a loan. They're not making big loans on downtown. A lot of that is in the insurance industry as well as in the non-banks. That's where the growth has been.
It's good to hear from you.
But I will tell you, there's a...
Gotta go.
Yeah, real quick. So the next couple of quarters are going to be soggy for the industry. I think more than that is priced into the stocks. The stocks are pricing in something worse. If that doesn't happen, that's how you make a lot of money.
Do you want to take us a break as well? You can read the teas if you want. Tom, it's good to see you.
Thank
on the
you.
show. KBW. I have got to go. Equities right now on the S&P, negative 0.2%. Bank of America, just a little firmer.
So many people say the only way to really deal with climate change is kind of eliminate oil and gas and then have more clean energy. Is it realistic to eliminate oil and gas in the foreseeable future?
You actually have to at least mitigate it. I think you have to bring a lot of it down and replace a lot of it, but you also have to, you can also have a huge impact by trying to do things like carbon capture and so forth, right, and around it. And it's going to take both approaches. Even today, greater than 80+% of the way the world operates around energy right now is still fossil fuels, you know, when you kind of look at it. And probably what's more striking is the fact that the demand for it is going up every year.
Things like solar or wind, it's nice and environmentally friendly, but really it's not going to produce enough energy to really replace oil and gas in my lifetime, I assume, right?
Well, not by itself. So let me just say, solar and wind are critical components. You need, this is going to be sort of a collective effort with a lot of different technologies that are each going to come in and take their piece. What we do at Breakthrough, we look at technologies that could produce half a gigaton, remove half a gigaton of carbon a year. And the way to think about that number is we have to remove, say, 100 half a gigatons, you know, a year in terms of what we have to replace.
The top names in business are on Bloomberg.
The market is starting to look over the Fed's moves into falling interest rates.
We actually think that core inflation is going to fall a little faster than the Fed expects, and that will allow them to start cutting rates by March of next year.
You get a price spiral when labor markets are tight. In manufacturing, labor markets are still very tight right now in the US.
Nobody covers business like Bloomberg. Context changes everything. To the world of business. Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg. Context changes everything.
say that rates are between 4.5 to 5.5, and corporate America is not ready for that.
We're slowly moving away from do we need to raise rates another time or not to how long do we need to hold here.
If you look beneath the surface, things are actually, I would argue, pretty good and getting better.
I'm not surprised that we can get a nice rally if we maintain the status quo.
There's evidence of capitulation in the way the term premium moved.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Live from New York City this morning. Good morning for our audience worldwide. This is Bloomberg Surveillance on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Your equity market negative by 0.2% on the S&P. Big hour for earnings on Wall Street. Bank of America just behind us. Goldman Sachs 30 minutes away. The latest from B of A. Trading revenue, a beat. Net interest income, a beat. If you're looking at revenue elsewhere, Tom, better than expected. And if you're looking at provision for credit losses, a little better than expected there as well. Their stock is up by 0.75%.
I agree. Everything's sliced dice, pretty optimistic here, and you see it in the price as well. Shonali Basak, not with us today, but she is working, traveling for the company, and it's real simple. She's looking at the bond portfolio, and there is held to maturity, which is, it's not priced right now, mark to market. It's sort of there in the portfolio, and it's a big, ugly number, and that's the stress Mr. Michaud was talking about.
And that story has bullied this stock over the year so far. Year to date, that name is down by something like close to 20%, trying to get up off the mat. The latest from Bank of America and the CEO. This line right here, Bramo, the consumer, the economy, healthy but slowing.
Slowing, although still you're seeing spending coming in above where we were last year, which raises a question, where are we going to? As you really well said earlier this morning, at a certain point, normalizing to what? Where are we going to? How much is this slowdown going to lead to some sort of recession versus just simply a healthy cooling that will help inflation get back down? And these are some of the questions that just are that much less clear this morning.
1, 2, 3, 4 off the mat, the real yield, the 10-year real yield, John, 2.37%. That's a cost of doing capital, doing business, and permeating these bank earnings is a new reality. You know, we do the data check, like you and I go through it, wrote, we're falling asleep. You know what? They got to live it. And they're living a new real yield and an elevated real yield this morning.
Am I sending you to sleep?
No, you're not sending me to sleep.
I hope not.
But you know, we're doing it. We're just reporting the data, and that's fine. These people are living the data, and they're living an inflation-adjusted yield, which is a cost.
The stock is up by about 1%. So we've got Goldman Sachs a little bit later this hour in about 30 minutes' time. Tomorrow, you'll hear from Morgan Stanley. All of that's still to come. We need to talk about the latest on the ground in Israel as well. We'll catch up with Oli Krug on the ground in Tel Aviv in about 15 minutes' time. TK, the headline that crossed for all of us in the last 24 hours, the president making the announcement, President Biden traveling to Israel. Tom, tomorrow.
A lot of symbolism here, but I think, you know, within the zeitgeist, if you will, people weighing in. I noticed John Bolton writing in the Telegraph this morning with his perspective, just one perspective, is a president who's playing to the domestic audience. He's going out there and saying, I have relationships, I'm doing this, and the guy I beat 3 years ago, whatever it is, doesn't have these relationships. I think it's not only the international moment, John, the military moment, it is also Biden playing to the domestic audience.
And Secretary Blinken needs a helping hand because Secretary Blinken has been so busy in Israel right now. He's been to Jordan, Bahrain, Saudi Arabia, Qatar, UAE, and Egypt. The president traveling to Israel, Bramo, tomorrow, then on to Jordan.
You know, I hope that you're right, Tom. I hope that this is positioning and posturing for the domestic audience. What concerns me, based on all of the things that I've been reading, is a feeling of franticity, of concern that this is sort of the final moments that you can come to some sort of agreement before a wider escalation of the war. This is sort of the tipping point, and that this is a show of force and support of Israel to try to deter that type of action. And that's been some of the analyses that I've been reading.
John, you can take it domestically on the triangulation we've been talking about for 4, 5, 6 days of the Gaza Strip up to the West Bank to the east and then up north, and certainly Hezbollah and the Lebanon border is front and center this morning as a thing away from Gaza. But then you expand it out from there, and that's where this diplomacy is almost a separate discussion from what we're seeing in the Gaza Strip.
Intense diplomacy in the last few days. I'll try and make it simple. There's really nothing simple about this. I think there are two objectives for the president in the next 24, 48 hours. One, to prevent the conflict from engulfing the whole region. And two, to try and help develop a plan to get aid into Gaza, which is far more complex, Lisa, than meets the eye.
especially given all of the potential concerns on the Israeli side about checking some of the trucks going in, on the Egyptian side in terms of their liability and potentially people coming into their nation. And then, of course, the mystery of how much Hamas is really being an obstacle to some of the aid coming in.
Let's turn to the price action just to get you all up to speed if you are just joining us. On the equity market, on the S&P, we're negative here by 0.25%. Yields a little bit higher on a 10-year here, Lisa, up 5 or 6 basis points, 476.26.
Healthy but slowing economy, healthy but slowing spending. We get the latest 8:30 a.m. in about an hour and a half. U.S. retail sales for the month of September. Just how much can U.S. Consumers keep spending? Today, Fed speak includes New York Fed's John Williams, Federal Reserve Governor Michelle Bowman, Richmond Fed President Tom Barkett, and Minneapolis Fed President Neil Kashkari, talking about all of the unknown unknowns, and somehow this will be interpreted as some sort of guidance and forward guidance at that. And today, we did get the Bank of America earnings in about 25 minutes. Goldman Sachs, United Airlines after the bell, setting up a big week where we start to get some of the tech earnings as well, John.
And I've told David Weston catching up with Brian Moynihan a little bit later on this afternoon, so we'll carry that on Bloomberg TV and radio. Do not miss that conversation. David Weston with the Bank of America Chief Executive in a few hours' time. Joining us now, Michael O'Rourke, Chief Market Strategist at Jones Trading. Michael, let's start with the financials. Bank of America behind us, JP Morgan, Wells, heard from all of those. We'll hear from Goldman later. What gets some of these banks out of the penalty box? What is it? What do we need to see?
You know what? I think the market people need to look somewhere else and look somewhere different. I think the interview you guys did with Thomas Show right now was excellent. I thought he brought up some great points that this group is just not loved, and it's out of favor, but it's attractive from a valuation basis, and just a little bit of good news will get things going in the right direction.
Michael, I look at what to do here. What do you do with cash? Don't give me dollar cost averaging. Everybody's too nervous right now. But if I'm in cash, how do I deploy, or do I sit tight?
I like the bond market here. I think the Treasury sell-off is a real move, but when you look at those 2-year yields, they're very attractive in the 5% range. But even if this Treasury, this 10-year Treasury sell-off continues, which I expect it will for a little bit, go a little further, they're starting to get attractive, and that's the problem for the equity market right now. Is if you have a 10-year yielding 5%, that's on par with the S&P 500 earnings yield, which again should have a risk premium tied to it. So I think that's the dance that's going on in the market. I think that's going to continue into year end, and I think I'd start allocating towards those bonds at this point in time.
In the earnings season here, one of the great mysteries to me is the top line revenue. I sound like Tom Gelvin years ago at DLJ. Michael O'Rourke, if you look at the nominal GDP linkage over to revenue, do we underestimate the glow of this earnings season?
Well, yeah, I think the problem in this environment, when you're looking at the top line numbers, is it's an inflation environment. Prices are going up. Prior to this environment, the past 2 decades, that was a good gauge of strengths of the company, strength of the economy. The problem today is you have margins getting squeezed on the bottom line. So while yes, prices everywhere are rising, we're all well aware of that. It's hard to interpret that as true economic strength, because the companies are likely feeling their cost pressures pushing up on them as well.
So, Michael, what I'm hearing from you is that earnings might not be the compass to prevent this from being a perpetual kangaroo market, as Jonathan Stubbs put it earlier this morning. It's not necessarily going to be some of the economic data unless we get something that's really decisive. So what do you see as providing some sort of compass through a pretty unclear time?
Well, I think what happened, we had that FOMC meeting last month where I think the Fed really sent the message home that we are going to be higher for longer, and you start to see the market react. Since that meeting, all the major indices have traded off. The Russell 2000 probably the most. I think it's down about 3.5%. S&P 400 down 2.5%. What was interesting to me is when you take out the Magnificent Seven names, the S&P 500 also, the other 493 names dropped 3.5%, even as much on par with the Russell. So you're seeing that weakness emerge throughout the broad tape that I think the market's in a process of pricing in. I do think the events last week create some uncertainty, geopolitical uncertainty that create I guess, some noise in the trend that was developing. But I think you're seeing it this week. That trend's reasserting itself. You're seeing Treasury bonds sell off. You're seeing yields rise. I expect the pressure to reemerge in equities here.
How much do you think that this could persist, even if we get better than expected earnings, as long as Treasuries stay where they are?
Well, there was a great story in the Bloomberg terminal yesterday about the big five tech earnings, talking about how they're supposed to grow earnings 34% year over year this year, right? And that makes sense. That group of names is up over 50% this year, though. So that's really priced in, but it shows those names drive so much of earnings. And they say, I guess the rest of the S&P 500 will be down 5% earnings-wise. So I think that's what people are clinging to, those big names. But what's interesting is the second best earnings growth is expected to be from the financials, up 31%, except that group's down year to date. And I think we need to see investors start shifting their focus outside a handful of names, because those are great companies. If you want to invest in those companies, invest in those companies. But there's many other opportunities in this market that people should be looking for, but we're just not there yet. Everyone's still passively betting on the index. And I think that means this has time to play out.
Michael O'Rourke at Jones Trading. Michael, thanks for your input, your insight, perspective this morning. Appreciate it, buddy. Missing Shanali Basek this morning, sent across an email. This is really, really important. Whenever you frame what they're saying about the consumer at these banks, you need to think about which consumer. So when you hear from Brian Moynihan and they say, the consumer's healthy, things are slowing, but the consumer's healthy, this is the consumer they're talking about. And thanks, Shanali, for passing along this slide. Consumer credit cards, new accounts, average credit score, 774. 774. That is like ridiculously high.
And that's what we've been hearing. All of the big banks have been upgrading who they serve. This is banking for the wealthy, banking for the well credit score yield. And this just increases the divergence, again, with the big banks and the small banks that might not have that kind of discretion.
But where Thomas showed was, I thought, was brilliant with his decades of experience. Where are the new 4, 5, 10 banks beneath the majors that are going to actually compete? And the answer is that's a conundrum the government faces, the people face, with all of the legacy back to the 19th century.
If you are just joining us, welcome to the program. Bank of America here by 0.6% in the pre-market. Your equity market negative by 0.3%. If you look across a range of businesses, consumer vehicle lending, we're pushing 800 on the average credit score, and it's been climbing quarter to quarter, from 789 in the first quarter to the second quarter. Tom, it's amazing to see.
I don't have the statistic in my head. Did you see the delinquencies on auto loans of younger people? I'd never seen that number in all my history.
I imagine they don't have credit scores that look like that.
They don't have credit scores like that.
Just let me go through them, Tom. Third quarter 2022, 789. Second quarter 2023, 795. And now third quarter 23, that number's climbed to 796. We're getting closer and closer to 800. For anyone who tracks their credit score, 800 is high. Really high. Really. That's like perfect credit history.
Yeah, that bill has that. I don't have it.
Fantastic.
Yeah. Lisa, the bond market's walking away. 6 basis points. I mean, we're walking away in the last hour or so. What has the spread market done the last couple of days in all this?
It's been calm because of exactly the sort of financial, and I don't say this to be pejorative, financial engineering that companies have done to push out maturities. But John, to your point about this question about how removed big banks are with their guidance and with their balance sheets from the larger trends in the economy is really going to be a question if they're really focusing only on pristine credit and individuals who have that.
Thomas Show, KBW, big takeaway from that whole conversation. That number he gave us, out of the 5 top mortgage originators in this country, none of them are the big banks anymore.
It's all non-banking institutions that can afford to do it. They have to hold so much capital. Maybe that's why they want people with perfect scores.
TK, you're banking at B of A?
Well, I don't have banks, actually. I have no money.
I thought you were going to say that. I have a good credit score.
But, John, the bond market's walking away. I got a 238 on the real 10-year yield with Goldman Sachs coming up.
6 basis points high, 476. Goldman Sachs later this hour.
times and global leadership are on Bloomberg.
The conflict between the U.S. and China has escalated so much. This is one of my greatest fears, that the small nation is forced to choose sides.
Bloomberg. Context changes everything.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Thursday, the Economic Club of New York hosts a conversation between Fed Chair Jay Powell and Bloomberg Wall Street Week's David Weston. Recession risk, inflation outlook, real estate amid high rates, and more. The live interview happens October 19th at 12 p.m. Eastern on Bloomberg. Context changes everything.
On Wednesday, President Biden will visit Israel. He's coming here at a critical moment for Israel, for the region, and for the world. First, the president will reaffirm the United States' solidarity with Israel and our ironclad commitment to its security. Second, President Biden will underscore our crystal clear message to any actor, state or non-state, trying to take advantage of this crisis to attack Israel. Don't.
That's the message from Secretary Blinken, U.S. Secretary of State, speaking in Tel Aviv following a week of intense diplomacy. The announcement in the last 24 hours from the president reading as follows. On Wednesday, I'll travel to Israel to stand in solidarity in the face of Hamas's brutal terrorist attack. I'll then travel to Jordan to address dire humanitarian needs, meet with leaders, and Tom made clear that Hamas does not stand for Palestinians' right to self-determination.
It's going to be fascinating to see how he messages it. Does he speak in Israel? How does he approach it with not only Mr. Netanyahu, but with the political debate within Israel? I'm just fascinated to see what the body language is. I have no clue.
And Tom, how difficult it will be to develop a plan to get aid into Gaza, given what's happening at the southern border.
Well, yeah, that's the heart of the matter. I mean, Lisa, help me here. I'm not up to speed on this. Is the southern border of Gaza open at this time into Egypt?
The reports seem to suggest that no, it is
not.
The
answer is no.
Right.
It is still not. That conduit out the southern border in Egypt is not there. Right now, let us go to Tel Aviv, where our Oliver Crook reports. Oliver, how will the President of the United States be greeted tomorrow in Tel Aviv and in Israel?
He will be greeted very happily by the officials here and by the people here in Israel. And really it comes as, you know, all of the officials here that have arrived have had the same sort of message, which is unflinching support for Israel. And we expect the same from President Biden. And that is unflinching support politically, militarily, and also possibly financially. We have some reports out from the New York Times that Israel has asked for $10 billion in emergency aid. So that will be in focus. But so too will deterrence and diplomacy. The naval carriers groups that are heading to the East Mediterranean, but also the diplomacy side when he goes to Jordan later tomorrow to meet with the president of Egypt, to meet with the president of the Palestinian Authority and the king of Jordan. This will all be front and center, and really the focus there is going to be aid, getting aid into Gaza.
Ollie, we've talked about the uncomfortable tension hanging over the Middle East for much of the past 3-4 days, seemingly on the brink of a full ground invasion. Based on your reporting, Ollie, the people you're speaking to, are we still on the brink of a full ground invasion?
Yeah, I think that we're on the brink of a ground operation. The question is, what form will that take? And this is sort of an important point to make. I think a lot of people are expecting a full-on tanks rolling in, you know, scorched earth sort of approach. We've got sources and we've got some conversations with the IDF earlier this morning who said that basically you need to throw out everything you know about how they've operated in the past in Gaza. This could be a very different approach than what they have done in the past. This could be more sort of precise. This could be smaller operations. And as the defense minister warned last night, this could go on for a very long time. And this in part with the concern of what happens if they do succeed in dismantling Hamas. What comes next? This is a very sort of open question here. And again, the question of a second front is also looming large over this whole conversation with more skirmishes on the north with Lebanon.
Ollie, Thank you, sir. Stay safe. Bloomberg's Ollie Crook in Tel Aviv. To Ollie's point, Tom, two objectives here for the president. They're worth going over repeatedly. One, he's got to try and prevent this conflict from being a whole lot more broader than it could be.
Yes,
and two, to help develop this plan to get aid into Gaza. It's easy to talk about. It's tremendously difficult to execute. Right. Clearly, the Israelis are worried about not just aid coming across the border, but also munitions as well. And that's the issue.
Yeah, with historical perspective on this, Henrietta Trays with Veda Partners here on how Washington will respond. Henrietta, to John Farrow's point there, it is about aid. Let us go back to 1973. Nixon and Kissinger, and basically they did an airlift to Israel. Does Congress want to support President Biden if an airlift is required to support Israel?
I think they do. I think they're very eager to start taking votes on all kinds of aid, whether that is munitions, extra enforcement of the Iron Dome, anything that the president needs on a military basis. And then there's also a strong desire to provide financial aid. We just heard from your great reporter in Tel Aviv that they're looking for $10 billion on the Israel front. Right. I would not be surprised if when that gets over to Capitol Hill, they try to increase that dollar figure. That's usually what happens as members seek to sort of illustrate their support for the nation.
Henrietta, you are expert on the body language of Capitol Hill. I think of John Huntsman Jr., former governor of Utah. His family has pulled money in the last 24 hours or stopped donations to the University of Pennsylvania over some of the debate and protest there. How are the Congress people that we have, how are they reading the mood of America on this war?
You know, that's a great question. I think the fallout is only beginning there. Right now, we're sort of in the immediate aftermath where there's reticence to come out in opposition to anything that Israel might need right now. But as we get into the days and weeks ahead, I think to echo some of the commentary we heard from former President Bush, there's going to be a loss of interest in this, which I think is very real and borne out by historical realities. And what happens is you start to get factions. Already there are a number of bills targeted at penalizing in some way the Biden administration for the $6 billion from Iran. That's only going to get exacerbated. So I think people are really reticent to voice their fulsome views on where things are with either Gaza and Palestinians, Hamas, or the Israelis, and that will probably foment in the days ahead and get more aggressive.
Unlike Ukraine, do you expect that opposition to come from within his own party, within the president's own party?
I think it's going to come from a whole bunch of different outlets. You have a pretty far right, extreme sort of anti-Semitic component, and then you also have a very far left pro-Palestinian component. And both of those are just going to get louder in the days ahead. And especially as the ground invasion starts. There's a lot of attention on that right now. Obviously, Secretary of State Blinken is heavily focused on containment and making sure this does not escalate. The Biden administration's moved 2 aircraft carriers into the arena right now to try to make sure that that doesn't happen. But that escalation is something to really be mindful of. And I think the extreme positions exist across the political spectrum.
There is also talk about American troops here, Henrietta. I shared this story with our audience in the previous hour. I'll do it again for people just joining us from the Wall Street Journal. According to U.S. defense officials, that the U.S. military has selected roughly 2,000 troops to prepare for a potential deployment, support Israel. The troops are tasked with missions like advising and medical support. Important to point out what they're not there for. They aren't intended to serve in a combat role. No inventory have been put on prepared to deploy order. And this as well, it isn't clear under the circumstances the U.S. would actually deploy the troops or to where. Henrietta, talk to me about support for that in Washington currently.
I don't think support for troop deployment is there, just as we saw with Ukraine. The most fascinating stories come from the sort of personal anecdotes of Americans going over to Israel to sort of volunteer. But I don't think troop deployment is something that this administration is prepared for. As I mentioned before, I think their effort is to contain and prevent escalation that might ultimately require something like troop deployment. We're happy to throw money at the problem. I think there are more than enough votes for that. And indeed, what I've been telling clients is not only are there votes for the funding, but the funding is so popular that it can carry other things like aid to Ukraine, aid to the U.S.-Mexico border, and probably a government shutdown avoiding position. But I don't think troop deployment is something that any member would voluntarily talk to you about right now.
Just quickly, speaking of votes, got to squeeze this in about 20 seconds if we can. Will we have a speaker by the end of the week?
I have no reason to update my priors, to be honest. I mean, they don't have a bill requesting aid to Israel. They don't need a government funding bill until November 17th. I fail to see the urgency.
Henrietta, thank you. Henrietta Trays there of Vader Partners on the latest. Goldman Sachs just dropping across the Bloomberg. I'll break the numbers. We'll come back to it in just a moment. Third quarter net revenue, $11.82 billion. The estimate, 11.13. Big number for Goldman. Fixed sales and trading revenue, $3.88 billion. The estimate, $2.86. That, on first look, is a big upside surprise for that specific metric. That stock is just about unchanged. Much more on the numbers from Goldman Sachs up next. From New York City, this is Bloomberg.
Kept on blowing up on social media, then having a fight. It just kept on repeating itself. And at the same time, I got an opportunity to fight on ESPN, primetime TV. I said to myself, now imagine if I could do something amazing here. And then I ended up knocking the guy out in 30 seconds.
How quick was that?
Which then gets on SportsCenter, top 10. So everything kind of went doom, 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 doom. I would look at these things and hear the stories of other boxers and say how they were taken advantage of. Right. I said, well, this is an opportunity where I could become bigger and have my own power, my own voice. So they can't just, take all my money and say that, oh, I did all this for you, I got you here. This kind of gave me, into the driver's seat. I didn't want to be another story where, these promoters, these managers, they, pretty much screw you. So I was like, I need to do something that could give me some power.
Our studios in New York and San Francisco. Our expert hosts have the data and analysis about the companies you know and the startups to watch. Plus, the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West. Only on Bloomberg Television, your global business authority.
Coming off the back of a decent day of gains on the S&P 500, equity futures look like this. On the S&P, on the Nasdaq, we're negative by 0.3% on the S&P. On the Nasdaq, down by about 1/3 of 1%, and much more on the bank earnings in just a moment. In the bond market, yields all over the place over the last few months. Your 10-year this morning higher by 6 basis points, 4.7647. Your 30-year having a little look again at 5%, up by 6 or 7 basis points on the session to 4.9169. At the front end of the curve, it's been pinned but creeping higher over the last couple of days, up a single basis point, 5.1135, 5.1156. Worth pointing out, in about an hour from now, US retail sales just around the corner. Looking at foreign exchange, we look like this. The euro against the dollar shaping up as follows. The euro 105.72, positive on that currency pair by 0.1%. And to round things out with the financials, Bank of America earlier on today with a series of little beats. Their stock is up by about 1%. It is down hard on the year. Year to date, it's down by almost 20% coming into the session today. For Goldman, positive by just 0.1%. Under surveillance this morning, Goldman reporting better than estimated third quarter results today off the back of what we heard from Bank of America a little bit earlier. Goldman, the fifth of the big 6 US banks to report better than expected earnings. Tomorrow, we'll hear from Morgan Stanley. The numbers read like this. For net revenue, $11.82 billion, the estimate 11.13. Lisa, fixed sales and trading revenue, big number for Goldman Sachs, big beat, $3.38 billion, the estimate 2.86.
They also beat in equities, which is notable considering that JP Morgan did not, and we saw something similar from Citigroup. So there's a real question here about how much they're fortifying the core of their business after coming under a lot of fire for their consumer-facing business. So really, does it seem like they're leaning back toward the core of investment banking and maybe away from some of the other interest-bearing peripheral businesses?
To your point, Lisa, equity sales and trading revenue, $2.96 billion, the estimate 2.68. Some commentary from David Solomon, the Goldman Sachs boss. Tom sees a continued recovery in capital markets.
Oh, that's what it is. He's going to lead with that lead story here. I look at the book value differential with Morgan Stanley, and it's an absolute train wreck. They're under 8% return on equity. They've got a 3/4 single-digit return on equity, John, that goes back to COVID. I went to the Marcus website. It says, keep the growing going. When did they jettison Marcus?
Stock is down by about 0.1%. It's your go-to question on this name every single quarter. I'm with you. I'm with you.
Allison's here to calm me down. She'll medicate me.
Allison's going to calm Tom down in just a moment. Allison Williams, that conversation, a few seconds away. Elsewhere, President Biden traveling to Israel tomorrow, planning to meet with Prime Minister Benjamin Netanyahu ahead of a looming ground strike in Gaza. Israel saying it's keeping open a safe corridor for people to evacuate the northern Gaza Strip. More than 600,000 people, Lisa, have already left for the south.
And humanitarian organizations are saying that really there's only just hours left before there's a full-blown crisis and there needs to be water and food delivered. How much of the President Biden visit is really devoted to that, to ameliorating some of the burdens on the Gaza individuals, the Gaza residents who are leaving, who are displaced, while also supporting Israel? It is a delicate needle to thread at a time where, honestly, the entire region is like a powder keg of emotion, and you're seeing that percolate through the rest of the world.
It's a two-part story through the next 24 hours or so. We've talked a lot about the visit to Israel. Tom, also needs to talk about the visit to Jordan. There's going to be a meeting there with the Egyptian President Al-Sisi, Palestinian Authority President Abbas as well. So it's going to be a busy couple of days for the president.
I think you're totally correct to focus on also our dialogue with the adjacent Arab nations. It's underplayed right now. It's underplayed in the zeitgeist this morning, and you're 100% on it. And I really want to emphasize here, Egypt is, from every report I got in Morocco, beleaguered beyond beleaguered, and they need money. That's what this is about.
Let's wrap things up with the dysfunction in Washington, D.C. Congressman Jim Jordan of Ohio looking to become the next Speaker of the House with a vote at noon today. Jordan emerging as a front runner after Majority Leader Scalise withdrew his bid in the last week. Jordan is expected to move forward with today's vote despite holdouts in his own party. The margins are razor thin. He can lose no more than 4 votes against United Democrats. Tom, you said in the previous hour, we're talking about really, really small margins to try and make this happen.
Well, and again, I said it was 4% with McCarthy, and it's an even more narrow margin for the gentleman from Ohio. He had a pretty good Monday. If he has a pretty good Tuesday, that's 48 hours of joy.
Well, I'll take that point. Pretty good Monday means that he got a lot of never Jordans to come on his bandwagon. There's a question about the fact that he is considered an election denier. He's considered a Trump supporter. He's considered someone who is part of the Freedom Caucus, and he is getting some of the moderate Republicans on board because he's trying to say, let's get it together, and we need to coalesce around something, because otherwise, what if we have a moderate, Democrat to be the representative, right? I mean, that alternative, that's why I say peer pressure. It's sort of, that's the reason why you start to see some of the Republican caucus members coming along.
If this gets done, Bremo, do the odds of a shutdown go up? Is this a reason to buy the long end of the bond market?
It's a great question. If I knew the answer, I would probably be in a different place. I think that it's a great point, because how likely is it that Jim Jordan is going to come to some consensus with Hakeem Jeffries and the Democrats on the other side of the table, considering just how divergent some of his views have been from even the moderates within his own party?
We've got to monitor a series of ever-evolving probabilities around certain stories. You would imagine the odds of a deal between the two go down and the odds of a shutdown go up, and maybe that puts the brakes on growth into the end of the year.
This might be the reason why I focus on bond yields, because that's a simpler mathematical calculation than the odds of all of these things. And then the market reaction to it, which just seems like a lost cause, which is why I think a lot of people aren't even paying attention.
For what it's worth, I'm not sure what bonds tally right now, because bonds are nuts. We're up by 7 basis points on a 30-year, 492. Just to return back to Goldman, Tom, it's a beat on revenue, it's a beat on fixed sales and trading revenue. The stock, if you're looking at Goldman this morning, TK, unmoved by this. We're negative by what? 0.9%.
Unmoved by this also is the board of directors of Goldman. This is going to be an interesting 90 days. Allison Williams joins us with decades of perspective here on the parlor game. The BQ screen, Allison, tells me that Fortress Gorman is trading, Fortress Solomon is trading 31% below book value on Morgan Stanley. They're getting their clock cleaned on a market valuation. When do they jettison Marcus? I get the talk, I get the zeitgeist, green sky, I don't care who's to blame. When does the board say, lose this loser because Marcus is keeping the growing going baloney?
Yeah, I mean, they're close to done, right? So they announced green sky, they're taking a hit this quarter. Lisa, we were discussing some of the reserve impact. There was a relatively big reserve release. There was a relatively big charge-off there. They've announced a sale of United Capital, right? They decided they do want to go after that mass market, but they don't need to own it.
Oh, come on, who do they sell
so
Marcus
a partnership.
to? Who do they sell this dog to?
And the Marcus loans have largely been sold, so it's really just the deposits that they're focusing.
But it's an image thing as well. If I'm on the board of Goldman Sachs, I'm saying, this is all great. Thank you for the comments on banking, David Solomon. This is not good for the company. In the chart, for those of you on radio, we got a year-to-date chart. It ain't pretty. When do they jettison that so they can say it's behind them?
I think the pressure from investors is really more on the cost side and how they can meet their overall cost goals. I think the consumer business, as you said, it's a lot of headlines because it's very unlike Goldman, and it was sort of a little bit of a head scratcher when they went into the business. It was almost like a negative foreshadowing for the rest of their business that they would do that. But I would say that investors never owned Goldman Sachs to own that, and I think investors are probably happy that they're focusing on their core. And their core, I mean, the trading results, very good, but investors likely anticipated that, and that's why you're seeing the stock flat.
I think it's telling that the Financial Times had a story about David Solomon's DJing habits and the potential for him to withdraw from some of the high-profile DJ events that he has been doing. It highlights how much of a distraction this has become. How much is this part of what's been baked into some of the disappointing performance of the Goldman Sachs shares?
So I think, there's definitely the headline aspects, and then there's the core operations. And I think the shares, it's been a tough year for them. They've had a lot of messiness in the numbers, and I think the shares are reacting more towards that. Investors want to know, how are you going to get to your targets? And it's not a clear path right now. One thing I would say about Solomon that he has done versus prior managers is he put out targets. Goldman never did that in the past. They didn't have investor days. They didn't put out targets. And the increased transparency has been a little tough for them on that front. I think to your point, regarding the DJ, regarding a lot of the negative press, Goldman most likely wants to get away from that and really just focus, again, back to more the institutional audience, the institutional customer, and their institutional reputation.
And that's really what we've been hearing, that he's actually done a pretty good job and that some of the animosity comes from another place. There is a question, though, about why the shares are not responding better, particularly to the outperformance in equities, considering the fact that they outperformed even though JP Morgan and Citigroup did not.
They didn't, and I think it again comes back to the overall profitability. We want market share gains, but we also want profitability. And when you talk about a price to tangible book multiple, that is really going to depend on the path to profitability. And I think getting past a lot of this noise and cleaning that up. And I guess the other thing I would say, because another thing in the media, there's a lot of talk about employees and partners. If bankers don't want their pay to go down, shareholders do want the pay to go down. So it is, there is a give and take in terms of who you're making happy as management. And when it's a tough year and it's not due to the core business, bankers are going to be even more unhappy.
Okay, but this is important. Let's say they got a run rate of 8% return on equity. If you take out these train wrecks, let's say they one-off them, you take out the one-offedness of 2023, what's your plug-in for return on equity for Goldman Sachs right now, X the tragedies?
Well, I'll have to go through the results to see what it is today, but if you look at their core business and some of the things they're doing, they should be able to get to that mid-double-digit type return.
Get back to 13, 14, 15%?
I think.
Like do a double.
So we talk a lot about their consumer business because that's, has not worked out. But two things that have worked, the transaction banking business, I thought that was a great idea for them. It seems a natural fit, and they've actually done very well. That's a business that they're keeping. And the alternative strategy, where they're basically leveraging, their expertise, but not investing their own capital
Who do they
anymore.
sell the rest of this to? I don't understand who they sell Marcus to. I get silence on this from everyone.
Well, the Marcus, a lot of their loans are sold, the ones they don't want to be in. That's sold down.
That's smart.
And so what's remaining is very tiny. It's really more the deposit side of things. It's really more just, it's more the deposit side of things. And just so the final point just on returns, their alternative business, as they move that off balance sheet, that's really going to be core to them improving their returns over time. So we talked a little bit about Morgan Stanley. They've made the shift to asset and wealth management, high ROE business. It's the clients that have the assets. Goldman is moving more towards that model. As they do that, their returns should follow.
Alison, thank you. Alison Williams of Bloomberg Intelligence. The latest there on Goldman. That stock is down by 0.1%. Earlier on this morning, a beat from Bank of America. Tune in, 2:15 Eastern Time. David Weston interview with Bank of America CEO Brian Moynihan. That coming up a little bit later on this afternoon, 2:15 Eastern Time. If you are just joining us, welcome to the program. The S&P 500 negative here by 0.26%. Yields a little bit higher by 5 or 6 basis points. The 10-year, 4.7626. If we're going to talk about David Solomon's DJing, got to share this comment from the spokesman over at Goldman Sachs. Reads as follows: "This is not news. This is to the FT, not to me personally." David hasn't been publicly DJing at an event in well over a year, which we have confirmed multiple times in the past. Music was not a distraction from David's work. These lines are always my favorite. The media attention became a distraction.
The John Farrow attention.
The media,
the Bramo attention.
About it. I hardly talk.
It's Bramo's fault.
I couldn't care less. I honestly couldn't care less. To Alison's point, clearly, internally, there was some upset there about how much they were being paid. Externally, if you're an investor, I imagine, Bramo, you're not sharing those same concerns.
Maybe it's a good thing. And that was sort of the implication, in the sense that if you have really highly paid partners and they leave and they're people who are competent coming in, and that's an if, well, aren't you getting your expenses down? Isn't that a good thing?
Is this a media distraction?
I don't know. I mean, honestly, I think that there's a lot of sour grapes. Clearly, there are a lot of just personal tensions here that are also coming to the fore.
That's correct.
I'll leave it there.
We're all in agreement. That's nice. Next hour, 8:30 Eastern Time. Greg Dacko, Chief Economist at EY, following US retail sales data. That retail sales data just around the corner. And we've almost wrapped up the big banks on Wall Street. Morgan Stanley still to come. That's coming tomorrow. From New York, good morning.
The younger generations are more, of course, pay more attention to sustainability, and so they are looking at brands that are greener. But you have to make sure you're authentic because they hate greenwashing. But what is very important to remember is that none of them, whether they're young or not, will ever sacrifice product quality and efficacy to sustainability, which is why, part of the big transformation of our R&I, where there's this €1 billion we spend every year, most of it is spent on transforming our formulas from petrochemicals to biosourced ingredients and green sciences, but without losing the efficacy.
From New York City,
In London, in Sydney,
from Washington,
in Tokyo.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
Here's what I'm watching. You do not want to miss this story.
Is there the kind of upside?
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg, top experts, great questions.
You might get ready for the fact that a lot of these firms may not make it with the higher rates, which again feeds back into my view that this is why we should hold rates steady. We should not at this point be thinking about any increases.
That was Philadelphia Fed President Patrick Harker speaking at a virtual event. This conversation really started in Jackson Hole, Wyoming, around the table with us in Jackson Hole on Bloomberg Surveillance, when he indicated that companies in his district, his region, Lisa, were indicating to him that we've seen enough. We're facing a little bit of pain. Pain that he was seeing in his constituents that he was not seeing in the headline data, and given him reason potentially, alongside others, Bramo, to pause.
And he talked about how anecdotal evidence has actually been more of a leading indicator than some of the hard data that everyone looks at, and that these anecdotes that he was hearing from his constituents were a better tell on what was going to happen. If that's the case, how much does that explain the reluctance of some members of the Federal Reserve to go further, to really talk about really elevating rates that much higher, even as they talk about holding them for a very long time?
This is why the beige book is so important.
Exactly. I was actually thinking that. That's why I'm going to read it, the whole thing.
Is that the pitch?
Yes.
All right. You can give Tom the
Oh,
summary.
come on. You
I'm
told
with
me
you.
you're going to read it. You read it too.
Of course I will. All
Thank
right.
you.
Don't out me. Come on. I'm trying to stay cool here, Bramo.
Oh, yeah, you're doing a great job.
I don't read.
All right.
Tons of Fed speak. Williams, Berman, Barkin, Kashgari all talking today. Megan Draper of Barclays weighing in on the Fed's path forward, saying this: we maintain our call that the FOMC will hike 25 basis points before year-end, though not necessarily in November. Although higher long-term yields have put a lid on market hike expectations for now, we expect another round of resilient incoming data next week to shine a bright spotlight on Powell's pre-blackout speech. That pre-blackout speech coming on Thursday, a conversation with Bloomberg's David Westin and the chairman of the Federal Reserve, Jay Powell, at the Economic Club in New York. That is one to watch, Tom, ahead of the quiet period.
It's one to watch. I'll go with that. And as I look at this meeting and I look at the few other meetings here, let me get the surveillance calendar. It's available on the Bloomberg Professional Service, John. You can go in and go November 1, and you can waltz right. Remember the December meeting was dead? Says who? December 13th? You think so? I think it'll be an interesting story with more economic data. Megan Draper joins us now, global co-head of debt capital markets at Barclays. Megan, you note the disinversion out there, the yield curve's doing what a yield curve should do. You suggest that extends the timeline for the Fed. How does disinversion change the Fed's timeline into 2024?
Yeah, I mean, I think it's fair to say we've entered a far more complicated phase of this cycle. The market's really now in a daily tug of war with policymakers around the path of rates. And I think there's been a lot of misinterpreted signals this month I think the real question in my mind is what Powell and other members of the Fed opt to message this week ahead of blackouts in the context of what continues to be a rapidly evolving backdrop. But you've got a strong dose of reality for the market between employment data, CPI,
Right.
PPI, UMISH. I mean, all of that combined, I think, plays into how markets are responding, particularly on the rate side. But I think we've read far too much into recent Fed speak that implied that these higher rates might have actually done some of the heavy lifting. And what I think the market has failed to take into account is the nuance behind the why. I mean, why are financial conditions tighter? If it's the strength of the economy, which is fueling these longer term interest rates, they may actually need to do more. And I think if you dug into Logan's commentary, he suggested as much.
In your head, what is the level of the 10-year yield where Powell and company are overcome by events? Is it a 5 handle or is it something more subtle than that?
I'm not sure they're really focused on a nominal yield as being the determining factor. I think it's more about financial conditions, tightening of financial conditions, and buying themselves room to continue to evaluate the data.
How much, Megan, do you see a potential risk to credit as yields go higher and potentially the Fed does more, which, as you think, is your base case?
Yeah, I mean, I don't think we can underestimate how hard it is for risk assets to rally meaningfully here when treasuries are this volatile. And yet we are, with everything going on, seeing a very resilient credit market. I mean, 3-month spread balls at the lowest level since the start of 2022. Spreads on the corporate index are still hovering near the tights at 124. So it's been a strikingly tame backdrop in the face of this elevated rate ball and even with some of the geopolitical overhang. I think as you talk to investors, what we're starting to see is a bit more polarization in terms of how accounts are approaching the market. So there's definitively more discipline being incorporated in terms of investment decisions. If you're total return focused, I think you're waiting for the dust to settle a bit on some of this intraday volatility. If you're yield focused, there's a very attractive entry point here that we continue to see for insurance and pension money in particular.
That's from the investor side, Megan. One reason why it's wonderful to speak with you is because you also speak with the corporate finance officers, and you understand the angst of paying more than 10% yields, at least if you take a look at some of the market rates for about a third of the high yield index. How much angst do you feel among corporate executives as they look out at their runway and wonder when they're going to have to actually face off with these higher interest payments?
In investment grade, there's a decent amount of complacency talking to both Treasury teams and CFOs as they think about evaluating markets here, in part because there's very functional market activity as and when they do need to come to market. So there's a degree of patience I think we're seeing. We are seeing a backlog build for this post-earnings window, but October has been the quietest start to a month. Going back to April, so when we were dealing with the regional bank volatility. So there's a willingness with very manageable maturity towers for issuers to sit this phase out. I think you're likely to see deal sizes smaller and shorter as a result.
Bringing your debt world over to economics, where is your real yield out 6 months, out a year? We've got a 235 level, 10-year inflation adjusted yield. Where do you see that out a year, say?
Out a year. I think we're going to be range bound for an extended period of time here. We don't see cuts playing into the equation until at least past September of next year. So a year out, maybe we're seeing some reduction from current levels, but I think we've got a ways to go before we see that play out.
Are we learning, Megan, that this is a corporate and consumer structure in the U.S. economy that can handle 5% rates for a longer period of time, or have the lags just gotten much, much longer?
In investment grade, I think things are reasonably well insulated. You only have 7% of maturities coming due over the next 12 months, and it's closer to 17. Where we've got greater concerns is probably on the high yield side, where those maturity towers are definitively looming, so looking at both bonds and loans. So I think it's going to be have and have-nots as we look at the path ahead.
Hey, Megan, thanks for being with us. Megan Draper there of Barclays on the latest with the Fed speak. So much Fed speak this week. Just a ton of Federal Reserve officials with scheduled speeches right the way through to the quiet period, which begins this weekend. Interesting interpretation of the Fed speak we've had over the last few weeks. Context matters here. We were having a massive bond market sell-off. We all had one question. Was the Fed going to tolerate this or imply that sell-off would do some of the work for them? Then they started to come out, Mary Daly with Lisa of the San Francisco Fed, suggesting that maybe they can outsource monetary policy to the long end and allow the long end of the bond market to do some of the work for them. Now, I refuse to believe that is not the way they knew that message would be perceived. I refuse to believe that. They must have known that we would sit here, hear those comments and believe that they're outsourcing monetary policy to the long end, that the sell-off is doing some of the heavy lifting for them. If that's not how they wanted that message received, look at all these speakers today. Williams Bowman, Barkin Kashgari. Tomorrow, Waller, Williams Bowman, Barkin, Harker Cook.
You're good at this.
Powell, Jefferson, Barr, Goolsby, Bostic, Harker, Logan, Thursday. Harker, Mester, Friday. It's a song. It's beautiful, isn't it? Okay. That's the opportunity to correct course. They know what we all think. They know what most people think, not me personally. They get the chance to correct it if they want to, Bramo. And if they don't, then message received, it was the right message to receive.
Although it's unclear whether the market moved on that message, right? It's unclear how much the move lower in yields and higher in price that we saw last week was due to this or earlier this week, or just due to some other issues. To me, the issue that Megan said that I think is very important is the why. Why are yields going higher on the long end? And if this is because of greater economic momentum, then maybe that means the Fed has to do more on the front end, which is what she believes later this year.
Clearly at IMF, it was a debt panic, just the sheer amount of debt and future issuance of debt as well. I just did a careful mass study of 30-year gilt in the U.S., 30-year John, and frankly, there's more convexity. It's better behaved in the United States towards higher yields. And I still say nobody's really modeling it. You know, and we mentioned it with Allison on the banks. Are people really modeling out higher interest rates, or is it just like, as Megan said, you know, it's just where we are and things will get better? I don't buy it for a minute.
We've got high yields this morning. Up 6 basis points. Your 30-year, 491, 35. Coming up on the market, Bob Dole of Crossmark Global Investments. In the next hour, the attention turns to the economic data. U.S. retail sales just around the corner. The last big data point before Chairman Powell speaks to Bloomberg's David Westin on Thursday. To round out the bank earnings, we've had Goldman this morning. We've had Bank of America. Tomorrow, Morgan Stanley. From New York City, this is Bloomberg.
A cruise ship is much more than a flotilla of financials and numbers. Naftali Holt showed me around the Celebrity Beyond, Royal Caribbean's newest ship, rolling out not the red carpet, instead the magic carpet, an example of investment that's yielding returns in several different ways.
Originally, actually, we designed it because we wanted to have a really nice platform for tendering, because sometimes we can't home port
So
destinations.
functional.
Exactly, value functional. And then we looked at it and said, why don't we just make it a really cool feature spot where people can enjoy it beyond the functional space? And we created this bar. It went up and down.
Now, what does it take
How
to
about the Instagram? Can you speak about that?
I can imagine.
Instagram moment with the sunset, having a drink with your friends or family. I mean, that's amazing.
So what does it take to do something like this? And I'm thinking cost, engineering, time.
Yeah, a lot of effort from a lot of people. So it starts from just the design and the conceptual aspect of it. Then we need to figure out a lot of technical factors, the weight, the wind, and so lots and lots of hours of really hard work. And every time we up the game, we see that customer willing to spend more.
The top names in business are on Bloomberg.
I see a world where financial conditions have gotten tighter, and the transition mechanism, which the Fed would like to see in slowing down the economy, which we all expected, it's taken a lot longer. So the real impact of higher costs around the globe, in the U.S. and Western Europe, it's not been felt yet. And so when people say, well, we're going to have a soft landing, I'm skeptical.
Nobody covers business like Bloomberg. Context changes everything.
That's me, Max. What's up? How are you? I have been writing about Wall Street for almost 15 years. And what that means is I write about feuds and rage and rises and falls and comebacks. And every now and then, I also write about a couple of villains. Thank you so much. And now, I am about to do something new and very, very scary. We are making a show, and it's based on Bloomberg Businessweek magazine. So what is this show about? It's a show about money, power, culture, pop business. We're going to ask complicated and profound people about their ideas, their careers, their lives, their risks, their failures, their imagination.
It's so incredibly liberating not to care what other people think.
I was giving my tools to other communities. I wanted to bring those tools home.
Tune in. Please, really actually tune in. I desperately need an audience.
This is Daybreak Europe. I'm Kriti Gupta. Let's get to the stories that set your agenda.
Taking you from the U.S. market's close
A lot of this was priced into the U.S. session.
to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
This whole year has been a year of a market that's been on its toes and on edge.
There's a lot of checks against the market at this point. That doesn't necessarily mean the market has to retest last year's lows.
If we get this geopolitical escalation, I think the back end is going to start pricing in a true flight to safety trade.
It's the back end that's where the action is. And I think there's a lot more safety in the front end right now.
I think we've gotten a lot of good inflation news in the last few months, but we're not there yet.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Bloomberg Surveillance. John Farrow, Lisa Abramowitz, and Tom Keene, thank you for being with us with bank earnings, perhaps secondary to what we see in Israel. The President of the United States will travel to Israel. John, that just supersedes all that we talk about in economics, finance, investment.
Without a doubt, Tom, before heading to Jordan to meet with Arab leaders as well, we've talked about this uncomfortable tension hanging over the Middle East for the best part of a week now, TK, still seemingly on the brink of some kind of ground invasion into Gaza. I put the emphasis on some kind. We've gone from talking about a full ground invasion, Tom, to talking about operations. This is Ollie Crew on the ground for us in Tel Aviv, and that's a subtle shift over the last few days.
The subtle shift is there. What I noticed from Oliver that I thought was so important was the idea of the military separate from the politicians. I wonder how President Biden, with 2,000 rumored U.S. people involved in some way, how the president will address the Israeli military.
I would stress potentially involved, Tom. No confirmation about any of that right now, and certainly not combat troops. We should emphasize that fact too.
Right.
Tom, away from the geopolitics, 1, got the bank earnings 2, the economic data 3, and the way the Federal Reserve responds to it 4. And you're going to get that economic data, TK, in about 28 minutes' time.
You're going to have to retail sales. Lisa, your thoughts on this? We've really underplayed it. We've just been wrong on this, and the answer is it's important.
We've seen resilience continually, and it has been driven by the American consumer, which is the reason why I think, to Megan Graper's good point, what is underpinning some of the rise that we've seen in the long end, despite some of the geopolitics that we've seen, it's because of the strength, the unexpected strength that has continued. And if we see that in retail sales, how vulnerable is this market, ironically, not to some of the incredible tensions and tragedies, but to upside surprises in the consumer that causes yields to go higher and people to reset their expectations of Fed action?
I mean, John, help me with this. I mean, I got to dovetail the economics into the bond market, and the news flow is extraordinary. Every time I look at the Bloomberg screen, I see a bond market walking away. And there's doubt here that we could get to a higher yield structure on bonds.
In either direction. This is a small move these days. It's a 6 basis point move on a 10-year at 476. And we're trying to read between the lines in the bank earnings just what is happening in this economy. I was catching up with Shnami Basak over email as these numbers were coming through, asking the question, is Bank of America the Bank of America? Really think about that. Who are they serving here? You look at the average credit score of some of their clients, their customers, Tom, incredibly high. Is that really insight into the broader U.S. economy right now?
And that shows over to Thomas Schode, who was with us earlier from Keefe, Bruyette and Woods, and the basic idea is there's a whole other banking industry out there, and that's where I'm most focused on, which is this roll-up of banking that we fought for decades and decades and decades Is this turmoil right now the catalyst for bank combination, Lisa?
Well, and what he said was really interesting, that if there is not bank consolidation that is signed off by regulators who have a history of slowing it down, that's going to make it even harder for smaller banks to compete with the larger banks that are dominating.
Got a great equity guess. I'm going to consolidate, John, to the data check. Swiss franc stronger today. It was not a jump condition, but something to note given the tensions.
Equities a little softer. Decent day of gains yesterday on the S&P. We pulled back by 0.2%. In the bond market, yields look like this on treasuries, higher by 5 basis points on a 10-year, on a 30-year, up by 6 to 491. At the front end of the curve, up by 2 to 5.11%. Going into retail sales, TK, that number dropping is just around the corner. Megan Grapen of Barclays, I think, really raising an interesting question. The message that was received from the Fed speak over the last week was that they'd allowed the bond market to do the heavy lifting for them, and maybe they're done. Megan's pushing back against that. If yields are climbing at the long end because the data's better than expected, then maybe they need to do more. We'll find out. And maybe you get more insight on that going into Chairman Powell on Thursday off the back of this print that we get very shortly.
We get insight from him, but the answer is the market speak, and his log convexity to a higher yield is where we are right now until proven otherwise. This is without the question for this week. The interview for those of you on radio and television worldwide are saying, forget the fancy talk common sense. Robert Dahl has decades of experience enjoying losses in the equity markets. He's at Crossmark Global Investments and is a needed conversation this morning. I want you to address the retirees, the institutions who are very 40 within the 60-40 split. You and I have never witnessed price declines in bonds like this. What is the to-do for the people that have been hammered in bonds?
As you know, if we don't get a nice rally in the bond market in the fourth quarter, it'll be the third year of losses for a 10-year Treasury. That has never happened before in history. So these people are sticker shock, shell shock, whatever the word.
Do they shift to equities?
Look, depends on your time horizon. If you have a long time horizon, you're 65 and you're retiring and you're good health, you should have more equities.
Is he always looking at me when he says that?
Well, you say do you shift to equities? Let's dig deeper into that. Do you realize these losses in the bond market? That's essentially the question Tom's asking here. Or do you sit on them?
Yeah, so I don't think you run for the hills in the bond market. I don't think we've seen the high end yield. Look, you've been debating why are yields up? They're up because the economy's a little better than expected. Inflation's nowhere close to 2 and is stubborn. And you got the supply-demand thing that rears its ugly head every once in a while. That's not an environment to see a 3-handle on a 10-year Treasury.
And right now we're wondering whether bank earnings are indicative of the broader economy or whether they're an outlier at a time where they're consolidating their business in a smaller number of high-income individuals. What's your view? How much of a tell has the early earnings report been?
That's a great point you're making. That is to say, bank earnings are probably a little less useful than usual, a little less useful for overall earnings. Look, my big surprise, you touched on it a second ago, is we haven't seen more consolidation in the banking industry. Post the debacle in April, my thought was we're going to see more bank combinations, and there've been precious few. There will be more to come. We need fewer banks.
At this point, though, given the fact that you're still seeing credit extended in the economy, do you think, to put these two ideas together with the bond market, that bond yields could go even higher on the long end, and that actually Megan Graper is correct, and the bond market is telling the Fed they need to do more on the front end, and not that they have to let the long end do the work?
I agree with you. Is the long end doing some of the Fed's work for them? Absolutely, but that's proving not to be enough. The Fed, I don't believe, is done. We said all along, either November or December. I think it's more likely December. But I still want to come to the point, more important than if the Fed raises rates again, is what about the impact from 0 to 5.25 in the last 18 months? We have not seen the full impact of that, Lisa, and I think that's still in front of us.
Let's talk about the banks and build on the way Tom started this conversation. Many of these banks are sitting on some securities, very long dated, bought when rates were very low. Now rates are higher. They're underwater.
By a lot
This
of
is
money.
what Bank of America, the CFO, is saying about them. Expect 0 losses from the held-to-maturity securities. I think we all understand that. What gets them out of the penalty box regarding this story? Because that stock has been bullied by this story all year.
Yeah, because they're big numbers and that it's legitimate. Some banks had a mark to market, and we know what happened back in April. Look, these things will mature, and they'll be at a zero loss at that point in time. But it's so big and it's so pervasive. I don't know how you can hide behind that and ignore it.
To your brilliant question, John, I'm sorry, you're 100% correct. The idea of held to maturity is BS in any textbook. You go to Lehigh University a million years ago, and young Dahl was going, that's baloney. Let's talk real baloney here. I want to talk about your CPA background and the fancy Wharton degree you've got, which is about accounting. The absolute shock of the gloom crew has been margin resiliency. That's an IMF term. Everybody's resilient. I was resilient over my Moroccan coffee. Are we resilient right now on our margins?
I don't think so.
You're going to see margins give way?
I think margins will come under some pressure. We're early in the reporting season, and they've held up reasonably well, but I don't see how companies can continue with these big price increases to match their cost increase. Look at the labor wage gains.
Okay, so are you in cash? I mean, this is the negative, this is the gloomy doll we're seeing today.
So we have more defensive securities. I want securities, stocks, that have high earnings predictability, high earnings persistence, good cash flow, and reasonable valuations. And that means you're away from the economy to some degree.
That's Apple, Microsoft, and Manchester United.
Okay. Manchester United.
What are the names, Bob?
Those would fit the bill.
Not Manchester United.
Yeah, definitely. I double up on Manchester United. The HMOs fit the bill. Some software companies fit that bill. It's what are the companies that you're pretty sure 6 months from now will deliver the earnings that are expected? I think a lot of companies will miss on earnings as the economy slows. Whether we get a recession or not, that's escaped almost everybody's vocabulary. I don't think it's out of the picture for next year.
Walmart, present PE, almost a 30 multiple. I don't get it.
How many times this year have we heard about a weaker consumer?
All
How
year?
many times? We've
All
said
year?
on this program, the economist that cried recession. Do you see it actually materializing this quarter? What are the sources of demand that's held up this economy that you can identify that are failing currently?
So the amount of cash on the balance sheets, the excess cash from the pandemic, that has definitely come down. We can debate whether it's almost over or still $500 billion or whatever, but it's not $3.5 trillion where it was. Two, we're starting to see fewer people work multiple jobs, and that's often a lead indicator into the job market. It's not a long list at this point. You have to look at the lead indicators for the employment cycle, and they are getting to the point now where 18, 24 months after the Fed starts raising rates, after the yield curve begins to invert, we just have no patience. Somebody went back and looked at these periods in the past between Fed raising rates, yield curve inverting, and the start of a recession. The dialogue is always, the recession, it's never coming. And then all of a sudden, there it is.
Jobless claims, coincidental indicator, saying it's not here, isn't it?
No, it's not here yet. That's correct.
Still in and around 200K. More jobless claims data a little bit later this week. Later this hour, about 20 minutes from now, we'll get US retail sales. Let's work through the price action, starting with the bond market. Yields are higher today across the curve. 2s out to 30s on a 10-year, up by 6 basis points at 476.68. On a 30-year, up by 7 to 492. On a 2-year, up by 2 to 5.12%. In the equity market on the S&P 500, pulling back after a monster day of gains on the S&P. We're negative here by 0.3%. Bramo, we've heard about it time and time again. The consumer slowdown is coming, it's coming, and apparently it really is this quarter.
Well, but here I think is the reset that we're trying to deal with. It's one thing to slow and to remove the engine of growth from the U.S. economy. It's another thing to slow from incredibly high rates that actually exceed last year, and we're normalizing back to something that still is elevated. And that, I think, is the subtle shift that you're seeing in the rhetoric from some of the bank CEOs so far.
What if we get a Bob Michael, Joyce Chang yield structure? If yields break out higher, based on what I just heard from...
Bob was calling for them to drop to 3. If they drop to 3 across the board, then that economy does not look good.
Yeah.
Let's put it that way. Bramo's asking the right question. We asked it of the banks. What are we going back to? Well, now VMH says it's the end of the post-pandemic luxury boom, or alludes to that. Bob, what are we going back to?
Yeah, that's a great question. And to underscore, the pandemic just took so many numbers and they made them weird and hard to interpret. But when you take rates from 0 to 5 1/4, there are consequences.
Yeah.
And we haven't seen too many of them yet. There are more coming.
LVMH, I think, was really misreported. They're actually doing pretty well, and their booze business didn't make it.
Down 14%.
Yeah. I think it was a lumpy quarter, and who might have said what LVMH should trade at, but the answer is it was about cognac.
You were away when we had this conversation.
Did I
The
miss
production
something?
team wanted to know.
I was having cognac.
We weren't well
Lemon,
positioned
yeah.
to answer this question. What is the trade down from Hennessy? Was the question that was asked. What
Well,
is the
I
trade down?
said it over my Hennessy at Lemonia Hotel. It was great. Red Keeper of the Amex cleared that.
I went to the Hennessy factory once.
Did you?
Yeah.
I went to the
tasting room.
No, I was too young to taste.
Oh.
Too young. My dad forced me into that trip. Yeah.
There was a force.
It was one of those trips.
It's good.
To the
Could be
vineyards of
worse.
Santa Emiliano.
Could be worse.
Yeah.
Horrible. Gosh.
Anyway, Bob, good to see you.
Deprived.
Bob Dole, thank you, sir.
Gonna go buy
Retail
some
sales
Manchester United.
later this hour. Good morning. This is Bloomberg Surveillance on TV and radio.
Welcome to Bloomberg Markets. China open.
Good morning, everyone, and welcome to the Pulse.
This is Bloomberg Technology.
And welcome to Balance of Power. This is Bloomberg.
Slice through the noise.
Forget the noise, ignore the noise.
Is this just going to be noise?
Just noise.
It's noise versus signal.
Now, more to the point.
What is the lesson or the observation?
Thursday, the Economic Club of New York hosts a conversation between Fed Chair Jay Powell and Bloomberg Wall Street Week's David Weston. Recession risk, inflation outlook, real estate amid high rates, and more. The live interview happens October 19th at 12 p.m. Eastern on Bloomberg. Context changes everything.
These banks are actually making a lot of money right now. They're making a lot more in net interest income than they did last year. Trading has been resilient. Investment banking is cyclically depressed but could bounce back. And so, a lot of these banks understand that you can't necessarily cut your way to glory.
That was the view from Erica Nigerian of UBS, going to the numbers we just got this morning from Bank of America and Goldman Sachs. Coming up tomorrow, Morgan Stanley, just to check in on the price action on the S&P 500, negative here by 0.3%, a little softer, yields higher by 5 or 6 basis points, 476. I should apologize to lovers of cognac. It's a distillery and not a factory. I know.
Oh, very good.
Oh, come on.
Just,
Did someone correct you? Someone corrected
just heard
you.
my mom's voice in my head. Some people really appreciate this
You've
stuff.
been raised right. I have not. Carry on.
Let's get to those two names in the pre-market, Goldman Sachs and Bank of America. Goldman out with numbers in the last couple of hours. Fixed sales and trading revenue, 3.38 billion. The estimate, 2.86. Third quarter revenue, 11.82. The estimate, 11.13. A series of small upside surprises from a couple of these banks, Tom. Bank of America up by 0.9%. Dreadful year for that stock. Goldman Sachs up by about 0.1% this morning.
It's interesting to see, and we're going to continue this story forward right now. Sri Natarajan joins us, owns the high ground on the major banks, and particularly Fortress Solomon, or at least Igloo Solomon. as it is. Let me just go to a general and open question right now. Your thoughts. I'm looking at different stories here saying it was a moldy quarter because of the write-downs. But your thoughts, Sri?
Not necessarily because of their pullback from consumer lending. It was a moldy quarter. This is, again, a transition quarter. We talked about the second quarter for Goldman Sachs being a kitchen sink quarter. They are doing the strategy pivot. They owned up to their mistake with the consumer banking foray and lopped in a lot of the losses and the hits from backing out of that in the second quarter. Some of it is reflected in the third quarter as well, but a lot of the losses are also just straight tied up to the real estate market and also the fact that the investment banking market remains sluggish. That's what's driving profits down 33%. Not necessarily some of the changes you're seeing there. They're significant from a strategy perspective, not necessarily a third quarter earnings perspective for Goldman Sachs.
What is Igloo Solomon, TK?
Smaller.
Oh, okay.
Smaller,
sound like
more
icy,
focused.
cold.
We have
All right,
Fortress.
please ask the question.
Fortress.
That's what you were going, right?
Fortress,
and it was melting.
Fortress is like big, and we're doing this, and we're doing this. It's what Jane Fraser wants to do. These guys want to, can we just get back to what we used to do in a smaller format?
Okay, good to know. Just wanted to clear that. That was wonderful.
Thank you.
Go on, please.
In my mind, a Fortress is also a lot more sturdy than an Igloo.
Okay. Okay, you're both digging, aren't you? Are you saying that things are sturdier at JP Morgan right now than Goldman Sachs?
I was just trying to explain what Tom Keene is saying.
Okay, we're all trying to. I'm making a career out of that.
Save us, John.
Okay, of the forces that have held this bank back, are things getting better or worse?
It's headed in a new direction. Not necessarily better or worse because they will have to execute. It is a story that they have to tell. They have a coherent story to tell now. You could argue that there was some flip-flopping over the last couple of years, but at least now it's clear. They say they have two important legs to the stool, the investment bank and the asset and wealth management unit. Now the key is to prove that they can deliver on both fronts to the expectations of investors and therefore drive the stock higher with higher multiples down the road.
What can we learn from the fact that Goldman Sachs beat on equity trading revenue at a time we saw JP Morgan and Citigroup not?
It's interesting. Look, over the last few years, the crown for equity trading champion on Wall Street has been moving around between Goldman Sachs, Morgan Stanley, JP Morgan. It was pre-pandemic, at least for a few years, unquestionably Morgan Stanley. Not so much post-pandemic. That comes down to some credit you have to give to Goldman traders who have gained serious market share across equities and FICC. Bank of America had a big jump in their equity trading business, but that was off a lower base. Goldman's jump from $2.6 billion to $2.9 billion in a quarter is pretty significant. If you can hit $3 billion a quarter in equities, that's a pretty sturdy business.
What's the difference between market share gains and riding a good market, right? A lot of people have raised questions about how robust capital markets are right now, given the fact that a lot of companies are icing a lot of their transactions. How much is this just market share gain from European banks, from smaller banks, from each other, rather than really reflective of a good environment?
Riding the gains is a factor of the overall wallet. An individual bank does not control that. But what they can control is the market share of the wallet that's available. And if you are gaining market share there, you're making progress. So even if the entire industry moves in a certain trend, if you're gaining within that, you will stand out, at least in the eyes of investors.
Sri, not everyone's a bank analyst. There's some people listening to this and hearing phrases like how-to-maturity securities and all of this stuff regarding Bank of America. The stock's in the penalty box. It's down close to 20% year to date. Can you explain what is going on? Those longer-dated securities are underwater. We can all get that far. What's it stopping this bank from being able to do that is punishing this stock so much?
The punishment in the stock simply goes to the fact that because they made that move, because they plowed their excess deposits a couple of years ago into some of these longer-dated securities, that with the moves in interest rates that we've seen have been underwater, has meant that their securities portfolio is down $131 billion. That doesn't affect their earnings, but it does affect their earnings potential. Right? If they had not had this money locked up there, because it's all in held for maturity right now, if they didn't have that money locked up there and earning 2.5%, it could well have been earning 4.5% and 5% in a 5% world.
Okay, this is brilliant, and I got like 8 questions, and we don't have time. What is the maturity right now? What is the average maturity of their under $1/10 of $1 trillion?
See, this is what I said about trying to decipher Tom Keene. It can be very tricky, and sometimes you just end up without an answer.
and they say things like, we will have no losses realized on these securities, that's kind of meaningless, isn't it? Isn't it just that your earnings potential relative to, say, JP Morgan is that much lower?
If you have a $400 billion securities portfolio, let's make up a number here, $500 billion securities portfolio, and you're earning 2.5% instead of an average of 4.5% on that, that's a 2 percentage point difference, and that's a $10 billion earnings difference. That adds up, and that matters. That's the reason the stock's down 20% this year, was down even more last year, and that's not a good look over a near two-year period.
When it comes to earnings potential, though, we're not talking about extending loans for mortgages. Thomas Show of KBW on earlier saying that they've gotten out of the game pretty much. How much is this just simply being able to capture the differential to current market yields on safe loans to high-income people versus the beta of what you've got to pay to depositors, which is basically nothing?
If they were down 5%, if they were down 8%, and we're talking about how do they get to being down 4% or being flat for the year, that's the latter is what we're talking about. The reason they're down 20%, way worse than every other big US bank out there, is largely down to this earnings potential because they are missing out, plain and simple.
One final question. Does David Solomon have the support of the board? Within your reporting, I give him very high marks for managing this, as you say, kitchen sink over to another quarter, but does he have the support of the board in this process?
No, we don't have to guess on that front because last month, Mike Mayo was able to extract a public nod of support from the Goldman Sachs board lead director saying he's not going anywhere.
What's Montag doing?
Montag's there digging into numbers and clearly backing David Solomon.
This has felt personal for, I would say, the whole year so far, hasn't it? It's felt personal within the bank. I don't hear complaints from investors like we've heard complaints from sources within the institution.
Undoubtedly, there was dissatisfaction in the ranks. You can't get away from that. Part of it is Goldman screwed up on one front. Goldman Sachs prides itself on excellence and, in fact, risk-taking, and they have very little tolerance for it. But now that you're through the other side, now that you've copped up to your mistake, now the story is, do you then move on, or does the rank and file still demand consequence?
They're trying to move on. Sri, thank you, sir. Sri Natarajan there of Bloomberg on Bank of America and on Goldman Sachs. Coming up in the next hour on Bloomberg Television, this is the lineup. Colin Martin of Schwab, Francis Donald of Manulife, Max Kettner, HSBC. It's been constructive most of this year. Let's see if that changes. Stephen Bigger of Argus Research on some of the financials as well, Tom. Stack lineup in the next hour on Bloomberg
Really
Television.
interested in Max Kettner. Really interested to see how he's adapted and adjusted.
That conversation, 9:30 Eastern Time. Coming up shortly on this program, U.S. retail sales. Big data point for this market. Let's see if consumption in America holds up. Equities down 0.2%. Yields higher 5 basis points. Your 10-year 4.75. Your data up next from New York. Good morning.
think this will probably go down in history as one of, if not the largest financial crime ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
The top names in business are on Bloomberg.
The market is starting to look over the Fed's moves into falling interest rates.
We actually think that core inflation is going to fall a little faster than the Fed expects, and that will allow them to start cutting rates by March of next year.
You get a price spiral when labor markets are tight. In manufacturing, labor markets are still very tight right now in the US.
Nobody covers business like Bloomberg. Context changes everything.
It is 70% of the American economy. Retail sales, it is reported nominally with inflation in it. Michael McKee is, of course, very expert at this. And he understands there's retail sales, and then there's X this, X that. All the X's are in there.
All the X's, and then they're out of them.
They're there, and there's
gas.
the Retail Sales Control Group providing wisdom on the pulse of consumer America. Michael McKee.
All my exes live in Texas, as they say. Well, retail sales come in much stronger than anticipated,
Actually,
up 0.7%. That's more than double what we had seen forecast. X autos up 0.6, and X autos and gas up 0.6. So the Retail Sales Control Group, which is kind of the proxy for what goes into GDP, is up 0.6 as well. And the forecast was for just a 1/10 gain. Very quickly note, New York Fed Services businesses report a lousy month, down 19.1 from 3.0. But it's the retail sales number that's going to catch everybody's attention today. And the interesting thing is how strong it is overall.
Let me do a market check.
Yeah,
Mike, dive into that data right now. Mike McKee's going to dive into pages of data right now. Greg Daco's going to be with us in a moment. But there's no other way to put it. There's a massive move, maybe a bigger move than Jobs Day that we saw a number of days ago. At least Equity South and the yield market launches, to say the least.
Megan Graper nailed it. If this is ongoing, stronger than expected economic data, the front end is what is moving. The idea that maybe the Fed needs to do more than they previously thought.
And the revisions just out moments ago. Michael McKee, let's come back to the markets in a moment. Mike, this is too important. You've got 60 days of lift.
Really strong lift because the August number revised up to 0.8 from 0.6. The August Retail Control Group revised up to 0.2 from 1/10. So a lot of strength in retail sales over the last 2 months. Now, in the month of September, what we're seeing is a gain in motor vehicle sales of 1%, which is a little bit interesting. Of course, they calculate this differently than the seasonally adjusted sales number for auto sales, where they count units. This is dollar value. Electronics were down 0.8. That's the big loser, along with clothing and accessories, which is kind of interesting because it's back to school time still, I guess. The big gain on the month is, I'm looking here, is, well, gasoline up only is up 0.9, but that's not the big gain on the big gain on the month. Non-store retailers and miscellaneous store retailers.
Okay, at least in the markets.
We're getting some Amazon, Walmart business done there. And food service and drinking places, Tom Keene keeps the economy going, up 0.9.
There you go. A boom economy. Lisa, the markets are really moving on.
What we're seeing in particular, just yields, again, going higher. Earlier on the 10-year yield, we were up by about 6 basis points. Now we're talking 8 basis points, a normal move over the past couple of weeks, considering how much they've been fluctuating. But what the implication here on the front end is that maybe the Fed hasn't done enough. And Mike, I'd love your thoughts as we parse through all of this. about a couple of misnomers, whether we're not actually seeing consumer price pushback on gasoline, that it's not actually crimping consumer demand as much as we previously thought, and that services spending still continuing to accelerate in a way that people didn't expect.
Well, you don't get a lot of services numbers in the retail sales report, really only the food services and drinking places. But that's kind of makes this even more surprising because you don't expect such a big increase for basically buying goods. Goods sales have been dropping somewhat compared to services. Now, the Fed, have they done enough? That's going to be an interesting discussion for them because is this really a continuation of we've got pandemic savings and we don't mind spending? Is this a sign of real strength in the economy that will be inflationary? Now, Tom mentioned at the top that you have to deflate these. And durable goods inflation was down 0.4 in the last month in CPI. So this is perhaps even stronger than it looks. So it is an interesting question for the Fed.
What will these do to market economists' GDP guesses for this fourth quarter?
Well, definitely going to raise GDP guesses and probably the CPI now number from Atlanta Fed because this is just much stronger consumer spending than anticipated, and it is the last month of the quarter, so hasn't been incorporated yet.
Stunning. Michael McKee, thank you so much. And again, the market's still really pricing this in. I look at just simply the red and the green blinking on the Bloomberg professional service, and it's still going, Lisa, here. We're at 834.31, and the screen is still adjusting.
And the move is bigger on the long end than the short end of the bond market. I am focused on the bond market in particular because that has been driving so much of the action, and I find that interesting considering person after person who says the front end is pinned. Is it, or are we looking at something
that's a really,
that is
really
an economy
good point.
that has that much more momentum than people thought?
2-year 5.15%. I'm looking at 2-cent spread, 4 points of disinversion here to 35 basis points, and the real yield just moments ago rounding out to a 2.40%. That really bears watching. Greg Dacko joins us now. Chief economist, EY, as he considers this across all the advantages of the EY system. The market was surprised. Were you?
Yes, I think the surprise was both in terms of the strength of the data in September, but also, as you mentioned, the upward revision for the month of August. We are seeing that consumers spent more than we initially thought over the course of the summer. The key question is twofold. One, do we see that momentum persist into the fourth quarter, or do we see a little bit of a pullback after the strong summer? Two, is it inflationary growth? To your question about whether the Fed will have to go further in terms of raising rates. So far, we haven't seen the type of inflationary dynamics that would be aligned with this strong growth. I think that would allow the Fed to not necessarily have to tighten further.
Are we in the thrall still of pandemic uncertainty? Do you have a belief to Q4? Can you model out Q1, Q2 of 2024? Or are you just making it up because this is a regional macroeconomics?
Well, I think it's very difficult, certainly, to forecast in the current environment. We have a set of unique features when it comes to the state of the labor market. We have a set of unique features when it comes to the state of the housing market. When it comes to the resilience of consumers, even, we've been surprised as to how resilient consumers are. But I would note a few things. First, we are seeing the drag from higher prices weighing on consumers' ability to spend as we move forward, especially for lower income families. We're seeing the weight of higher interest rates weighing on people's ability and desire to spend on credit. We're seeing tightening credit conditions, and we are seeing the effect of tighter financial conditions even today.
Okay, this is what people have been saying, Fed officials included in anecdotal conversations that they've been having with their constituents. They are hearing about this. So then why does the data keep coming in stronger than expected, read after read?
Well, again, this is still the third quarter, right? We had a strong third quarter. We know the spending in terms of consumer activity was very strong in the third quarter. We also know we're not seeing a retrenchment. That is one of the key elements of this economy. We're not seeing the business sector retrench, whether it's in terms of investment or hiring. That is still supportive of income, and in turn, that has allowed consumers to spend. The key question is whether this type of momentum, very strong momentum in the third quarter, can really persist into the fourth and into the first of next year.
You said something that was really important, that it's unclear whether this type of spending is inflationary.
Yes.
What is going to be the tell on that? Because it seems like if people are willing to pay higher prices and companies are passing them along, akin to Pepsi or Coke, and you've got shrinkflation and all that, well, why wouldn't this be inflationary? Why would inflation keep dropping?
Well, we've continued to see slower momentum when it comes to CPI prices, when it comes to PPI prices. Even the margins on the PPI front are pointing to less inflation on a sequential momentum basis. Even the jobs report last Friday that was very strong was non-inflationary. We were seeing the help from the supply side help alleviate some of the wage pressures and bring down wage growth. So that's less inflationary than would be concerning for the Fed. And we've seen actually inflation run ahead of the Fed's expectations. I wouldn't be surprised that we end up below the Fed's SEP projections in terms of inflation by year end.
Greg Dacko of EY with us. Will continue here. 5.15% in the 2-year. The 10-year yield really buttressed out right to recent highs, 4.80%. 30-year bond a dash to 5%, 4.94%. Michael McKee, a further observation.
Well, I think the auto sales is an interesting situation. We don't know how much of that is parts and repairs, but given the fact that we had a strike and maybe that got people to go buy cars while they thought they could. But at 9:15 this morning Eastern, we get the industrial production numbers, and we'll see about auto manufacturing, see if that is a sort of counterweight to the auto sales. If we're just selling what's on the lot and you're not going to have any more, then that is less of a problem for the Fed. But it's an interesting dynamic.
Yeah, but Mike, for 4 years, we've simply misguessed the resiliency of the consumer. What are the economists doing wrong?
It's an interesting question, because we always used to say before the pandemic, never stand between an American and a cash register. And that seems to be back in force. There was a shift in spending. Everybody went to goods during the pandemic, and then everybody did revenge travel and went to services. And now it seems to be broadening out so that people are just continuing to spend. But we thought that their money would run out, and it hasn't. It may be the additional wage gains that people have gotten, because people tend to spend what they make. And now if we've spent down the pandemic bonuses, it may be that people got raises and they feel like they can spend more.
Greg, just final word here. Does that mean that this world can live with 5% benchmark rates, and that we're looking at a new term structure that looks very different to what it did 3 years ago?
Well, we certainly have to adapt to a higher cost of capital. I think there's no doubt that we have to have both the business sector and the consumer sector adapt to this higher cost of capital. I would point to one thing that is very important in this higher cost of capital environment: how strong income is. If we start to see softening in income, which we have seen, that will weigh on people's ability to spend. But there's no doubt that we're not going back to the free money era. People still want to invest in this environment, but there's going to be more scrutiny as to how much investment goes into the economy and how much hiring goes in.
We're going to find out a quick question. Which matters most, the November meeting, November 1, or do we dash to December? Which meeting is of greater value to Greg Dacko?
I think both meetings are going to be quite interesting, because even if we don't get a rate hike at the upcoming November meeting, we'll get a discussion and more information coming out of Fed Chair Powell as to the intentions of the Fed going into the last meeting of the year. They will want to maintain that optionality of one more meeting, but I think they're increasingly taking comfort in the fact that the July rate hike may have been this last rate hike in this historic tightening cycle.
Interesting, Tom. We see the November meeting hasn't changed in terms of futures pricing, 9.8%, but now we're up to 31% for December.
Exactly. I think maybe this is the moment where we launch out to, I believe it's December 13th. Greg Dacko, thank you so much. With EY, Ernst & Young, of course. Futures at negative 18. I got to do a complete data check here. I'll do it equities, bonds, currencies, commodities. Negative 18 SPX futures. VIX comes out, not a stick, 17.95. Yields as least at 480 on the 10-year yield. We're on the 5% watch. 30-year bond, 4.94%. Brent, 89.77 as the president travels to Israel. The Standard & Poor's 500 down 0.4%.
If you are just joining us, really, we did get these retail sales number that came in completely above expectations, 0.7% month over month versus the expectation for 0.3%. But Tom, to me, it's also the upward revisions of the prior month, as Greg and both Mike and Greg were talking about. This idea, it is a trend. If you say one number can't make it, it is not just one number. It is a couple of consecutive, really stronger than expected reads.
And then we mentioned this earlier, the charge card delinquencies, the auto loan delinquencies for the younger cohort, to me, are spike conditions. They're shocking. And I'm going to go back to the analysis of two Americas, which goes back to what you and John were saying about who is the Bank of America client. And there could be other banks we can talk about. But to me, it is a struggling America. And you and I anecdotally feel that every day with all of our contacts. And then it's another America that just seems to be impervious to this. And as Neil Dutta says, it's rising incomes.
Patrick Harker said the anecdotes were the leading indicators for him at a time of great uncertainty heading into the inflationary spike. At this point, those anecdotal comments about that weakness, about the pain that a lot of people are feeling, is that a leading indicator? And have we just not felt it yet? I think that's one of the biggest tensions right now underpinning some of the commentary from the C-suite and frankly from investors right now pretty broadly.
And it says, to say the least, I guess, to November 1. I mean, tell me we have more Fed speak to explain all this to me.
Oh, we do, Tom.
Yes.
We have a lot
Where's
of Fed
John
speak.
to do what he does like
yeah,
Billy
he's going to
Joel?
do the rap. Oh, yeah, he's
it's
going
like
to
the
do We
Billy
Didn't
Joel
Start the
thing.
Fire.
Yeah.
You got a lot of response to that.
We
I think
didn't
people
start
like
the
that.
FOMC or something like that. Futures at negative 18 coming up. Good friend David Malpass. He is emeritus at the World Bank. Bramo's going to grill David Malpass here. Stay with us. From New York, this is Bloomberg's Surveillance.
Kept on blowing up on social media, then having a fight. It just kept on repeating itself. And at the same time, I got an opportunity to fight on ESPN, primetime TV. I said to myself, now imagine if I could do something amazing here. And then I ended up knocking the guy out in 30 seconds.
How quick was that?
Which then gets on SportsCenter top 10. So everything kind of went doom, 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 doom. We look at these things and hear the stories of other boxers and how they were taken advantage of. Right. And I said, well, this is an opportunity where I could become bigger and have my own power, my own voice. So they can't just, take all my money and say that, oh, I did all this for you, I got you here. This kind of gave me, into the driver's seat. And I didn't want to be another story where, these promoters, these managers, they, pretty much screw you. So I was like, I need to do something that could give me some power.
From the world of politics to the world of business. Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg. Context changes everything. Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
Calculated the cost of fragmentation just on the issue of trade. If we do it well, in other words, we strengthen security of supplies, but do it wisely, not willy-nilly throwing the baby with the bathwater, the cost would be minimal, 0.2% of GDP. If we are reckless, it can go all the way up to 7% of global GDP.
That was Kristalina Georgieva, IMF Managing Director with one Thomas Keane over in Marrakesh last week on a fantastic panel. Tom, I'm glad to say, is back with us, but it was really terrific to hear some of the angst really underpinning those discussions about debt interest costs and also about fragmentation more broadly and a lack of consensus around how to spend.
There was a financial side to this. Think Tobias Adrian and all that's going on in the bond market, and there were the usual words. Everything was, the bartenders were resilient. I mean, everybody's resilient right now. Here's the bottom line. There's two worlds out there, and the World Bank, Lisa, didn't get enough love because the Eichengreen paper at Jackson Hole said there's debt out there and EM's getting hammered, and that's a World Bank province as much as an IMF province.
And we have an incredible guest to talk about that coming up, but I do want to just tell you, talking about the have-nots, the haves are the ones that are banking at the Bank of America and Goldman Sachs, and that's what we're seeing right now, with Bank of America climbing out 1.4% gains, and we were talking earlier, Sonali Basak pointing to the incredibly high FICO scores of all of their creditors, and this really points to, are they really a reflection of America or not in terms of the pain, et cetera, being felt by the lower income quadrants? Goldman Sachs shares basically flat after beating on the core business of investment banking, but maybe not giving complete clarity going forward.
Real yield measurement here, 2.49% was the apex, as they say, about 10 trading sessions ago. We're up nicely on the 10-year real yield off a buoyant retail sales revision in all. I'm sorry, this is good news for America, even though the people in suit and ties will say it's just terrible.
Is the good news for America in terms of consumer spending coming on the heels of bad news for fiscal responsibility? And this is sort of one of the angsts underpinning some of the longer-term yields and how much they've risen. Joining us to help parse through exactly this question, David Malpass, former president of the World Bank, here with us in New York. David, to that question, how much are the buoyant retail sales, the resilience of the economy being financed by a increasingly fiscally irresponsible government, not just in the U.S., but globally?
Yeah, this is a huge factor because as they pump out money in terms of spending, not just the fiscal deficit, but all of the spending has to be added up, and it's material within the global economy. So they're an engine of demand that's sitting in the U.S. You know, we're talking about $2 trillion per year fiscal deficit. It used to be after a crisis like the COVID crisis, you would bring down the fiscal deficit, but this time it's gone up and plans to go up even more into the future. And so that has to be one explanation. That was my Wall Street Journal column a couple weeks ago, the idea that, that as you try to raise interest rates, it doesn't really get at this part of demand.
There's also a question about how much of some sort of united effort there can be by global developed markets, by governments that are not on the same page anymore in the same kind of way. How much is there sort of a go it alone, keep borrowing until you can't anymore feeling that wasn't there, say, 10 years ago?
Clearly, during COVID, there was an official policy of IMF, of ECB, of the U.S. To spend as much as possible, and a lot of the developing countries did that. They borrowed at floating rates. So now there is the need for adjustment. There was talk on your previous segment of whether 5% interest rates is sustainable. I find that I'm really skeptical of that, because if you think of the whole concept of finance, it's based on a return on investment. So if your riskless rate is 5%, what possible projects could you be doing that are going to return more than 5% over a period of time? It doesn't add up. So we have to get to a spot where there can be lower interest rates. I think that requires a lot more downward pressure on prices from production. So the whole question mark variable is how much energy production is going to be done in order to make up for all these deficits. You can't run the world economy on $85 a barrel oil with a hostage crisis going on. That's not going to be sustainable.
Yeah, this is fascinating. There's a David Malpass World Bank president who had a certain aura about him. And we've got sitting here the Bear Stearns David Malpass. We're talking here an immediacy and a change as you come out of the World Bank into the private sector. Again, there have been David Malpass fears for years. I don't see the politicians agreeing with you in Washington, Brussels, London, the rest of the capitals around the world. It's spend, 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 David. How do we get here?
Yeah, but the capitals are really resistant to making any changes in the growth of government. So in each of the cities you named, those cities are booming while their countries are not doing nearly as well. And that goes into the Federal Reserve policy, which I've also complained about. Look what we've done. We've gone from 0% interest rates now to 5%, and people are 5.5%, and people are saying, well, we might just keep them at 5%. It doesn't make any more sense.
Is it a policy for elites? Is that that what this
It's
is
a
all
policy
about?
for elites.
Yeah.
Think of how much money is made when you go to zero. Wall Street and the financial markets get really rich on 0% rates. Now, as you adjust, they've locked in their low rates, and everybody else is paying floating rates. So it doesn't make any more sense to talk about high interest rates for long than it was for low for long. Why did we go year after year with economists saying low for long is great for the world? It wasn't. It allocated capital to narrow
I'll take
segments.
your point on that, but this is critical now. You were discussing, as you have for a generation, David Malpass, the idea that this is a policy for elites. When we clear that, do we clear it with stability and controlled glide paths, or do you see jump conditions and instability here?
That's yet to be seen, and it depends then on where it settles out. So if oil prices stay at 85, I think that ends up forcing the Fed to keep the rates long. The wealthy are able to adjust to that, and they preserve their capital. If you could get oil prices down, it would be an effective response to Russia, to Iran, to the power that's growing outside the United States. So that becomes a critical issue, just like it was, I hate to think back in history, but in the Reagan administration in 80, 81, 82, the critical turning point was oil was plunging as markets resolved, and then you got a favorable recovery.
Right now, we seem to be further and further away from the reality that you're putting forth as the likelihood for some sort of easy resolution to what we're dealing with right now. It seems like oil prices are on the brink of actually a breakout higher as a result of the conflict in the Middle East. Just how vulnerable is the global economy if it does go to $100, $110, $120 a barrel?
It's a dangerous world, and one problem here is the U.S. won't be the one that feels the brunt of it. So you see the resilience. The fiscal deficit can keep going on. You know, they're planning to do it for another 10 years. And so the U.S. keeps going, draining capital from the rest of the world. And then you see these wars breaking out in one country after another. And China and Russia both know exactly how to put a wedge into that problem.
I got to slip this in. Joyce Chang of J.P. Morgan was lights out at the panel on the bond worries to EM. How fragile is EM debt and EM currency stability right now?
Really fragile, and so you see currencies in Nigeria and in Egypt and in other countries under pressure. Of course, Argentina having its currency dive, and so then it becomes really important. Do central banks realize that currency stability has to be their guidepost for recovery? That was the learning experience, I think, from the Asia crisis in 1998. The currencies were crashing, the countries were doing terribly, and then one by one, countries stabilized after that.
Eric Martin wants to know, our great IMF World Bank reporter, are you going to show up at the spring meetings, David?
I'm really focused on global benefits for people around the world, so I'll do whatever I can to help.
Good. That's it. Malpass, an invitation to the spring meetings. Thank you so much. The former president of the World Bank, and just wonderful for decades at Bear Stearns as well. Lisa, boy, was that a spirited conversation about the free lunch we're all getting from this fiscal stimulus.
The free lunch and the uneven ground in terms of the developed markets and the ability to keep borrowing and spending, and the inability for the rest of the world.
We'll have to see. It has been the news flow has been just absolutely extraordinary. Balance of power this evening, of course, as the president prepares to travel to Israel and all of the Eastern Mediterranean as well. This afternoon, 2:15 p.m. on Bloomberg Television and Radio, are David Weston in conversation with Brian Moynihan, the Bank of America. Good morning.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Venture capital. It's been volatile. From bank crisis anxiety to AI exuberance. Caroline Hyde and Ed Ludlow chat with the biggest names about the latest tech trends.
Is AI going to dominate the earnings narrative for this sector this week?
I think we're seeing opportunity and potential platform shift that we haven't seen in a long time.
If you're a company today and you're not embracing the changes that are taking place with AI, you're going to be behind.
How do you prove to the investor base that you haven't just tacked on AI to make yourself sexy?
It's very hard to differentiate if you're not experienced with AI.
The startup stories.
We think this is a watershed moment for technology.
Certain categories are more exciting than others. Right now, obviously, generative AI is a category that is very exciting to startup founders, customers, and venture capitalists as well.
So what we are seeing is a new area of opportunities for new founders to come and change the industries that matter.
And the real talk on realistic valuations.
Some of the best opportunities are sitting right in front of us.
How do you discern which ones are good on the marketplace right now?
I think founders have woken up to the reality that taking on more money at higher terms doesn't necessarily play to their benefit in the long run.
How do you actually invest?
Follow the VC money on Bloomberg Technology, the only daily business show dedicated to tech right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West, only on Bloomberg Television.
The younger generations are more, of course, pay more attention to sustainability, and so they are looking at brands that are greener. But you have to make sure you're authentic because they hate greenwashing. But what is very important to remember is that none of them, whether they're young or not, will ever sacrifice product quality and efficacy to sustainability, which is why, part of the big transformation of our R&I, where there's this €1 billion we spend every year, most of it is spent on transforming our formulas from petrochemicals to biosourced ingredients and green sciences, but without losing the efficacy.
From New York City this morning, good morning, good morning. The economic data looks good. Yields are up, stocks are down. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, The Open, with Jonathan Farrow.
Live from New York, coming up, retail sales in America coming in hot. Wall Street banks deliver an upside surprise as Federal Reserve officials line up for the last word. We begin with the big issue, the economist who cried recession.
There's a lot of concern about the consumer.
There's more headwinds now for the consumer.
Still headwinds to the consumer. How the consumer is faring the inflation pressures.
And a bifurcation of the high-end consumer versus the low-end consumer.
High interest rates are playing both on the consumer spend, consumer balance sheet.
Wages, we need to see the economy and inflation start to cool.
There's still ongoing battle with inflation. Recessionary fears do really come back.
We're already worried about a recession.
They're expecting the U.S. economy to go into a recession.
We're probably going to see slowdown.
We've seen a slowdown coming, and it hasn't manifested.
Whenever that deceleration in the economy does arrive.
It's just too soon to say whether we're truly out of the woods.
Let's start the show with two of the best. Manulife's Francis Donald, Colin Martin at Charles Schwab. Francis Donald, what are we getting so wrong about the resilience of this consumer?
Well, we're in a post-COVID economy, and clearly the traditional economic relationships that have served us so well in the past, they're either muted, they're lagged, or they're completely broken, and we're in the process of finding out which one of those it is. I'm still in the camp that traditional economic relationships still work. If you have less money, you're going to spend